took quite a hit. Cost and margin pressure is something that you were looking at, higher freight and insurance costs, as well as elevated gas prices, also making matters a little more difficult for this particular counter. And that's precisely the reason why you're going to be watching out for Reliance as well. And that's also one counter to really be watching out for. And we'll also get you an update on Sun Pharma next. But before we do that, India and New Zealand are set to sign a free trade agreement today, which is aimed at boosting bilateral trade, investments, as well as market access. And the pact is expected to double trade between the two countries over the next 5 years. Rishabh is joining in with all of those highlights.
Absolutely. You have a very important, another free trade agreement that is being signed between India and another country, another developed economy, New Zealand. At that, you have the Trade Minister, Todd McClay, in town for this signing. What this signing is supposed to do is double bilateral trade to $5 billion in the next 5 years or so. So it's not a massive free trade agreement, but one with a developed economy anyway. India will get about 100% duty-free access to the New Zealand market as part of this FTA. New Zealand will get tariff cuts on about 95% of exports to India. Dairy, key farm sectors have been kept out of this agreement, as has been the case with several free trade agreements that India has signed with developed economies. Farmers have been protected, dairy farmers, as well as fishermen. You have about $20 billion investment that have been baked into this FTA over the next 15 years that India will receive as investments. Pharma, textiles, engineering, and services are some of the key sectors that stand to benefit from this particular free trade agreement. Yesterday, you had both trade ministers in Agra to actually speak with leather exporters and how leather exports to New Zealand can be boosted. So a lot of sectors that do stand to benefit from this FTA. So that's what we have for this impending signing today here in New Delhi.
Absolutely, and thank you so much, Rishabh, for joining us with all of those highlights. So there you go, billions of dollars that you're looking at over 15 years, and that's the FTA that we're talking about. But speaking of billions of dollars and big numbers, let's also talk about Sun Pharma. That is acquiring New York-listed women's healthcare company Organon in what is likely to be one of the biggest India outbound deals in years as well. The deal, in fact, gives Sun Pharma global reach in more than 150 countries, along with stronger cash flow. Varsha is joining in with some of those highlights.
Well, this is the biggest deal that we are seeing when it comes to Sun Pharma, and this was in the picture a few weeks ago, but now company Sun Pharma and Organon enter into a definitive agreement. The Sun Pharma will buy Organon, and the transaction is structured as an all-cash acquisition. Well, Organon shareholders will receive almost 14 per share dollar, which is 24% premium to the last closing price of the company. The deal is expected to close by FY20, early 2027. Now, the deal values Organon at almost EV of $11.75 billion, and if you see, the company reported almost $6.2 billion when it comes to revenue and EBITDA of almost $1.9 billion, and the valuations considering of all these financials stand at around 6.2 times of trailing EV EBITDA. Now, talking about the company which Sun Pharma is targeting, of course, it's a global pharma a player, and the focus is on women health plus biosimilar branded drugs, has a portfolio of 70 plus products and presence in 140 plus countries. Why Sun Pharma is acquiring this company? Because it's a leading player in established branded generics, and this will provide Sun Pharma entry into biosimilars as a top 10 global player, and also will boost in women's health segment, and the innovative medicines will also be in focus, considering company with 27% of revenue share. Now, the combined entity will look like this will be among top 25 global pharma companies with the combined revenue of $12.4 billion. If you see, there will be presence in 150 countries. Stronger cash flow and EBITDA is expected, and EBITDA and revenue is expected to double. Now, talking about the Organon's 25 financials, $6.2 billion of revenue, $1.9 billion of EBITDA, but very high debt of almost $8.6 billion with almost $57.4 million of cash. Now, the main risk why investors should be worried about this deal, of course, the largest deal versus Sun Pharma's size and Organon's legacy debt burden, high debt when it comes to Organon's balance sheet, and there are some weak growth in some of the segments that the company is into. And lastly, Organon's CEO resigned in October 2025 due to some malpractices. So overall, yes, a fair valuation deal, but some of the key risks that investors should watch out.
No, absolutely, and thank you so much, Varsha. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India market open on the other side of a short break to help you start the trading day and truncated week right.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's that today?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open, and it's looking like we have a fresh start to the week. At least if you look at how Asian markets and now Indian markets are set to open.
Yeah, could it be because of the I don't know whether it's just the Axios news or somebody else reporting that Iran submitted a fresh proposal with no nuclear conditions? Because I couldn't think of any other reason why equity markets could have a buoyant start today. Sure, they could have been flat, but
I think there's fatigue. I think there's fatigue with the war. I don't care that much anymore, trade.
And both the sides, I think, are tired as well because the negotiations are just ongoing. There is no conclusion. No. And I think, I'm not sure if they know whether they want to sit on the table or not.
No, they don't. The latest from Trump is saying that I'm not sending Witkoff and Kushner to Islamabad to negotiate because it takes too long and we don't know who to talk to. They're confused. It can't just be the Axios report, I would say, because crude is still at 107. Yeah. Brent is at 107. So maybe there's fatigue coming in. But guys, over the weekend, these dramatic visuals of a shooter at the state dinner where US President Trump is once again. And this, remember the last time this happened was before an election, and then he came back with a landslide.
Yeah. And he sounded also very confident that I think I'm very happy this has happened. I mean, it was, things like this happen only with great men, is what he said.
I don't know if he said I'm happy it happened, but I think the point he was making is that Abraham Lincoln also was shot at. So, yeah.
One for the history books.
I suppose.
Another one.
That's every politician making the most of a crisis, but it's really scary that this is the kind of situation happening in America, and maybe time for them to look at their gun laws. But this is what is the global setup this morning. US markets closed mixed on Friday in trade in anticipation of those US-Iran talks, which then never happened. Indices closed, actually the Nasdaq powered by great results, so that was 1.5% up. The Dow was flat. Look at futures. Let's pull up futures right now for US trade, and that they're following pretty much the same pattern. But star of the show was Intel. Shares jumped 23% after a beat in Q1. The stock, in fact, posted its highest daily gain since the year 1987. That's how exciting the numbers were. Bond yields moved lower as the Senate is set to vote on new Fed Chair Warsh. There was a case against the Fed, which the Department of Justice there has dropped. So the 10-year is at 4.3. Oil has spiked as no signs of talks between US and Iran The Americans first went to negotiate, the Iranians didn't turn up, then the Iranians went and the Americans didn't turn up. Net Brent is at $107 a barrel. But Asian markets seem to have shrugged off some of those fears. If you look at how Asia is doing this morning, Nikkei about 1.5% up. In fact, Kospi is the one where things are really firing. And the India implied, I just want to pull up the India implied before we get to our first global conversation this morning. 218 points up on the implied on the Nifty. Even if this shaves off a bit before we get there, there's no doubt that we are set for a gap up opening this morning. William Lee, Chief Economist, Global Economic Advisor, joins us now. William, very good morning to you here from Mumbai. We were just talking about why we think Asian markets seem to have maybe moved on from the Iran-US crisis, or is that not the right way to look at it? What are you making of the kind of screens we're seeing this morning across Asia?
Well, financial markets in general are getting a barrage of news in terms of the extremely high profits that seem to be coming in. And so I think they're much more focused on the micro now than the macro. And while energy is still an issue, the negotiations in Iran have gotten to the point where it's not clear there's an Iranian government that is there to negotiate. The Iranian Guard and the other factions within the government seem to be battling each other. And so right now, I think President Trump has said, look, when you get your act together, you know who's going to be speaking for the Iranian government. Call me back, because I'm not going to be sending my vice president and negotiators over there on a one-way 16-hour flight just to sit there and talk to people who are not empowered to negotiate, which is what happened with the last round. But the markets themselves, I think, are saying, all right, when the Iranian government gets that together, we will find some kind of resolution. And it's unfortunate that India and the Asian markets are still at the focal point of the tensions and the shortages that are coming out because of the restriction in traffic there. But markets in general, I think, are now focusing on the micro aspects of company profits, and company profits are coming in extraordinarily strong.
Okay. William, good morning. Hiral on this side. Now, my question to you is, all this while we were thinking of how the geopolitics was actually fracturing a lot of economies, a lot of markets globally, right? Now, with the Strait of Hormuz conflict permanently changing the way energy could be looked at, the way supply chains will be looked at, how are you seeing the impact on nations which are somewhere dependent on oil that comes through the Strait of Hormuz, through supply chains which come through the Strait of Hormuz, say for example like India?
Oh, that's a great question. In fact, I think this is yet another wake-up call that we got that echoes the sort of things that we had during COVID, which reminded the world that you cannot depend on one supply chain, one supply line for something as vital as energy. And while there's short-term answers are not there, the clear answers in the medium and longer term is to find alternative sources and to become much more diversified in your energy basket of going away from petro and petroleum-based products to alternative energies. But again, that will be a while in the making. In the meantime, the queues that you find for natural gas and propane and cooking gas, those queues are going to get longer and price hikes will get higher, which I think incentivizes certainly the Indian economy to transfer itself away from those particular sources. But there is no easy answer. And unfortunately for the audience, I really feel for the pain of suffering through this place where you really have a hard time finding alternative supplies, especially for gas. As much as the United States is an exporter of energy and of gas, much of that export is going into the European markets and not to Asia and India.
Yeah. William, would you reckon that if the conflict were to linger on, at least at the Strait, if not actual bombing, it would mean that the AI trade, semiconductor trade, hosting countries and economies would benefit at the expense of some of the others, maybe like India as well, which might now be cheaper than what it was before, but suffers from the oil price issues?
Well, I think what you're asking is that there's facing every investor is this quandary of where to allocate capital. And the AI trade seems to be a medium and longer term place to place your capital. But when you have an energy situation like you have in Asia and India in particular, do you want to focus putting a capital into these alternative sources to try to accelerate that, or do you want to bet on the AI trade? Now, they're not exclusive. One can be complementary to the other, but I think that's going to be a very difficult decision. I personally would bet on the AI trade because that is something that would allow the Indian worker to become more productive. If the AI were implemented in a way that complements labor rather than replaces and substitutes for labor. And I would be trying to, in government policies, trying to encourage the development of AI technologies that will raise the income of workers so they can afford to pay the higher prices for energy in the short and medium term. So that, I think, is the kind of policy that I would be calling for if I were sitting in Asia, it's particularly in India, to incentivize more productivity that raises the wages of the average worker.
Interesting take, William, incentivize productivity when it comes to use of AI as well. But thank you so much for joining in. It's always a pleasure to speak to you. So that's with regards to global markets and the kind of impact that we could be looking at. But interestingly, if you're seeing what implied open is telling you, Neeraj, we're seeing a gap up. Sustainability is going to be the key because last week as well, markets have extended their losing streak, and this is the third consecutive session that we saw in terms of Friday. Now, this week, probably volumes will taper off towards the end of the week because it's a truncated week where Friday is a holiday. But Nifty has snapped its 2 weeks winning streak and slipped below the 24,000 mark. The markets actually declined, and this was primarily driven by rising crude oil prices amidst the Middle East tensions that we've been seeing. We've also seen sharp weakness in IT stocks, which weighed on the overall sentiment, where the Sensex fell nearly almost 980 points, and you have the Nifty, which declined close to 275 points in trade. On the sectoral front, you had all major indices which ended in the red, and we did witness broad-based weakness in broader markets as well. The sharpest decline did come in terms of the IT sector, which dropped almost 5.3%. In terms of other sectors, media, pharma, healthcare, these are the ones which actually lost in that range of 1 to 3%. If you talk about mid-cap 100, that declined by close to 1%, and the small cap index, which was down nearly 0.9%. Lastly, if you talk about FIs, they've remained net sellers for all the 5 trading sessions last week. However, the quantum of selling again has increased in the second half of the week. So the action by the FIs is also going to be interesting now.
It is very interesting now. In fact, frankly, the last week end led to the shift on the markets looking very much on the negative side, and therefore the bias kind of shifted there. But there were some green shoots, if you will. The mid caps and the small caps overall for the week actually witnessed only marginal declines, which you could argue is a positive, that people are now looking beyond the Nifty into pockets where there is earnings strength. So ignore the headline indices. Maybe the broader end of the spectrum is where the monies could go in. So that is one thing that people are keeping an eye out for. Though I must say, 10 consecutive months of FI selling now. April witnessing about over 56,000 crores worth of selling. I know you could have made this point at the 8th month, at the 9th month, and now in the month of April as well, that at some point of time this will stop. But for now, that money is exiting the Indian secondary markets and parking itself elsewhere. Maybe it requires the EM flows to come back for this to happen. Now, what's happening in the meantime is that every country is doing this, I'm sure, but India is making some moves onto pockets which matter the most. So you've heard a lot of other things. A small piece that went, it would have maybe just gone beneath, but somebody pointed it out to me, so I'm therefore bringing it out. That fact, it's a listed stock, but it's not about fact really, but it is about what the government has done. That the government has approved Fact's proposal to manufacture DAP fertilizers under the NBS scheme. The approval has been given at both the Kochi and the Udyog Mandal plants. This allows Fact officially to claim subsidies for the output. And Tamanna Hiral, this goes in with the point that Rhythm was making to us after the show as well on Friday, that one of the clear problem areas is fertilizers, and what the country does could become very, very important for allowing proposals from companies to allow them to bag the subsidy back at all plants possible, which means India stepping on the front foot to ensure that our supply chains can be as insulated as they can be, both from price and supply perspective. So it's something that was pointed out to me yesterday, so I thought it was important to highlight.
Yeah, I mean, complete import substitution that you're looking at for a sector which needs, I mean, a lot of focus from
Yeah,
here
I mean, that
on,
could
right?
be many years away, complete substitution, but at least there are some steps being
Some
taken.
steps, that's what we were talking about
I
in the
think
show as well.
alternative supply chains are maybe being put in place faster and more efficiently than was thought a few weeks ago by the Indian government, to give credit where it's due. And I think maybe that's why the markets are also reflecting that sentiment. So, those are some of the things that you're going to see. Other factors, let's talk about the markets, because Nifty is headed towards an important and truncated week. Two key factors will play out. One is expiry, Nifty expiry, watch out for that, and earnings. Now, about 12% of Nifty weightage have reported earnings post-market. Nifty direction will depend on stock reactions. This has happened over the weekend. Index is closed below 24,000 last week, and that becomes the first level on the upside to reclaim. Support zone at 23,700 to 23,800. Given the bearish sentiment we saw at the end of last week, immediate supports will be seen at 23,700, followed by 23,500 as a crucial support. In case of rebound, 24,000 can act as an immediate hurdle, followed by crucial resistance of 24,200. Sustaining above 24,200 could open the doors for 24,600. On the bank Nifty, resistance at 56,370, 56,540, 56,810, supports at 55,830, 55,660 and 55,390. I suppose the big question is that are you going to see a sell-on rise once again if you do have the gap up opening that the Nifty implied is indicating? Puneet joining in for the F&O setup, and what's the picture looking like there, Puneet?
Well, thank you for that. It's an important start to this week because we've seen a couple of key big names, Reliance and Pharma, now on the back of acquisition, which will be in focus, and continuing to monitor the levels for Nifty back again, potentially above the 24,000 mark. But as you rightly said, sell on rise could be a key strategy yet again, because we're in the middle of a zone essentially both for the Nifty as well as for the bank Nifty, now trading at 56,000 odd levels. And there's essentially no kind of support between 55,500 and 57,200. So that every time in the last 6 to 8 weeks, we've come in the 1,700 point range. We've been oscillating between those levels. So yet again today, a whole bunch of NBFC as well as banking earnings over the weekend could put some pressure on this index, but continue to monitor with any lack of support essentially at this point of time. In terms of cash market also, you saw the pressure closing below 24,000 on the Nifty, and largely led by foreign investors. Almost $1 billion selling number yet again after a really long time for foreign investors, and that was visible in the derivative market as well. Now, the index long has slipped below that 20 mark for the first time over the last 6 to 8 weeks. So despite this conflict, when we had that big dip in index longs, this for the first time we've broken the 20 to 22% mark. And the put call ratio also very interestingly has slipped below 1. So you've essentially seen a reduction of put contracts as well as some call contracts being added, but the former seems to be more possible at this point of time. The open interest distribution also is very interesting. Now we move back again about 400 to 500 points compared to last week, but 24,000, 24,200 and 24,400 continues to be levels where there has been active buildup of calls, but 24,200 continues to be the level with the maximum open interest. And what we've seen is reduction in put contracts both at 23,500 as well as the level going to 24,000 at this point of time. So in terms of stocks also, a lot of action seen over on Friday's session. You've seen a massive change in open interest for sale on the long build-up side. Shorts being built up for a bunch of stocks, including TCS, Indian Bank, as well as Patanjali Foods. And with rigor, over 100% change in open interest on Friday. And in terms of losers also, we've seen multiple key stocks in focus. Swiggy, Dalmia Bharat, JSW Cement are some of them. IT Pack continues to see covering of shorts in Oracle Finance, but that's just one of the linear cases. So important start to this week with the heavyweight. So the benchmark will continue to be in focus today on the back of news flows as well as results for the key big names today.
Results for the key big names is going to be important, and plus a lot of news coming in, whether it's Paytm, whether it's Sun. We're going to be covering all of that. First on my watch list is Axis Bank. Large bank that has reported over the weekend. Overall, a thumbs down. And here's why. PAT was flat at 7,071 crores, but about down 1%. Fell on account of loss in trading income. Trading income loss was at 606 crores versus 173 crores year on year. Net interest income was up about 5% at 14,457 crores. NIMs, net interest margins, were also a tad lower, 2 basis points lower at 3.62%. Fresh slippages fell to 4,709 crores. And upgrades and recoveries fell to 2,696 crores. They made a one-time additional provision of 2,001 crores, but they've said this is on a prudent basis and indicates no concern. Jefferies has maintained a buy and hiked the target price to 1,700 rupees. They've said Q4 is a slight miss, but core trends are improving. It stays among their top picks. Loan growth pickup is led by corporate disbursement uptick to lift retail growth despite more deposits have moderated slightly and asset quality continues to improve. They've raised estimates and they see valuations are attractive. So valuations are attractive. So even if you do see a downtick because of that slight pat miss, it may get brought into. IndusInd Bank is a thumbs up because it's showing strong recoveries. Net interest income was up 43% at 403.71 crores. Operating profits at 2,215 crores versus a loss of 473 crores. Net profit at 533 crores versus a loss of 2,236 crores. The net interest margin also improved slightly to 3.39% versus 3.35%. That's quarter on quarter. Gross NPAs have also improved quarter on quarter, and net NPAs stood at 1% versus 1.04%. Their provisions have also fallen, 1,484 crores versus 2,417 crores. So for a bank that was ailing, I would say last year this time, there seems to be the start of a turnaround. Here's what Jefferies is saying about it. They've maintained a buy and hiked the target price to 1,100 rupees from 1,000 rupees. They're saying Q4 shows it's turning around. Earnings ahead of estimates aided by lower credit costs and higher treasury gains. Leadership team and board resets are largely done. Quality of collaboration will now be key. They expect an uptick in growth and improvement in profitability, and valuations are attractive. They've stuck with their buy call. Macquarie has also maintained an underperform with a target price of 635. They've said the ROA has improved. It's a significant beat to in the fourth quarter estimates due to lower credit costs, but they need to see how deposit growth picks up. Lodha is the third one that I'm seeing on my watch list. It's a thumbs up on their numbers. Pre-sales stood at 20,500 crores, which was up 16%, but short of its guidance of 21,000 crores. That miss was largely on account of weak footfalls due to adverse geopolitical effects. They've achieved robust Q4 sales bookings as well, up 23%. Collections for the quarter have come in at 52 billion, up 18% year on year, and enhanced focus on free cash flow in the data center business. In terms of their core numbers, revenues were up 11%. Their EBITDA was up about 16%, and margins were up 107 basis points at 29.96%. Net profits were up 9.4%. So those are the first three that I'm looking at, and one thumbs down-ish, I would say, for Axis, and two thumbs up.
Yeah, I mean, for me, I think all our earnings, majority is a thumbs down, if I'm not mistaken. To start off with, IDFC First Bank. Now, it's a tepid quarter, and this is only on the back of one-offs. Now, if you talk about the net interest margins, they've improved on a sequential basis, and it's the elevated provisioning that has actually dented performance this time around. They've seen a treasury loss of around 160 odd crores, and this has been a problem for all the banks across. They've also realized a loss of around 270 crores in other income, along with a corresponding release in provisions, and a reported loss of around 650 crores owing to a deposit fraud in the Chandigarh branch. What they've said is that the net interest margins in FY27 will be similar to what we've seen in FY26, and the asset quality outlook is expected to be better. Profits are down 37% on a sequential basis. However, if you see in terms of the NII, that has seen a growth of around 15%. Your asset quality has also improved marginally on a gross as well as on a net basis. They've seen a tax refund of around 130 odd crores in this quarter versus a tax expense of 57 crores. And very lastly, if you see in terms of net interest margins, they've expanded by 17 basis points. The advances growth is around 20% on a year-on-year basis. Deposit growth, though, was flat, and the CASA mix has then moderated to almost 49.8%, which is a downtick of around 100 basis points on a sequential basis. The second one on my list is Zenza Technologies. That's also a thumbs down because the Q4 performance, if you have to look at that, it reflects a continued demand unevenness that we're seeing. What they've said is that the second half of FY27 growth will now hinge on the mega deal ramp up. The TMT drag has continued. The revenues have seen a decline of 1.9% on a constant currency basis if you have to see sequential, because the estimated decline was 1.8%, so that has been pretty much in line. BFSI has seen a mild growth, while your healthcare segment has declined around 6%. The deal TCV bookings, they came in at around $400 million, which is a good growth on a sequential basis. So your book to bill, that was at 2.5 times. Profits are also up 5.4%. The revenue is up around 1.5%. EBIT is down 7.5%, and the margins have also gone down to 14.67 versus a 16%. So the near-term margins could be impacted by the deal ramp-up that they're seeing, because that's why they're making their investments. There is growth visibility, so that's the positive on the back of the deals that they're clocking in. But the near-term margins will remain tight, and the AI-led shift is creating pricing pressures on the legacy services. So overall, growth is there, but in terms of it reflecting on the numbers is going to be delayed. So probably you could see some bit of a negative reaction coming in there. And very lastly, Mahindra Logistics, where they've seen healthy growth across segments, so it's a thumbs up. The outlook is also very strong, and the numbers have been driven by growth across the 3PL, freight forwarding and mobility, along with the express segments. Execution has improved for them, and the margins is what, the improved execution has driven margins and earnings. Revenues are up 14%, EBITDA a 45% growth there, so that clearly tells you what's happening on the operational side, and the margins have come in at 6.3 versus 5%, and they've reported a profit of 20 odd crores versus a loss of 6.8 crores. So again, a positive one coming in here. So 2 negatives and 1 thumbs up.
Yep. Let me start with earnings as well, in which case, right? And then there are a couple of newsmakers on my list. So maybe I'll start off with India Cements first, then move on to Paytm, and finally Sun Pharma. So India Cements, the first one on my list. The Q4 numbers, revenues were up about 2.6%, but the EBITDA showed a bump up. Now, yes, there were base effects, all of that into place, but even stripped off all of that, it was a good set of EBITDA numbers. EBITDA per ton was at, if you look at it on a quarter-on-quarter basis as well, 497 versus 305. Just goes in with all that commentary that we've been making about how cement prices have seen an uptick. And it's resulted in a fairly strong quarter for India Cements, and I would reckon for a lot or most of the cement companies as well. Profit after tax was about 55 crores. Yes, there was a one-time gain of 20 crores. Even strip that out, it was a very decent number. Domestic sales volumes were up 18%, capacity utilization were 84%, net realizations improved quarter on quarter. So all in all, a very decent set of numbers. I think it could have a rub-off effect on the cement pack at large. So keep an eye out for India Cements. Then the next one is Paytm. Now, the headline news is that RBI has ordered the cancellation of Paytm's payment bank license. To my mind, I don't think there is a significant impact on the company's revenue. His exposure to the payments back was anyways nil. So no direct hit per se. Equity exposure to Paytm Bank also has been written off. The current payment ecosystem in some sense for Paytm remains intact. And then I was looking at a couple of sales notes, and I've chosen the Haitong institutional equity sales note, and they said that the company can apply for a fresh FPL license for the wallets business and may restart operations upon receiving approval. But in terms of pure earnings impact, is there a hit at all per se on Paytm? Maybe not. So let's see. Maybe there is a sentimental impact, maybe there isn't, but you should know that in terms of fundamental earnings impact, there isn't much. So keep that in mind. And I'll keep a short one on Sun Pharma. In fact, a lot of stuff that I'm speaking right now is something that Hiral told me as well before the show. What the news is, and Varsha is going to talk about it in detail, so I'll keep it quick. But the news is that Sun Pharma is going to acquire US-listed Organon in about a $12 billion deal. Organon effectively focuses on women's health products, breast cancer, contraception, etc., etc. It's a large one for Sun Pharma. And typically, viewers, markets do not like very large, whether it's a leverage buyout or otherwise, but very large acquisitions done globally. I don't think too many companies have been successful in digesting very large acquisitions. Sure, smaller ones and tuck-in acquisitions have been done innumerable amount of times, and Indian companies too have come a long way really from the 2005 and 2008 acquisition phase where Suzlon, Tata Steel, Tata Motors, etc. did some large acquisitions, and some of them were successful, some were not. So this might be very different, but still it's a large acquisition. I think Hiral was pointing out that in some sense the stock has priced in some of these concerns as well, because the last 1 month, circa about 10% down, if you will.
Yeah.
So in some sense it's been priced in as well. But yeah, maybe we'll leave it to Varsha to give the entire minute details of this one.
No, absolutely. I mean, I wonder if the street will continue to look at it negatively, simply because, first of all, this is a company, Sun Pharma is a company with such a clean balance sheet in terms of debt. Now you are going to have to leverage to buy this giant Organon. Plus you're kind of diversifying from your core as well. So it depends, whether that sort of outlook and bravery is going to be rewarded or not, or punished by the street at the end of the day. So you have the Sun Pharma con call is on. All of those lines are flashing on your screen, but no one better to explain this than Varsha, who tracks pharma so closely. Varsha, why is this a big deal for Sun Pharma?
One is, this is the largest deal that the company has seen after Ranbaxy. Second is, they're going to take huge debt, -1. Third is, Organon itself has a huge debt of around $8 billion. So originally, if you see, this is a all-in cash deal, and Sun Pharma will take a huge debt to, support this transaction, and the transaction is expected to close by early 2027. Now, this talking about the valuation, the deal values Organon at EV of around $11.75 billion, and if you see, Organon reported almost $6.2 billion of revenue, and also $1.9 billion of EBITDA in FY25. That means the valuation stand at around 6.2 times of trailing EV EBITDA. About Organon, of course, it's a global pharma player, it focuses into women's health, biosimilars plus branded drugs, has a portfolio of around 70 plus products and presence in 140 plus countries. Talking about why Sun Pharma is actually acquiring this company, because it's a leading player in established branded generics, and this will give Sun Pharma entry into biosimilars as a top 10 global player. Sun Pharma is not majorly focused in biosimilar currently, and also this will also give boost in women's health segment, and the innovative medicines focused company Organon with 27% of revenue share. Now, talking about the combined entry position, how this will look like, of course, this will look like among top 25 global pharma companies with a combined revenue of around $12.4 billion, which is going to double. And, of course, presence in 150 countries, stronger cash flow and EBITDA and cash flow are expected to double post this transaction. Talking about Organon's revenue, standard around $6.2 billion with EBITDA of $1.9 billion. The problem lies in debt, almost $8.6 billion of debt, which is a huge one, and which market did not like it, and hence we have seen the correction in in Sun Pharma stock. Lastly, talking about the key risk that investor has to keep a watch out on. This is a large deal versus Sun size, and the Organon's legacy debt burden of around $8 billion. Plus, Organon has weak growth in some of the segments, and Organon CEO resigned in October 2025 due to some malpractices in sales. So overall, I would say a fair valuation transaction, but there are some key risks, and of course the debt portion is one of the key risks, and of course Sun Pharma has to take a very big debt to support this transaction.
But they become one of the biggest top 25 pharma companies in the world. It will be one of the biggest acquisitions, outbound acquisition from India. So it takes Sun Pharma into another league. And sometimes that big leap of faith costs you, I suppose. Here's what the management is saying in the con call. Now you're going to hear a lot from Sun Pharma today on NDTV Profit. There's a press conference. You will hear that. They will speak to us. So all of that is happening. But right now on the analyst call, here's what they're saying. They're saying the deal will lead to high growth for the company. They will be taking significant amount of debt to close this transaction. They will remain focused on paying the debt as early as possible. They hope to correct value depreciation seen due to Organon. Organon's biosimilar portfolio can be grown further. Debt is at 2.3 times of combined EBITDA. So they have actually corroborated a figure that has been going around. and the innovative segment will contribute 27% of revenue post this deal. So those are some of the highlights from the con call as it's going on right now. We'll take a very short break. Take a look at the implied before you get into that break. Are we still about 200 points up or set for that kind of an opening on the implied? Yes, there we are, 196. We're coming back with top ideas for the morning. We're reviewing all the big results, all of the action on the other side. I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit.
Back with India Market Open right here on NDTV Profit. In line with a few things that India is doing, did you know that the solar capacity has reached 150 gigawatts? The first gigawatt took about 11 years. The next 50 gigawatts, took 3 years. The last 50 gigawatts in India has taken just 14 months. That's the pace of execution. Yes, we know that some of the bigger countries, China, etc., are executing at a breakneck pace. But I think India's own pace, on solar at least, has really done well. Something to keep an eye out for. Kush Bora, founder of kushbora.com, Parag Thakkar, head fund manager, Fort Capital, our deadly duo with us. And I meant it in a good way, guys. Good morning. Thanks so much for joining in. And some bit of green on the screen this morning. So Kush, I'm starting with you. Last week didn't lead us to believe that there could be green, except for the performance of the mid caps and the small caps, which are resilient. But we are likely to start off about 200 points higher today, if the implied is to be believed. What would your trading stance be?
First of all, very good morning, guys. Yes, you're right. The 200-point gap up is definitely a positive surprise. However, if you start with the action last week, I don't think it was such a bad move. Yes, the magnitude seemed a little stretched on the downside. I would call this a stretched profit booking dip. We broke the 24,000 mark, but if you look at it technically, it's not as bad because the RSI still at a neutral zone of about 50. Stochastics, by the way, have cooled off from overheated territories. PCR at 0.78. All in all, suggesting that this is perhaps some profit booking dip and the base formation for the next leg of up move. However, immediate resistance is placed at 24,200, 24,300. Will wipe out any kind of positive risk reward ratio on a long trade if we open it around that level. And opening close to the 24,000 mark does still give you at least a 1:1 or a 1:5 kind of a risk reward ratio. The stop loss at the 23,800 mark. So not too perturbed by what happened in the last 3 sessions. I think this is base formation for the next leg of up rally, up move. But 24,000 or maybe just under is a good level to go long on, rather than 24,100, 150.
What about picks this morning, Kush?
Morning, Tamanna. Given how the markets are set up, I think I'm going with a mix of long and short. So being Monday, there's a weekly pick, by the way, and that is Ingersoll Rand. Very good moves, very healthy moves on this one. Volume, price action, all positive. Golden crossover of the 200 and the 20-day, 50 and the 200-day moving average. So of course, it's got a few things going for us and going for it, and hence it makes the cut on the long side as a weekly pick. Targets 4,400, 4,600, 3,800 is where you keep that stop loss. Aurobindo Pharma is a stock from the pharma pack that we've liked for a while. Target on this one 1,480, 1,385 is the stop loss. And as a hedge on the downside, Hero MotoCorp. I mean, the stock's just rebounded from oversold territories, but the structure remains weak. So on the downside, 49.35, 48.50 are your targets. 50.85 is where you keep that stop loss.
Okay, so interesting names, Kush. Good morning. You spoke about Aurobindo Pharma. How are you looking at a Sun Pharma in trade? Because clearly the stock is down nearly 10%. We're talking about an acquisition. From here on, are you seeing any strength in today's day of trade, or you think the weakness could continue?
Morning, Hiral. Sun Pharma structurally in the pack was actually one of the weaker ones. I think I mentioned it last week also that, even though the healthcare and the pharma pack in this, war driven last month has outperformed, you can't really paint everything with the same brush. Sun Pharma falls in that category where, the pressure persists. Now, the only saving grace from a technical standpoint is that the 1575 mark is a long-term support for this stock. But given the negative structure, lack of relative strength, and huge volumes on the downside don't really inspire comfort. So 1575 is the level that I'll watch for on the downside. If that is broken, I think about 1500 is also on the cards. So this is not something that you want to venture into in terms of a long trade. I'd be a little skeptical on this.
Okay. All right. Kush, you're missing all the action. You're not in studio today. I hope you're feeling FOMO. Because we're going to be unpacking so many stocks today with Parag Bhai. Parag Bhai, should we start with Axis?
Yeah, so as usual, my banking is sector is favorite. So I would say that Axis NII growth slightly disappointed.
Yeah.
Not exactly like ICICI Bank of the world. ICICI Bank QOQ NII growth was above 4%. Axis was 1.2%. So that is where Axis lacked. But I would say that Axis trades as a cheaper valuation also. And most importantly, asset quality improved significantly. So if you see the slippage, which was 4,700 crore for this quarter, it was expected to be above 5,000 crores. And gross NPA, net NPA, everything has improved significantly. And one good gesture which they have done is that they got that one-time tax reversal benefit of 2,100 crores, which they have used to provide as a standard provision.
I was actually going to ask you, because Axis every quarter seems to have provisioning baked in.
Which is very good. 15,300 crore is the provision buffer. So even if there is some accident due to this geopolitical event.
But people tend to look at it suspiciously as well. Ki aisi kya problem hai that you keep having a provision
so
every
basically,
time?
everybody has their own view. I have my view that a bank which creates an adequate provision buffer when the times are good or when there is one-time gain or like this, there is a good bank. So I would say that at current valuation, so and my calculation is that FY28 book value will be 850 rupees and EPS will be 115 rupees and subsidiary value is around 170. So it trades at a very reasonable valuation of 10-11 times on PE basis and 1.4 times on price to book for a 1.6% sustainable ROA bank, which is growing at 15%. And see, the loan book growth was 18.5%, right? And asset quality has improved. So I would say if market is disappointed with the NII number, which was slightly a disappointment, it might open 2% lower or something like that. Then if a person does not have from medium to long term perspective, it makes sense to buy.
Axis Bank, okay.
But of course, ICICI remains on the top.
Perfect. List. And we're going to talk about Reliance in just a moment. But just before we do that, since we are on the topic of Axis, some of the other financial names that came out with numbers, IDFC First Bank, Shriram Finance, M&M Financial Services. Did you look at the numbers of any of those?
I think M&M Finance was very impressive on the asset quality side.
Why did you like it?
Asset quality side, valuations, stock has fallen. Plus, they have also created some provisions because monsoon is expected to be bad. So, I think that is what had caught my eye.
Got it. I wonder every single point in a number of years when the predictions have been that the monsoon is going to be very good. it doesn't necessarily turn out to be that way. Can we get a positive surprise this time? And we can do with one for sure. Let's hope it happens that way.
Yeah, it should, because I mean, we've already seen a couple of showers in the last 2 days, if you think about it.
Really?
Yes, south of Bombay, midnight, it has rained for the last 2 days.
Only Hiral has been up in south of Bombay at midnight. The rest of us have been quietly tucked in.
Without showers.
No. We've seen more than a couple of showers in the last 5 days. Okay, let's talk about RIL. RIL reported a below estimate fourth quarter with pressure clearly visible on margins and profitability. While revenue rose 11%, operating performance weakened, EBITDA fell and margins dropped sharply to 15%, the lowest in 14 quarters. Somit Sarkar is joining us with all the highlights. Somit, what's the breakdown on RIL?
Well, clearly a weak set of numbers coming in from Reliance Industries in the fourth quarter. Now, this weakness was primarily driven by the oil and gas segments of the company. If you look at the O2C segment there, the EBITDA drop was the biggest that we have seen in the 7 quarters, and for oil and gas exploration, the EBITDA drop was the biggest that we had seen in 16 quarters. Now for the O2C segment, reported a muted numbers on the back of a higher freight costs, higher premiums, higher insurance premiums, increased LPG outlet, and also given the fact that the retail fuel segment of Reliance Industries, that was also impacted because of higher crude oil prices. When it comes to the oil and gas exploration segment, that was impacted on the back of lower production numbers and higher operating costs. When you look at the retail EBITDA, that was pretty much in line with what the street was expecting, but again, the growth was largely muted also because of higher base that we had seen in the previous quarter. Now, the net profit drop, that was much bigger compared to what the EBITDA number drop was, and this was because of lower other income. Other income dropped nearly 9.5% on a sequential basis for Reliance Industries. On the telecom segment, again, pretty much inline set of numbers, and overall growth was driven largely on the back of subscriber addition. If you look at the subscriber addition number, that was the strongest that we have seen in the last 3 quarters. The company added close to 9.1 million subscribers in the fourth quarter of FY26. ARPU was largely flat, and apart from that, overall growth was also muted. In fact, the growth was the slowest that we have seen in the last 12 quarters. To sum it up, it was the oil and gas divisions of Reliance Industries that led to a weak set of numbers in the fourth quarter.
Okay, thank you for that. Parag Thakkar, the RIL take and the kind of numbers that we've seen. Do you expect a negative stock reaction today, or do you think that some of this was anticipated?
Some of this was anticipated, right? So that is why stock has fallen also, and does not, even in the rally after 1st April with the market, it has not gone up. So some of this was already expected. So I expect a little bit of muted response to the results.
But Parag, O2C weakness in Q1 will persist on the SAD and refinery transfer price discount as well.
That's why I'm saying it will not shoot up. The stock will not shoot up, but I think...
I would suspect, Parag, that the street is saying that there will be a corrective move this morning.
Yeah, no, I'm saying that it can correct 2 to 3%. I don't know. But the point is that this result was known that it is going to be bad. O2C was likely to be... Of course, in the beginning when war started, everybody was focused on the diesel cracks were going up, and so everybody was building in that anticipation that O2C EBITDA will actually shoot up, which was untrue for sure, right? Because there are various things like crude oil prices also going up, your logistic costs go up, and you cannot place every production of your diesel at a right price, which is quoting, which we are seeing. So I would say that.
Does it become viable if there is another downtick today? Or you will wait?
I'll wait.
Okay. Yeah. On charts, Kush, RIL, and I don't know if you talked about Sun Pharma, but if you haven't, then Sun Pharma as well.
Yeah, no, we spoke about Sun Pharma. It's not looking good. I think about 1575, those levels. If they are held, it might consolidate. If not, then 1500 on the cards. I think Reliance, the structure continues to remain weak and subdued, and it is seeing selling pressure. Even at these levels, despite that correction from 1600 odd levels, it's still seeing some selling pressure. The volumes are still very high. But if you go on slightly higher time frame, and if you look at weekly charts, the 200 weekly average is a zone where it tends to consolidate. Even if you see late 2024, early 25, it spent about 20 weeks in the 200 weekly zone, and then it just shot up. So right now it's starting to test that level around 1300. If it does break 1300, then the structure will weaken further. But some consolidation around 1285, 1300 zone is likely. I don't see a very big upside on an immediate basis.
Okay. We spoke about Sun Pharma on the charts. Parag bhai, since this is the big deal everyone's talking about, the fact that now the management is coming and saying, Dilip Sangvi is coming and saying in that conference call that I will try and pay back the debt as early as possible. And there is a track record there.
Yeah.
Do you think that that's going to be enough to sort of underscore the concerns or avoid the concerns about that big debt figure?
Yeah, so basically my view is that it always takes a little bit of time to digest such a big acquisition, and you have to remember one thing, that the combined entity makes $4 billion EBITDA and net debt to EBITDA will be 2.3x. The only thing is that from last 3 years this entity Organon has not grown. So you will need to have that, to fire that engine. You will need to put some efforts, and of course Sun Pharma must have thought through it. And so net debt to EBITDA per se 2.3x is not overly concerning, but yes, integration of such large entity, actually it is exactly the size of Sun Pharma, $2 billion EBITDA and $6 billion revenue, so it is actually doubling your company. And this company also has a high margin, but the problem is that from last 3 years it has not grown, so something needs to be addressed. So I would not be in a hurry to take any decision.
So at what levels would you be comfortable to buy a Sun Pharma
First of all,
in case the stock reacts
we need to
negatively?
understand why this entity was not growing, and whether that problem is easy to resolve for Sun Pharma, and how much Sun Pharma is confident about doing it, and you have to read those things. If you get that confidence that this problem was temporary and will be resolved by Sun Pharma, then of course on any dip it's a good buying opportunity. Already stock has corrected.
So if basically Sun Pharma is able to operationalize the acquired company, probably that's when you'll see a turnaround that could be coming. So that's going to be...
But EPS accretive and EBITDA accretive from day one. So in some sense there is positives.
And stock has already fallen, so it might not see a significant correction. There will be many buyers who will be convinced.
On
Okay.
Let's see.
It's going to be interesting to see how it goes with Sun Pharma. But let's go across to Somit Sarkar, who's bringing you all the dealing room chatter this morning. Somit, what do you have on your plate?
Few stocks that dealers have highlighted that one should keep an eye out for in that trade. Firstly is Colgate and Navin Fluorine. There are buy flows on the large HNI desk on both these counters. Dealers are expecting a strong Q4 compared to what the street has been anticipating. For Varun Beverages, there were buy flows on DI desk. Delivery volumes were also on the higher side. And when it comes to Bliss GVS and Anupam Rasayan, a big M&A is in works here. Now, Anupam Rasayan is likely to acquire the promoter stake in Bliss GVS Pharma. So keep an eye out for both these counters. And on Friday, Chola Finance, Tube Investment and Bandhan Bank were in focus. There were buy flows on the institutional desk in the last 1 hour of trade in all three counters. And do remember, Sun Pharma was part of our segment on January 7th. Since then, the deal was in works, and we were the first to highlight this, that the big acquisition is in works. And 1 week later, we also mentioned about the size of this acquisition, that this acquisition could be as big as around $10 billion US, and that is what has been confirmed. Sun Pharma is acquiring Organon for around $11.75 billion US.
Khabar confirmed. Thanks a lot for that, Somit. Yes, indeed. Some very interesting names. It's interesting, Kush Bora, one of the things that Somit mentioned, Navin Fluorine, it had a fabulous set of numbers last quarter too, and we know the reaction that happened post that. But this whole chemical cohort, there is Bansali Engineering Polymers, and I'll talk about the numbers after you give the view. But this set of chemical names, is there any that looks good on the charts, including Navin Fluorine for that matter?
So, by the way, Bansali polymers is something that you mentioned, I think, about a week or so ago, and hence it was on my track, did fabulously well. So, like I say, credit where it's due. This is something that you put on my radar, when you mentioned it on the show. So, yes, I've been tracking it since then. Good moves. The Friday pullback was a healthy one. I think this is a buy on dip structure for sure. 200 moving average support at 95. So this is something that you can still consider. Still has a very favorable risk reward ratio. Targets on the way up about 107 and 115 from a near-term perspective. Navin Fluorine also, what's happened is that it's gone into a long phase of consolidation. So it needs a push beyond the 6,600 mark. Once you get that is when, you could see some sort of, traction building up. It's still some distance away, but given the structure and the positive moves in the last 2 weeks, I think you can continue to hold. Fresh buy should be initiated when you get a breakout above the 6,600 mark. Stop loss on this one, 6,200.
Okay. Now keep in mind, some of these chemical companies will be, some of them have started, the one or two that have come out thus far have actually delivered pretty strong numbers, you have to admit. Look at, for example, Bhansali Engineering Polymers that Kush was talking about as well. Revenues were down 1%, but EBITDA for BEPL was up 33%. Operating profit margins were up 480 basis points at 18.8 versus 14%, as a result of which the profit after tax was up 30% at 51.6 crores versus 39.5 crores. So actually a pretty strong set of numbers on the operational front for BEPL. And therefore, Parag bhai, the point is, there are only two players of ABS per se. I don't know if you track either of them, BEPL or Styrenix, but it seems that the tide has just turned a little bit for them. Both BEPL and Styrenix could have a positive reaction today. Do you track them?
So I don't track them, but I don't own them. But my view is that all the polymers have seen a phenomenal price hikes, like we saw in PVC also. But PVC has corrected also from that level. And I was holding Supreme and Astral, where in both cases I have book profits. But I would say that so this might be due to that, but revenue has not gone up and only EBITDA has gone up. That is a surprise to me. That I'll have to look into details.
Okay, so that's with regards to where Bhansali Engineering goes. Apart from this, a couple of other names that are in focus. You have a Paytm that we've already spoken about. Any view, Parag bhai, when it comes to Paytm? Because we know there is no direct impact when it comes to the financials of the company. But one, there could be a sentimental move, if possibly yes. And two, you already have 1,450 odd crores which are with the bank in terms of deposits, which they will have to give it back to the depositors. RBI is very confident that that's the liquidity which Paytm already has, so that will not be a concern. How are you looking at the stock?
So I think, as you rightly said, there is no big material impact on the company as such. Plus, what I have read is that they have got huge amount of cash in their balance sheet also. So I think if there is any negative reaction, the people who are interested in this company can lap it up. Of course, I don't own it, to put a disclaimer. I don't own it and I don't have any desire to own it also. But the people who track, the people who like this business, if there's a sentimental fall, it should be a good
there's a contrarian view also that now this is done. The RBI has given its strictures, the rap on the knuckles, everything is done with Paytm Payments Bank. It opens the path to whatever Paytm needs to do. They want a wallet's license, they want everything that they need.
Correct.
Now it opens up the path to that. The decks are cleared.
Yeah.
So that could be one way of looking at it as well.
Correct. That's why whatever I read about it, I think it is not a material negative. So if there is a fall due to sentiments, I think people who like this kind of businesses and this thing, they can.
Who are these people? So when you keep saying that, I feel that you're very clear. I'm not one of those people who like these kind of businesses. And if that's the case, why not?
I'm not saying. It is out of my syllabus. It is out of my circle of competence. I'll just simply put it that.
It's in the financial space.
Yeah, absolutely. That's okay now. So I'm taking so many banks and NBFCs and various other things. There's enough on my plate.
You don't need a payments player.
No, it doesn't excite me that much.
Okay. Kush, on charts, is there anything exciting that you're seeing in Paytm?
If it doesn't excite Parag bhai, there's very little for it to excite me as well. So let me just put it up that way. No, I'm just kidding. I'm just kidding on that. No, but very honestly, right now, the structure is actually not as exciting. I'll tell you why. A lot of stocks in the last month and a half have had a very good run. And I have been telling the viewers one thing very clearly, which is now you'll have to start, very clearly differentiating between the wheat and the chaff. A lot of stocks have had just a rebound from oversold territories and don't have that kind of strength or momentum. Paytm actually falls under that category because the volumes are nothing to write home about. Even before the dip that came about in the last 3 sessions, this one started seeing, dwindling of that momentum. 200-day moving average resistance at about 1175, technical resistance is at 1200. So from an immediate perspective, there are resistances, and the rally itself was on the back of very thin volumes. Does not inspire confidence. If I did have a position, I would actually for now look to exit. Maybe once it crosses 1200, we'll see if any new rally kind of builds into this. Right now, consolidative moves with a slight negative bias.
Consolidated moves with a slight negative bias. The fact that there was such a harsh stricture from RBI when talking about the management of that bank will maybe cast some shadow. Here's what Bernstein is saying. They've maintained and outperformed with a target price of 1,500 rupees. On RBI cancelling that payments bank license. They're saying no impact on current business numbers. Company had taken a write-off related to its investment, hence no one-offs expected either. Paytm has no role in the current management board. The harsh language in the RBI's letter, though, is concerning. For the super optimistic investor, this development could be seen as clearing the way for the company to apply for an NBFC or PPI license. This can pave way for certain payment products, example, wallets and credit products, to be offered by Paytm. Jefferies also has maintained its buy, saying it's low impact. The cancellation is low impact for Paytm and all services really continue. So that's the way maybe that you can look at it. But let me go across to Mahima. There's so much to cover this morning. Mahima, what else is on your watch list? Shriram Finance is one of the large companies that has also reported over the weekend.
Yes, Amana. So I'll start with Shriram Finance only. And overall, in terms of key highlight, I think the overall asset under management has seen a healthy growth for this counter with overall steady segmental growth. In terms of the overall net interest income, lower interest costs have boosted that element. Operational expenses have declined due to lower employee cost, and operating profits have risen due to better operational efficiency. Now, if we talk about the numbers, net profit saw a growth of 41%, NII saw a growth of 15.6%, AUM has seen a growth of around 15%, operating income saw a growth of 23%, and total income has risen by around 9.3%. The next one on the list is RBL Bank, where overall net profit has multiplied to that 230 crore mark versus that of 68 crore earlier. Net interest income saw a growth of around 7%. Overall, in terms of gross NPA, that came at 1.45% versus that of 1.88%. This is QOQ basis. Net NPA came at 0.4% versus that of 0.5% earlier. Provisions stood at 678 crore versus that of 785 crore. And overall operating profit saw a growth of around 11%. The company has also declared a dividend of rupee 1 per share. The last one on my list is M&M Financials. Good set of numbers coming in for this one. Margins have improved in terms of marginal improvement. Fee income saw a growth but was partially offset by higher credit costs. AUM growth was modest at 12% growth YOY, and portfolio diversification will drive growth and profitability going forward is what analysts believe. Overall net profit stood at 938 crore versus that of 457 odd crores, almost doubled, more than doubled for this one, and total income saw a growth of around 14%. So this is these are some of the names in the banking space that will be buzzing on the back of their numbers.
Okay, let's look at some of these on the charts as far as pre-open rates are concerned. I want to look at Shriram Finance to start with and look at what's happening there. Markets are going to be a little all over the place in the first couple of seconds. So let that continue. Shriram Finance about 1% up. Let's look at Axis. Then let's look at Sun, Paytm and RIL after that. All the newsmakers, Axis Bank about 2.5% up. Remember, this is first tick. Sun Pharma is 10% up. I think some of those words that have come from the management on how they're going to manage the debt or handle the debt has been soothing as far as the Sun Pharma is concerned. Let's meanwhile look at a Paytm 10% down. The rap on the knuckles from RBI, even though it's to an entity that Paytm has cut itself from, may be not going down too well. By itself, though, the winding down of Paytm Payments Bank was expected, but the language along with it may have soured the mood for Paytm. RIL, let's go to RIL next. That's right, the big boy, right? Numbers were underwhelming, 2.5% down on RIL this morning. So you're seeing all of those newsmakers maybe a little wobbly one way or the other. Kunal Ramya, founder of The Street, joins on the show now. Kunal, very good morning to you. Let's get your Nifty, Bank Nifty view first.
Very good morning. Thank you so much for having me on the show. So as far as Nifty is concerned, overall the sideways movement with the positive bias is likely to continue. The immediate support which we can see on the Nifty is at around 23,700, and the resistance can be placed at around 24,700 again. So that's 1,000 points range which one can definitely play for. The next is the Bank Nifty, overall stronger compared to Nifty. The strong support is placed at around 55,700. And the resistance is at around 57,500. So again, with the positive bias, both indices can be traded for the week.
Okay, Kunal, good morning. And in light of that, what are your stock recommendations for the day?
Good morning, Neeraj bhai. So the first counter is Hindustan Zinc, which is looking very good to me. With the bounce which we saw in the recent times, I think 570 can be the strong support and stop loss for the time being. The target can be 625. And the second is the Chennai Petro. After the post set of numbers which we saw on Friday, the price actually recovered quickly right from the levels of 1,000 levels. So I think with the stop loss of 990, one can go long on CPCL also, and the targets can be 11.5. Again, both the counters can be a decent trade for the entire week. So keep trailing the stop loss rather than booking the profit is an advice.
Okay. Watch out for. So those are some recommendations from Kunal Rambia. Now, pull up some other newsmakers today. So we should look at what Paytm is doing. You should look at what India Cement is doing. Maybe look at what BEPL is doing. Paytm, well, 10% down right now. Let's see if that changes. India Cement's 5% up. Don't know if that changes. BEPL 1.5% up. Styrenic should come up on your screen as well. There is M&M Finance. There is Shriram Finance. A lot of newsmaker, by the way, in the session today. Parag Thakkar has been constructive on cement. I want to go to him on what he made of India Cement's results, and does that indicate anything for what could happen to the cement pack at large? Parag bhai, very likely could start off higher, if not 5%, but slightly higher. What did you make of the numbers? What does it imply for the others?
So basically, first of all, the India Cement is in South, and South saw a very good demand in February and March. Plus, it is what you are seeing in UltraTech number is actually India Cement's number is UltraTech magic. After UltraTech has acquired, see the numbers how they have completely changed. And UltraTech is, I think, going to report on 27th, which is today. So I would say that yes. So I own UltraTech in my portfolios, UltraTech and Grasim both, and I love that company. So there are some.
Does this look good for the cement pack?
Oh, so this represents South.
Right.
This represents South. So Jan, Feb, March has been good in terms of volumes. Prices have started recovering from 1st April.
And you don't think it will be applicable for the other cement companies in the other regions?
So no, you cannot extrapolate India Cement's result for other.
Okay, fine. Okay. Kush Bora, very quickly on the charts, any of the cement names, including India Cements, if it starts off 2-3% higher?
Yeah, I mean, closer to 425, 430, there is resistance. So you should immediately, look to book partial profits. But yes, I do remain interested in UltraTech because it spent 5 sessions around the 200-day moving average. Any positive push, and you could see a breakout above the 12,250 and about 12,400 mark. So remain positive. But like I usually suggest, I don't recommend trading on the day of the results, but bias is positive on UltraTech as well.
Good advice, very good advice. Don't trade around the day of the results. So keep that at the back of your mind because the results could go either way. Does look like though that cement could have a good number, at least the southern companies could. Let's wait for the others. On to the big brokerage call for the day today. Cities maintained a sell on ICICI Lombard. Somit Johnson with more details on that note. Somit, interesting choice of a note. Why this one?
Quite a bearish note that has come in on ICICI Lombard from the City broking firm. They have maintained their sell with a target price of 1,735. They are seeing pressure. In fact, they have listed out 3 headwinds for the company. Firstly, they are seeing pressure on the retail health claim ratio once the new business starts to moderate going forward. That's the first one. Second one is on competition. They're saying that multiple new entrants with strong capital backing from private equity or parent company are expected to commence operations in the non-life insurance segment, and this could further amplify the competitive pressure, especially in the retail segment for ICICI Lombard. And the third one is they believe that the case for a premium hike in the motor insurance space continues to remain weak, especially given the fact that there is a chance of a lower commission that could happen, lower commission expense that could happen going forward. The brokerage also mentions that any reduced commission structure amid the possibility of multiple new entrants coming into the segment could hurt or could dent the profitability and growth of existing players like ICICI Lombard.
Okay, just a few other, buzzing stocks this morning, and let's just take a look at Axis once again. Clearly, the markets are not as excited as the pre-open rates showed, or at least the implied showed. Axis Bank now about 3% down. Banks are also in a very mid-range, and remember, while you might have seen some of the Asian markets doing well, Kospi will do well because of its semiconductor trade is at the forefront. Maybe for India, that $107 per barrel on Brent is still a bit worrying. Paytm is the top loser so far. You're not seeing too much action there. Star Health also seeing a bit of a knock, as is Reliance Infra and One Source Speciality. On the winning side this morning, you have Signature Global about 6% up. M&M Finance, another company that has results coming out which were decent, that's doing fine. Cohance Life we should look at. Cohance Life has had a management change which has been announced. Umang Vora is now going to be taking charge as a new additional director, chairman and group executive officer. So you're seeing some bounce there in Cohance Life as well. Just want to come to Kunal on some of the pharma stocks today. Clearly, pharma is going to be in focus once again, Kunal. So a view on Sun and any other pharma stocks that you like.
See, again, if you look at the Sun Pharma's behavior since 2024, this counter is more or less has been sideways consolidation. On the lower side, we have seen the support at 1600, and on the higher side, we have a resistance at around 1850, 1855 levels. So this is a zone to watch out for. Again, today, it's opening near to that support level itself, which is 1625. So I guess with that particular level as a stop loss, one can definitely think of buying on this counter. The upside can again be till 1800 to 1825 in the months to come, but it's a positional view.
What about a Cohance Life Sciences? Is that something that Kunal, you're tracking on the charts, and Kush, I'll get your view as well?
So yes, this counter has been significantly in decline, and in the discussion also. Look at the extreme volumes which happened between April and May, right near the levels of 300. I think that's a consolidation which the counter is making right now, though the higher top, higher bottom is missing. Any uptick above 425, 430 levels can be a good buying opportunity with the stop of 380. I think this can be a turnaround story if it manages to break a 425 on the upside.
Okay, Cohance Life, we have to look at, because the guy who's taking charge, Umang Vora, used to run Cipla. So Cohance is really, in that sense, buffered up on its management style. And is that something, because I know you've commented on this in the past, Parag Bhai, who's running the ship matters.
Absolutely. So basically, Cohance had one accident, actually. If you remember, after Advent bought it, that the CEO changes, many changes, I would say, and stock price has corrected, if I remember correctly, from 1100 minimum, I would say, to 380. So this is a positive change for the company, and I think so now it should recover in my view, because Mr. Umang Vora has a good credibility, and he has also run Cipla's US business. For Cohance also, US business will be very important. So I see synergies over there.
5% higher for Cohance as the pre-open rates have settled in, and that's actually a really good rate to look out. Watch out for Reliance, and I wonder if that stock is as low as the first two ticks were suggesting, about 1% lower. Axis is the big one, which had a very sharp reaction in the first 1 minute. I wonder if it's cooled off, 3% lower. So what Parag was saying, that the NI disappointment will show on Axis, maybe, just maybe. He believes that Axis could be one to accumulate at the current levels, but yeah, pick your horses, if you will. Well, from amongst other newsmakers today, there is an IEX. It's not a newsmaker today, but it was a newsmaker of last week and it cracked quite a bit. Now, Jefferies has come out with a note which says that their target price is 100. and they say market coupling threat remains. They see a 0% EPS compounded annual growth rate in FY26 to 29, despite not assuming commission price cut. Can you imagine? No EPS growth is what Jefferies is presuming, and they believe the regulation of decoupling will accelerate the market share loss for the company, and the estimates factor about 80% share in FY26-28, reducing to 60% by FY28 expected. Kush Bohra, is there a trade in IEX on the short side, or is the juice out now?
No, there is still a trade on IEX on the downside. The consolidation attempt was broken on the back of heavy volumes. The 20 and the 50-day moving average were given up, or at least are being given up on open itself. I won't be surprised to see the stock slide to about 115, the recent swing low, and about 108. Of course, it may not be an immediate sharp downtake. It will be a gradual slide towards those levels. But given how the recovery attempts have fizzled and the selling pressure, just continues to build on, I think a short trade on IEX is not a bad idea, especially as a hedge in a market like this. 128 is where you keep your stop loss.
Okay, just want to look at IndusInd before we go into the opening session. Just about 2 minutes to go into the opening session, and we'll go through all our newsmakers this morning. IndusInd also a good quarter. It's being even brokerages today pretty positive on it, seeing the kind of turnaround. Are you feeling more confident about IndusInd Bank, Parag Thakkar?
Yeah, I think the worst seems to be behind, and Mr. Rajiv Anand has also again here management credibility comes in,
100%.
and so from
but this is also he's had chance and time to also start showing.
So
what
from
he's
next
doing.
year, I think things will normalize. From
By next financial year.
I think
Q1.
from FY28, the bank will grow in line with the system. Whatever asset quality issues will be behind. So then it will be ready for a takeoff.
So wouldn't this be the right time to come in?
Look
for an
at it,
investment?
It's a good turnaround play you can play.
Okay, so IndusInd.
But disclaimer again, I don't own it.
No, that's okay.
No, I'm just
I
saying.
think you have to give a disclaimer if you own it.
Yeah.
Okay, one way or the other. Kush, IndusInd?
IndusInd, nothing to write home about. Avoid. I am more excited about Axis. This is actually a good opportunity to buy. While everyone's focused on ICICI and HDFC, Axis is quietly doing its own thing from a medium-term perspective. Yes, it will open lower today, but this is a good opportunity to accumulate. 1400 is a target as well as a resistance. Once that is taken out, I think it will zoom into a different trajectory. So Axis Bank is something that you should keep on your radar. Buy on dip setup, an interesting one at that.
Okay, Axis on the radar. Kunal, top pick after the pre-open session.
I'll stick with Chennai Petro itself. I think overall trend is positive, and the second is Hindustan Zinc, which we mentioned in the beginning itself, 3% up. I think these two are the counters to watch out for the day, even for the week.
Wow, even for the day, even for the week. Kush Bohra, can I push you for one top call? 10 seconds.
Lead pick of Ingersoll Rand, 4400, 4600 targets, 3800 stop loss.
So, no. What is the target? 4400 you said.
4400 and 4600.
Okay. Ingersoll Rand, Chennai Petro, Zinc. Those are the ideas from our experts. Parag Thakkar believes there's a good time to buy Axis Bank. Here's how the markets are starting this Monday morning. Let's see what's the kind of up move we have. 54 points. By the way, I spoke to Soon, 100 now. So not a bad start really. Somewhere between the 250. Now about 130 odd points. So actually, not a bad start at all, you argue. Banks about 0.4%. Mid-cap starting off well. The market breadth looking positive. This is despite Brent prices at 107. Is this risk assets telling you that now we seem to be nearing the end of the conflict? Let's wait and watch. Small caps doing very well. Let's get the heat map up on the screen on this very green day on open. Actually, even on the index, there's a lot of green, very little red. I'll start with the green because Sun Pharma is getting a thumbs up despite the very large nature of the acquisition. I reckon because it's EPS accretive and because the stock is already corrected 10% in the last 1 month, that stock is starting off 2.5% higher. Kotak, about a 1.4% gain. Eternal, 1.5%. Adani Ports, about 1.4%. Not that all steel is doing well, but JSW Steel is certainly in the green. There is some bit of green for Infi and Wipro as well. This is effectively a market rally carrying some boats on with it. It is not
too much of a stock-specific reason, specific up move, except for Sun Pharma, which is now charting 3%. What is not doing well, by the way? Axis Bank 4% lower, Shriram Finance another 2.5, and good for the market that Reliance is not cracking, just about 0.26%. So you would argue that yes, while Sun Pharma is the big news maker and good to see it up 3%, Axis with this 4.5% downtick takes the cake of being the top mover on open, Tamanna.
Yep, and I suppose if Axis and Shriram Finance both that have reported were doing okay, you'd probably see more green on the screen. Pull up Nifty contributors, really. Let's get that calculation up very quickly on Nifty contributors. I think Shriram Finance numbers looked okay, but a bit tapped out, maybe in terms of valuations. There you have it, between Axis and Shriram Finance and Reliance, the main drag coming in there. HDFC Bank performing well in terms of pulling up the index, as is Sun Pharma. But let's look at the broader markets this Monday morning and look at what the small cap and the mid cap index are doing. Mid cap index 0.75% up, showing more strength than the Nifty, about 0.5% up. On the small cap, 250 advanced decline ratios looking robust. 929 advances to 348 declines. The India VIX also on the lower side, which is good, about 3% down on the volatility index, or the fear gauge as it's called. Let's pull up the sectoral heat map for you this morning. Pharma might be seeing a bit of a pop thanks to Sun Pharma. There it is right on top, 1.5% up. A Nifty realty index also looking good, as is healthcare. Financial services and banks are flat. So actually it's not a very negative market at all this morning, to be honest. Looking pretty decent, all things considered. Let's get to individual stocks and see what's happening there. I want to start with Paytm, and the Paytm license, the Paytm Payments Bank license was cancelled. It has nothing to do with the listed entity right now. We know that. This problem has already been accounted for. The management is different. They've provisioned for it. So ideally, it should not be seeing such a negative reaction. The reason it is because of the language of what the Reserve Bank of India has written in its order to cancel this license, which is where they've talked about how the management was not very competent in the way it behaved, and that shadow perhaps on the Paytm stock today. A lot of results, some of it you must have seen in the charts earlier, but let me just recap everything for you because these are the big ones. Axis has been a disappointment for the street. It's showing in the stock price. Shriram Finance as well. India Cements is a big positive, was on our watch list, about 7% up right now. Let's look at Lodha. Let's look at IndusInd amongst others. Lodha is about 1.5% up. IndusInd is a bit of a turnaround story, also 5% up. RBL Bank, not so positive. M&M Finance is the other one I want to see you. Solid set of numbers on M&M Finance. That's one of the big winners this morning, 10.5% up. MRPL, a negative on the numbers. Sun Pharma, let's look at Sun Pharma once again because that's the shining star, isn't it? About 5% up on that acquisition. So the street actually rewarding that leap of faith, Neeraj, which we've seen from Sun Pharma.
Yeah, most certainly, Tamanna. That certainly looks to be the case. By the way, I was just trying to see if there are other individual movers which are doing very well. On a 0.5% up move for the Nifty. Nifty IT is up 1%. Zensa Tech didn't have the best of numbers, should pull that stock up and see what that is doing in trade. Well, about 1.43% higher. Interestingly, while I thought Paytm will not have a major impact, it is down about 6%. MRPL numbers were terrible. Relative to Chennai Petro looked very weak, and MRPL is down in trade. Tanla platform should come up on your screen. Just want to mark that one as well. About 12.67% higher. Really strong show. So the financials are actually taking it on the chin. Paytm, Axis Bank, Shriram Finance, etc. On the other side, flip side, India Cements is up 8%. Big mover. The winner though, as I think Tamanna stated, is Cohance Life, up about 17%. Out of the blue, Kunal Rambia, Cohance Life, you may not be tracking it, but can you pull up the charts and tell us if this is topping out? Is it breaking out? Would you trade this one? Or is the juice already out after a 16% up move?
In fact, Neeraj bhai, we just discussed in the beginning itself, right? That
I know, but it is now up 16%.
415. Yeah, absolutely. So we see again, today's move is definitely massive, but at the same time, one should not miss out on such kind of rallies. Though initially the stop loss might look a little away, but it's absolutely to buy at this level. Buy even on decline till 405. Good stop loss can be today's low, which is 385. And I think this is the beginning of a new rally. So yes, one should definitely participate in this.
The first cut on Cohan's life comes up. They've announced the appointment of Umang Vohra as chairman and group CEO. Vohra is the former CEO, CFO of Cipla, joining the organization to spearhead its next phase of transformation. Varsha has all the details. Varsha.
Well, Neeraj, I would say a very positive and big news for Cohance Life Sciences, and this is a shocking news. I mean, Umang Vohra joining Cohance Life Sciences. Well, why this is an important one and why you're seeing such a huge surge in stock prices. One is why Umang Vohra is a strategic fit for Cohance. One is he has a proven ability, to grow globally while protecting margins. What he has done with Cipla, and also talking about the customer-centric CDMO segment, we've seen a clear shift from volume manufacturing to value partnerships in Cipla, and also this appointment supports Cohance's transition to professional governance-led growth, which Cohance has been doing, and also the track record enhances investors' confidence and strategic clarity. Now, why I'm saying this, what Umang Vohra has done with Cipla, how he has transformed Cipla from 2016 to 26 is one is he has transformed this company from volume to value growth, pivoted away from commodity generics to complex and specialty products, built scale and leadership in respiratory and chronic therapies, and focused on high barrier differentiated products. And the key outcome of all these initiatives taken by Umang in Cipla was Cipla became the world's largest inhaler seller by volume, ranked among the top players in US inhalation generics, and established global leadership in respiratory care at industrial scale. So, a very big and positive news on Cohance Life Sciences, and I think this may be the start of the rally that we are seeing.
Okay, a start of a rally that could be coming in on a Cohance. Thank you, Varsha, so much for joining in and giving us these details as well. But very quickly, let me take a question with Kush on Cohance. After this strong up move today, Kush, I beg your pardon, would you still be a buyer at current levels?
Yeah, right? You owe me a coffee now.
Absolutely.
For that slip up. Of course, but I have to grant it to you. Kunal is also with us. So yeah, that's a very understandable one. No, but I agree with what Kunal was saying a while ago. The risk-reward ratio from a positional standpoint on Cohance is massively positive. So even if you take a stop loss, around the 350, 375 mark, I think the nearest resistance on this one comes in at about 475. And then 525. So like I said, from a positional standpoint, the news flow, standpoint, also if you see the accumulation over the last 3 to 4 weeks has been very positive. While from a near-term perspective, it's overheated and some might feel a little discomfort buying it at, such stretched, prices, having seen about 350 or just a month or so ago. I think it's a buy on dip share, risk-reward ratio massively positive. You have to buy and hold this for about 6 to 12 months or a little longer. So more of a positional bet.
Okay, Cohance is a positional bet. Look at what excitement the street has if there is a solid management coming in. It's a bit of a coup for Cohance Life to bag Umang Vohra, as Varsha so ably explained, and that's why you're seeing that stock zooming. Okay, thank you so much, Kunal and Kush, for joining us this morning. Rahul Arora, CEO of Ashika Institutional Equities, is now joining us in the conversation. Rahul, very good morning to you. A bulk of results pretty much done. What was the good, the bad, and the ugly for you?
Good morning, Tamanna. Thank you for having me on the show. I think it's been all right. I don't think there's been too many shockers as such. You would highlight a few IT companies here or there, or something like a Havells, or but I don't think it's been totally out of whack. I think the more sort of keenly watched results would probably be Q1. Because even though the war started in the fourth quarter and in March, I think most companies in India were stocked and inventory was okay. So I think the issue is going to come more in Q1 and what kind of guidance, the market is likely to take away from companies. But I think valuations are starting to look a little reasonable. I think they could still potentially get a little more reasonable. How much, I don't know, but I think in most pockets of the market, they're starting to look fairly attractive. Now, does that mean that if you buy the stocks today, you will guaranteed make money and you won't see, the market going down? I'm not hinting at that. But what I'm trying to say is the earnings season, by and large, has been in line. Even if you see the IT companies that have missed or got punished, they haven't missed by much. I just think that the market expectation was too much going into the results. But all things said and done, I think we are probably looking at a fiscal year, Tamanna, where earnings will probably grow 10 to 12% on the aggregate index level. And keeping that in mind, I think that's the kind of return one should be expecting from the equity markets.
In terms of strong spaces, or in the light of what we're seeing in the West Asia war, that stalemate there, would you say banking tops the list? Because the last time I think we spoke, Rahul, you talked about how banking financials seem to be the safe havens and the only growth areas that you're watching. Are you sticking to that, or are you seeing more potential now?
No, by some distance, Tamanna. Hold that view. I think if you look at the banking results that have come out, the advances in deposit growth for most of the well-held institutional banks in India have been between that range of 14 to 20%. Some NBFCs have reported north of 20%. You've seen NIM expansion in most. There is an odd here or there, bank or NBFC that there has seen a minor compression in NIMs, but NIMs sequentially have expanded. Asset quality for most banks is under check. And I think if you look at the valuations, Tamanna, of most of the private sector and the leading public sector banks, which is SBI, ICICI, Axis, HDFC, Kotak, they're all trading at between 1.8 to 2.2, 2.3 times 1 year forward price to book. Now, in an environment where credit growth is at 14, 15%, and asset quality under control, NIMs bottomed out, cost to income ratio improving, I don't see any concern as to why these banks can't be bought. As we discussed last time, Tamanna, the absolute super cycle that we have seen in the banks, we had valuations of 4.5 times price to book. We're nowhere close to that. SBI has seen a good re-rating, but as you rightly said, I think the banking results have been good. Not just the large caps. I think even certain mid-cap ones like RBL Bank, where the ROAs and ROEs are particularly low, but I think with the way they manage the provisioning, the results by and large in BFSI so far, with the exception of insurance, I think insurance has been a bit soft. You've seen that in the case of SBI Life. I think even in the case of HDFC Life, which is the valuation benchmark for the industry, you saw the APE growth just at about 8-9%, if I remember correctly. So insurance has been a bit soft, but I think if you remove the insurance aspect, the rest of the BFSI has been good. And I think the earnings growth in this. So the reason I said 10 to 12% earnings growth, Tamanna, is because I think the banking sector will grow earnings by about 13 to 15% over the next couple of years. So they will make up for the shortfall in sectors like FMCG, IT, and the others.
Rahul, good morning. Hiral this side. So you're saying that, okay, if we're talking about IT and BFSI, in fact, last week we had an interesting conversation where Rhythm Desai was of the opinion that wherever there is maximum pessimism, that's where there will be value going ahead. And IT and BFSI does fit in his list, in that category as well. But if you have to look at any other sectors where you are looking at growth coming in, let's say capital goods, let's talk about power, and let's talk about defense. If you break this up, there is a lot of optimism across these segments, because defense, you're talking about a fat order book where execution becomes a key. Power, again, it's because of the way the weather forecast is looking at, and you are expecting power demand to balloon as well. If you have to look at these sectors, how would they be on your buyer's radar?
Morning, Hiral. So wouldn't want to contrast Rhythm, who's a senior colleague of mine in the industry, but I think sometimes what happens, Hiral, is that value traps need to be clearly defined. And I think, if you look at the IT services sector, for example, and I'll get to your question, it's been trading in this range of 14 to 17 times for some time right now. And I think if you saw the IT companies' results this time, there is a clear trade-off, barring Tech Mahindra, between growth and margins. So companies that have grown have sacrificed on margins. Companies that have grown their margins have sacrificed on growth. So I think that it needs to be viewed in that context. And I think IT companies could potentially re-rate if they start acquiring companies, reducing their cash balances, buying growth, and having a resultant positive impact on the return on equity. So that's the way I would view IT. And I agree with Rhythm to some point that you could trade IT companies, but I don't think it's reached a stage where it's an investment thesis just yet. Now, to your point on capital goods and defense companies, I agree completely. I think for most of these, if you see the order book to bill ratio and most of the institutionally held names in these two sectors, they'd be between 2 to 4 times. But the one thing I'd want to watch very carefully, Hiral, over the next couple of quarters is how they manage their working capital and inventory. Because things have gone a bit awry post the war starting. Of course, I do believe that if defense companies don't win a single order from here, theoretically, they will still be able to grow 20% for the next 2 or 3 years because of the kind of order books that they have. But how they manage inventory and working capital will be extremely important. There are a lot of companies that are working with new age renewables, combined cycle kind of projects. The companies like Triveni Turbines, TD Power Systems that are doing really well. Triveni, for example, is operating at 25-30% return on equity capital employed. So it's not just the larger ones. You've seen what's happened with ABB. A very sharp move in the stock, and I think it's been backed by good results. So I think for most, even if you extend it to something like, say, a KEC and things like that, I know we get too obsessed by talking about the Thermaxes and ABB Siemens of the world, but I think even the mid-cap and the small-cap companies in capital goods are presenting value right now. In defense, I don't think the valuations are very compelling. I think a lot of defense companies in India, whether it's HAL, BEL, BDL, would be trading at anywhere between 1 to 1.5 times standard deviation over mean, even now for the kind of return on equity and capital employed that they have. Most defense companies in India would be operating at between 15 to 20% ROE, ROC. And for that to be paying 30, 35 times, I'm not sure. But there is certainly, the market, I think, is paying for growth. And I would say that selectively, both these sectors, you can be marginally overweight on both of them.
Good morning, Neeraj here. I am wanting to ask this to you because you guys must have coverage there on the energy sector, right? The debates in the last 72 hours that I've had with people about the valuations at which the energy sector is trading at 2 year forward and whether it is peaking out or no, because that valuation ranges from 70-80 PE all the way to 20 PE as well. So is energy and energy transition a theme to bet on? And if so, how do you play it?
So, Neeraj, when you say energy, are you talking more about, say, oil and gas companies or
no,
power?
I mean power. I mean power. Leave okay. Oil and gas, yes.
Okay, so I think, Neeraj, when you talk about the power sector, I think there has been a lot of euphoria because of data centers and, GCCs and the likes and the kind of resultant impact it will have on power finance companies. Now, some of these are very regulated businesses. Like you take an NTPC, you know what the return on equity, return on capital employed is going to be for a company like that. And that holds true for most companies. I think, companies that we don't even talk about, like SJVN, for example, anymore, these have been fairly predictable businesses over a period of time. Now, would I rush in to buy these companies today? I don't think so. That is my personal view for the run that they have had. I would like I was discussing with Hiral, I still think that execution needs to catch up with valuation. But I don't think that, something like an NTPC can surely find its way into your portfolio, and something like a PTC or a power finance corporation looks all right. But I would not venture too much into the power and power equivalent sector right now, Neeraj, given the run that they've seen. In fact, conversely, if I could just take it one step forward, since I asked you about, oil and gas companies, if you look at HP, BP, IOC, I mean, there is one school of thought that, prices at the pump may go up post 4th of May when the election results are there. But if you look at the dividend yield for HP, BP, IOC, they are trading at 3.5, 4 times. The free cash flow yield would be 7.5, 8 times. Sometimes even 9 times. And these are, companies where the price to earnings multiple is trading at below free cash flow and dividend yield sometimes. So I think that, power and energy is okay. And the point I was making a little earlier to Hiral as well, you can play through companies like TD Power Systems and Triveni Turbines, which are actually in the business of making products for these companies rather than playing it through the generators and distributors. That's my personal view. I could be wrong, but, something like an NTPC would surely find a way into my portfolio.
All right, Rahul, thank you so much for joining in. Always a pleasure when we have you speaking with us here on NDTV Profit. A lot of news that we're tracking this morning. Sources are telling us that the government will soon roll out a relief package for most impacted sectors amidst the Iran conflict. It's mulling a 5,000 crore rupee airline credit scheme, among other relief. Shrimi Chaudhary joining in with more details. Shrimi, what are we picking up?
Yeah, that's right. Government sources confirmed NDTV Profit that under a broader 2.5 lakh crore emergency credit guarantee framework, which is being worked out for multiple affected sectors, aviation could get an outlay of around 5,000 crore. And idea here is to give airlines easier access to credit at a time when fuel costs are high, routes are longer, and operating pressures are building up. So what we are learning at this point that the proposed scheme could run for about 5 years with a cap of up to 1,000 crore per airline, and also there could be a provision in that scheme which is under discussion where airlines could get an additional 500 crore if promoters bring in matching funds. Now, importantly, the loans may come with a government guarantee of up to 90%, which should also help bring down the airline's borrowing costs. Now, the nitty-gritty and the whole nuances of the scheme will get to know because this is going for the cabinet approval in next 1 week is what sources indicating. And in fact, what we are also hearing from sources that the government focus right now for all the impacted sector, it's the two-fold which they are working on, ease immediate cost pressure and ensure airlines don't pass on the full burden to passengers through sharp fare spikes. So if you see in last few weeks, Center has already moved to cushion this particular sector. ATF price hikes have been capped at 25%. Airfare cap continues, and in fact, airport charges for domestic flights have been cut by 25% in major airports. So this is will be additional and very, very important and help cushioning the impact as the war lingers. Back to you.
Okay. All right. Thank you so much for that. Let's just pull up and see what some of those stocks are doing. Interglobe about 0.75% up. SpiceJet. Let's see what SpiceJet is doing right now. That's also showing a bit of an uptick. Meanwhile, in the other big story that we've been tracking on the channel this morning is the Paytm Payments Bank license being cancelled, citing serious regulatory lapses and concerns around depositor interests. Now, what is the kind of impact that you have on Paytm? What does this also tell you in the way the regulator is looking at these kind of lapses? For more on this, before we get to the conversation with Abhisar Divanji, I have Soumit Sarkar breaking down that story for you. Soumit.
So firstly, let's start off with why RBI did cancel the license of Paytm Payments Bank. Now, what the RBI letter says here is that the bank's management has acted in a manner which is detrimental to the depositor's interest. There have been issues on KYC, sticking to the banking guidelines, issues also related to PAN card that has been spotted by RBI in their review. Apart from that, so these were largely the issues. Now, what actions have been taken by Paytm on Payments Bank? Now, they have, given the fact that Payments Bank is not a subsidiary of Paytm, it's just an associate company where Paytm holds around 49% stake, the board has approved shutting down of Paytm Payments Bank license. And this is as per the letter that RBI had also mentioned that they will look to wind up Paytm Payments Bank. Now, what is the stance of Paytm on Paytm Payments Bank? Now, the company has already impaired all the investments that they had done in Paytm Payments Bank earlier as well, which means that there won't be any additional financial impact or additional impairment that would happen when it comes to Paytm Payments Bank in Paytm's book currently. And currently no services have been provided by the in partnership with the banks, and no board or management is involved of the company, that is Paytm, with Paytm Payments Bank as per the company's release. Now, again, as I was mentioning about the impact, the impact on Paytm's book would be very low given the fact that they have already written off all the investments that they had done in this book. So financially, not much of an impact, but sentimentally, it is negative given the fact that the letter that RBI had written was quite harsh. The letter had quite a harsh language. But analysts also believe that given the fact that now this business is shutting down, this clears the way for the company to apply for NBFC or the PPI license as well. And going forward, a few analysts also believe that this could potentially smoother the way for Paytm to get more regulatory approvals, specifically the wallet business approval, which is important for Paytm. That could come in going forward, and this will also mean that this could also mean removal of RBI's payment infrastructure development fund, which is a concern. There could be some relief on that front also, is what the street is currently believing when it comes to Paytm. And company says that all Paytm services continue to operate without any interruptions given the post the RBI letter, because given the fact that Paytm Payments Bank had no business with Paytm.
Thank you for that, Soumit. Abhisar Divanji, founder of Neostrat Advisors, joins us now on the show. Abhisar, very good morning to you. And obviously I'm not going to ask you about the stock price and the way Paytm is reacting, because we know technically the two entities have nothing to do with each other. But the way the Reserve Bank of India has come down on an issue which, at least in the mind of the market, had been wrapped up. does it also display the low tolerance threshold that the regulator has for whatever took place in Paytm Payments Bank?
No, very clearly, the regulators' angst against Paytm as a group with regards to the functioning of the payment bank was very evident, 2022, 2024, and now, frankly, it is about to shut it down. Very frankly, this was the logical conclusion to what had been said earlier. The earlier language also not less harsh. So I think a harsh closure to this was expected. But I don't think this is any new issue that the regulator has with Paytm. It's all the legacy issues that are now coming to fore. And one of the things that the regulator does not necessarily like about most regulated entities is the slackness with which you look at remedial measures. And I think that has happened in this particular case, which is where the regulator has lost confidence in the entity.
Abhisar, having said that, Vijay Shekhar Sharma, of course, stepped down in 2024 to keep an arm's length from all of this at Paytm Payments Bank. But somehow, everything that happens around this bank continues to haunt whatever he is doing now, and which is why you're seeing that kind of a negative reaction. Explain to us why that linkage, at least in the minds of investors, has not been completely broken.
No, but it is not completely broken. Let's look at it. I mean, the whole ecosystem that Paytm has created, which is a great one, by the way. In my opinion, among the fintechs that exist today and all the competition that you're seeing around payment infrastructure companies, Paytm is the best. There's no doubt. Now, coming to the issue at hand. The issue at hand is that when you say, oh, I've stepped down from the regulated entity and I don't control it anymore as an arm's length, obviously everybody knows it is not the case. There were too many comminglings involved. And frankly, the business model required the commingling, and I don't see a problem with the business model, by the way. So the commingling was that, yes, there was a deposit account sitting in a payments bank, and there were all intermingled services being offered around payments, be it merchant-related acquisitions, be it merchant-related trading. All of that was happening on the basis of the larger infrastructure created in Paytm. So any which way, just by one individual resigning, are you saying that you're going to divorce yourself from an existing platform which is so commingled? So this is what I mean when you say that if you try and do remedial measures which are not seriously thought through, the regulator sees through it. I mean, clearly the payment bank linkages were there, and the issue, at some stage they were talking about why are you using the same platform for the payments platform as well as the bank. The real issue was that of the slackness with which customers were onboarded. And the real issue that maybe the owners had to realize at that time is that the bank is a custodian for clean money entering the system. And that is why KYC and ALM become very, very important. You're onboarding a customer. You're allowing somebody to open a bank account. You're allowing him to legitimize transactions which otherwise are outside. Now, if you allow him to enter the system, he can play with the system after that, right? And that is really why RBI is so concerned about the banking system, because the flows within the banking system become uncontrollable once a customer is accepted. And hence, KYC becomes a very significant component.
These are, important points that you make right now. But my question over here is, if you have to look at the next steps now for a Paytm, is it that it's all decks clear for the other aspects in terms of business, number one? And two, if you have to look at the future of Payments Bank, because if I'm not mistaken, there were 11 original licenses that were issued, right, on an overall basis. Only 6 remain operational. Is there a structural issue that you could also look at when you have to look at the Payments Bank model fundamentally?
Okay, so I'll answer the question in two parts. First part is, does it clear the text for Paytm to do other stuff? Absolutely. I think anything which involves a fiduciary acceptance of deposits or a banking activity is a complete no-no. But if they do not control a bank, then there are more features that they can offer by tying up with banks. And they're doing it. I mean, they already have tie-ups on the UPI with so many other banks. And that will continue. So the whole process, ecosystem, which will enable them to either get a PPI license or a wallet license, will continue to happen as long as they're not in charge of opening savings accounts. So that is, I think, as far as Paytm is concerned, I think the model is excellent. I think it's an opportunity for other banks to tie up with them to see how they can grow. So for sure. Now the second part of your question, which is the future of payment banks. So, payment banks were envisaged to be banks which will get the unbanked to the banking system. That was Dr. Raghuram Rajan's vision to create a category of banks which did that. I think it was half a bank, and because it was half a bank, it was always a problem. So it gave the security to people who are not necessarily used to banking to say that your money will only be deployed in government securities. Don't worry. So you're not going to lose too much. Come to the banking system. But that was, I think, expecting too much of the unbanked to try and understand that, how is the GSEC more secure than a loan? I think that's where the model failed, and the deposits never came in. So what happened is, people who are doing payments bank and the successful ones today are one who are commingling it with the larger payment ecosystem. And there is nothing wrong in commingling a payment bank activity with a larger payments ecosystem. Now look at the Jio model, or look at what Airtel is about to do. And they have a payments bank. That payments bank is going to be a deposit taking entity, which basically gives them access to customer data in terms of how the customer's liabilities behave. How the customer deposits money, where is money coming from, where is he spending the money. So if you capture a savings account, that part of the customer's data is available to you. Now on the other side, Jio set up an NBFC, Airtel is now going to set up an NBFC. That NBFC may, on a consent basis, be able to use that data to figure out how the lending can be done well. Now both of them have pipes which are very different. They have the telecom pipes, for example, which pipes means just a sales engine. Through the sales engine, they will onboard a savings account and make the customer eligible for a loan in their other entity. So that's how that ecosystem will work. But the funds are not commingled. That's important to understand. The deposit is not used to give you the loan. The deposit is used to invest in GSECs. But a separate set of capital pool has been created to do the lending business. I think that model of a payments bank will work. And the important thing is that corporates are allowed to do this. So the corporates can have an NBFC come payments bank model, which is what Jio is doing and Airtel will do. Those models will succeed.
Okay, it's going to be a tricky trade. I think one point that you made, and which stands out for me as well, is that just by one person resigning, you can't divorce from the whole situation. You can't just say, oh, I don't really know you, and walk away. There is a clear stake there. And I think this is going to follow Vijay Shekhar Sharma around just for a bit, even as he hopes to rebuild. Thank you so much, Abizar, for joining in. Always a pleasure having you on. All right, let's talk about Shriram Finance and their results which came in. We're going to be speaking to management just in a bit, but before that, let me go across to Shivam very quickly to put together the details of the results. Shivam, the stock doesn't seem to be reacting too positively.
Well, yes, Shriram Finance has released a steady set of numbers where the AUM has seen a healthy growth, with the segmental portfolios have also grown on quarter-on-quarter basis, except the construction equipment segment where there has been a 20% decrease on a YY basis. The net interest income has rose 15% on the back of lower interest expense and the growth in AUM, while the operational expenses have declined owing to the lower employee expenses on quarter-on-quarter basis. The operating profit has also seen a good growth due to improved operational efficiency, and the AUM has been witnessed a growth of around 15% on YY basis. And despite the strong set of numbers, the Shriram Finance is currently trading lower.
Okay, thanks a lot for that. It's a different Shriram Finance than what used to be the same time last year, because the MUFG deal and I would presume some fresh air out there helps Shriram Finance meaningfully as the times to go by. In fact, in a short while from now, we'll be talking to Parag Sharma, MD and CEO of Shriram Finance, about the numbers and more importantly, how is the scenario looking from an FY27 perspective? Because I think that is what becomes the key. That can disbursements pick up while asset quality is maintained for the space at large, and Shriram being a leader, what will they do within that ecosystem? Mr. Parag Sharma joins in right now on the show. Mr. Sharma, thanks so much for taking the time out. Good morning, Neeraj here. Sum up the quarter for us. Of course, it was quarter four. In some sense, FY26 as a year becomes important to look back to, because in some sense it was a landmark year for Shriram Finance.
Yeah, correct. In fact, this was the first time the largest FI investments has happened in the financial services. We're very happy that first week of April we were able to consummate the transaction and get 40,000 crores. We have been guiding in past about 12 to 15% growth. With this large capital being infused, we are very confident that next year we'll be able to grow much faster. In spite of headwinds there, we'll be able to grow between 15 to 18 is what we are guiding.
Sir, Mr. Sharma, why do you say headwinds? Do you believe that the lending ecosystem demand is looking slightly sluggish right now because of all that's happening geopolitically, or are there other reasons for the same?
I think 2, 3 indicators. One, the inflation being inching up, the monsoon not being predicted to be very good. And there are concerns about interest rates going up. But in spite of all of this, we are very confident we are be able to capture larger market share and grow much better.
Okay. Mr. Sharma, good morning. This is Hiral on this side. My question to you is, you're talking about almost 15 to 18% overall growth. If you have to look at the capital utilization from that 40,000 odd crores that does come in, how much will go towards restructuring debt and how much of it will actually go in terms of expanding your gold loan portfolio as well as your new vehicle financing business?
Core strength is vehicle finance. We'll continue to focus there and look at growing that particular portfolio. We are also now looking at new commercial vehicle lending. That used to be in previous years at around 5 to 6%. We are planning to increase it to 10 to 15% of our new disbursement. Gold is a very safe instrument, but very short-term instrument. So that we will try to grow, but I don't expect a very substantial growth to come from gold. We will be setting up new branches, but growth driver for us will be largely the commercial vehicle segment.
Okay, so then if you have to talk about the product mix as well from here on, there is a little bit of slowdown that we are already seeing when it comes to MSME lending. And this is on the back of the supply chain concerns that everyone has been talking about. Which segments will actually fill this gap to achieve the kind of growth that you're talking about?
Okay, I'm talking about commercial vehicle itself, which is new commercial vehicle. Our customers who take used vehicle finance from us, when they upgrade, we used to miss out on those customers. They used to go to peers or they used to go to banks. We are trying to retain those customers. And when we retain these customers, they will have multiple needs. They will have need for passenger vehicle also, gold financing also. So retaining commercial vehicle customers will be the focus for us. That is going to be the driver. Other thing, if we look at the MSME, we are not into large ticket lending there. We lend secured, but we lend small ticket only between 10 to 12 lakhs. If the conditions continue to be strong, that can also grow. We have not seen any kind of concern in Q4 for MSME, in spite of Q3 being slightly muted when it comes to MSME growth, which has not happened in Q3, but Q4 was okay. If conditions continue to be conducive, I don't see a reason why MSME should also not grow.
Mr. Sharma, good morning. Tamanna here. I just want to pull back a little and, the exciting thing about Shriram Finance, apart from the quarter, is what this MUFG partnership and the infusion of funds is going to mean for you over FY27 and FY28. You've spoken about it in the past, but trying to understand in the context of the current geopolitical headwinds, etc., how best are you going to utilize this buffer now that you have?
Okay, it's a growth capital what they have infused. They are very happy with the retail focus what the company has. We'll continue to focus on retail growth only. We are not looking at anything new, but when it comes to participation from MUFG, we'll look at the benefits of their global presence, their tech advantage, what they have and how they can help us for including tech. There will be several growth drivers, new areas which can be focused upon along with the MUFG's expertise. But as of now, we are looking at technology benefit and also their global presence. But we have a large offshore borrowing program also, and how we can benefit from MUFG partnership there.
Let me just ask a little more about the offshore borrowing program. Does it make a significant difference to your cost of funds and gives you an advantage over peers?
That was a diversification program what we started around 5 years back. That is close to around 20% of our liabilities. But going out to newer geographies, we have done very well in Asia. We will have to look at more of Japanese investors. We have to look at European investors. Cost of fund advantage, because we have been upgraded now. International rating also has been upgraded. That should also be definitely be there for us.
You mentioned in your first response to us about some of the headwinds that we're seeing, including the hike in oil prices, etc. What is the kind of impact you see coming in? Coupling oil prices on one end and possibly not a great monsoon. So how are you prepping for the possibility of both of these factors playing out? And are you already seeing some first order effects coming in?
No, nothing has been announced as yet. Fuel price increase is something which has been talked about. Nothing has happened as of now. We are not looked at any kind of slowdown as of now. What happens is if inflation picks up, goes up and rural economy doesn't perform because of monsoon and all, there could be a demand shrinkage. As of now, it is only hypothetical being discussed, but we have not seen anything as of now.
Okay. Mr. Sharma, I was looking at your presentation and an interesting thing that came out that versus Q4 FY26, the branch and AUM distribution, Q4 FY26 versus Q4 FY25, the branch distribution, metros are lower, urban is lower than what was there in Q4 FY25. What has gone up slightly is semi-urban and rural. Is that the focus from where growth will come in typically for NBFCs and maybe for Shriram?
I think for any retail lending institution, particularly when it comes to asset financing, growth driver is only semi-urban and rural. It is never urban. Urban is largely the PL book which goes up or the passenger demand which comes up, the cars. But any other asset class, the drivers is always semi-urban and rural for. And we are very deeply penetrated there and we have good growth prospects there.
Agreed. I was wondering, in the context of the answer that you gave me, that you're going to focus, that you believe that growth will come in largely from vehicle finance and you're focusing on that for FY27.
Yeah, vehicle finance is heavy commercial vehicle, light commercial vehicle. Both drives the growth for us and it is semi-urban and rural focus.
Okay. So can we leave it with that you believe that about 15 to 18% growth for FY27 is something that you aspire to do despite the headwinds?
If things continue to be normal, we can be at 18 and 18 plus also. If things continue to be slightly weak, 15 is definitely there for us.
Okay. Point well noted. Mr. Sharma, thank you so much for taking the time out. All the best for a better FY27.
Thank you.
Right, that's Shriram Finance, large NBFC and aspiring to grow over 18% if things become okay, but otherwise 15% seems to be a base. The stock, though, 3.5% lower, as are some of the others, by the way. Axis, I don't think has recovered completely from, I won't say the mauling, but the weak start that it got, maybe off the lows of the day, but still down about 3.5%. A clutch of others are doing that. But on the other side, there is Cohance, there is India Cement, and there is more. So a lot of movers and shakers. We slip into a very quick break. On the other side, we'll be speaking with Pratik Agarwal, MD and CEO of Motilal Oswal Asset Management Company.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market.
Welcome back. You're watching India Market Open as promised. Markets are back, and we'll have to wait and see whether there's going to be a sell-on rise or some profit booking coming in, because it's been a nervous climb back above the 24,100 levels over the last few sessions. At least Monday's opened okay. Prateek Agarwal, MD and CEO of MOAMC, joining us now on the show. Prateek, very good morning to you. Great to have you here with us. You know, we've been talking about how perhaps Indian equity investors, along with those in Asia right now, are beginning to look beyond what's happening in the Strait of Hormuz. It's important. Crude is still at 107, but fair to say we're not obsessing about it as a major negative as we were, say, even 3 weeks ago?
Well, if you look at the level of the market, you can derive that outcome, but I think something else is happening. One is the markets are lower, significantly lower than where they were in Feb. Okay, it is known that this thing is causing a very large amount of stress to Asian economies and India in particular, which means when this thing sorts itself out, the uptick can be sudden and sharp, and maybe people are positioning themselves for the uptick. The challenge here is that if this uncertain period elongates, then you will see the patience wearing off. So I think it is the opposite. Till there is hope that this thing resolves quickly enough, markets in India will hold. But if one starts to believe that this thing will elongate, then the patience will wear off, because today mostly people are positioning for the rebound trade. That said, if one takes this as a big interjection in the journey of the markets, this has brought into focus things like the power sector, renewables in particular, spaces like EVs, spaces like defense, like never before. So the leadership could move to newer spaces after this thing sorts itself out.
You know, in that whole play about alternative energy solutions for India, renewables, etc., that's an idea that on paper sounds very exciting, but we haven't really seen the performance as far as those stocks or those group of stocks are concerned. Do you think that's set to change? Is that an idea worth looking at from, say, a medium to long-term focus?
I would think so, because, coal. So the whole idea is to move away from oil. We are getting a big oil shock. So when it happens, policymakers will do everything to prepare the country, so that this thing doesn't repeat itself, which means going back to indigenous supplies of energy. That could be coal, that could be solar, that could be wind, and a combination. Now the thought is that, as you build a new economy, you don't want to go back to coal in the way it served us over the last 50, 60 years because it dirties the environment. So the time for renewables has really come. The prices, X of best cost inclusion is cheaper than fossil fuels. So I think renewables are the way forward.
Prateek, good morning, Neeraj here. And some of the upsides from the result season as they've come out, and I wonder if it's too soon to call it an upside, but the chemical companies have started to show some traction, and it may well be because the end product prices in select cases have moved higher, but there is a strong EBITDA performance, and it seems that that price uptake in select cases is well continuing into Q1. Is it a sector worth revisiting after years of it being in hibernation, or do you believe it's too volatile?
I think it is worth visiting. See, when you build a portfolio, you start to look at spaces which can deliver volume growth significantly faster than, let's say, the overall economic growth. And on top of it, the price will bring its own volatility. But if the underlying volume growth is strong, then whenever the pricing scenario turns favorable, the end outcome would be that much better. So chemicals are a space where volume growth can be very sharp, has been sharp. It's not only China +1, it's also Europe +1. Most people don't want to do more of chemicals in their own country. They look for developing countries to do it for them. We being one, so there are tailwinds to that effect. And yes, time to time, when a capacity goes off stream in a particular chemical, the prices would tend to harden, and that will benefit whosoever is left in the value chain. So this is a space that we like, but as a part of the portfolio, if you look at our portfolios, we would be 3 to 6% in the space.
Okay, 3 to 6% of the portfolio here. The other one is cement. And maybe India Cements is just one of the blocks, but the stock is doing well today. Their EBITDA performance look good, and we've seen enough reports stating that there have been price hikes in the month of March, in the month of April. Sector to look at or avoid, considering that monsoons are around the corner?
So this is a sector which may lend itself to players who are focused on value. Because, look at it, we don't think cement will grow volumes in excess of the economic growth rate. And over the next 3 to 4 years, once the stated capacity expansions come on stream, so 32, 33 kind of a year, maybe we hit a peak in cement production, capacity and production. So it doesn't lend to our kind of investing as a house. We are, I would say, zero on cement. But yes, for people who want to play price, who want to play replacement cost, valuation, etc., it may lend to them, not to us.
Okay. Prateek, good morning. Hiral on this side. Now, the other aspect I want to talk to you about is you've spoken about energy security and how things are shifting in this segment, right? Does this mean if you have to look at auto, EV adoption is something that one should be watching out for, and that's the reason why that as a segment, stocks related to the EV segment come in focus, because we've seen a rally there as well. And secondly, your renewable energy space gets into focus as well. So your view when it comes to the power sector?
No, so completely agree with you. It's not only because of this, EVs come into focus for many things. They don't pollute the cities. I get it that the power that they use to charge comes from coal, but it happens somewhere else where pollution is not such a large issue. They keep the cities clean. So and they take the economy exoil. So for every large city, I think EVs are increasingly becoming the preferred mode. Delhi has put out a plan to move to all EVs for 3-wheelers from 27, 2-wheelers from 28, and so on. And I think one city does it, other cities should or could follow. So this is the way forward. People compare prices of the vehicle itself today. Overall cost of ownership is almost definitely below ICE already. So it is a question of now charging infrastructure, which is coming up pretty rapidly to my sense. So EVs, we really think will gain traction if, as expected, or as is being expected, we get some amount of pump price increases that can just accelerate the move towards this. Now, in the same manner, solar, wind, renewables, with storage, BESS is going to be a large theme. Is the other part of it. Now, today, people think solar hours, when you generate more, it's power which gets wasted because, you generate in excess of demand. But suppose EVization gathers pace, suppose cooking happens more on induction versus gas, etc. over a period of time, then the demand even during solar hours could move up. So I think renewables are again a space to look at.
Okay.
On top of it, we think grid, but off-grid renewables, especially solar, can be even more interesting.
Okay, so solar is going to be interesting from this space. Pratik, my last question from my side will be in terms of BFSI. Now, you're talking about the West Asia crisis. A lot of your remittances do come in from the Middle East as well. With the crisis ongoing, do you think there could be a potential impact that could be coming in when you talk about the liquidity side of it? And if so, the kind of impact we could see on the banking system?
So, every issue can be an opportunity as well. When things are tough, and maybe markets are not so open, maybe for funding capex, etc., you go to banks for loans. So the loan growth could look up, and liquidity is something which is more in the hands of the central bank rather than anything else. If they want, they can put in liquidity in the system for a short period of time to take care of any of these 3-4 month kind of disruptions. So I don't think the Middle Eastern issue causing some amount of stress on MSMEs, etc., and hence on the NPA cycle is going to have any large lasting impact, especially if this thing sorts itself out in finite period of time, 15 days, 1 month, 1.5 month kind of a period. Now, where we have issues with financials is of a few NBFCs, the growth has gone out. Most financials are delivering numbers similar to lower than that of the index, which is a stark change versus what is in the mind. What is in the mind is, financials deliver 15-16% base minimum and going up to 30%. No longer true. This has not been true for last 5-6 quarters. If they do earnings growth, which is lower than similar to the index, how does one generate alpha investing into them? So if you look at our house, we have been low on banks, especially for a very long time now. Many of our constructs will be zero banks.
Right. Okay, so this is going to be a sector that is in focus as well. But thank you, Pratik, so much for joining in. Always a pleasure to speak to you. Another stock that is in focus today, it's very interesting to see a IDFC First Bank because the stock is trading in the positive. The commentary is something which is positive, and hence you're seeing this kind of a reaction. They've guided for FY27 net interest margins to be similar to what we've seen in FY26. The quarter has been tepid, but it's mainly on the back of one-offs as well. And they've seen a hit in terms of the treasury loss. In fact, let me head across to Sudhanshu Sharma, who's also joining in to talk to us about how the quarter has been. I did speak to him earlier. Let's listen in to what Sudhanshu had to say in terms of the quarter and how investor sentiment could actually improve from here on. IDFC First Bank has reported their Q4 numbers. It's been a very interesting quarter because the performance has been pretty strong across parameters, but it has been a tough quarter for the bank because the deposit growth from here on is going to be the key monitorable. Your net interest margins have improved substantially, and it's mainly your elevated provisions which have dented the performance this time around. So you could say that it's mainly one-offs coming in. Treasury loss, 160 odd crores is what you're looking at. A loss of 270 crores is what the bank has realized in the other income aspect. And a 650 crores is the reported number due to the deposit fraud in the Chandigarh branch. Now, whether FY27 is going to be a key monitorable in terms of outlook is the key question. Sudhanshu Jain, Chief Financial Officer at IDFC, joins in. Sudhanshu, welcome to the show. Always a pleasure to speak to you. My question is, I would say that growth probably has moderated slightly, but it's been a tough quarter. And still, there have been green shoots coming in there. Margins have improved further as well. If you have to sum up Q4, and give a highlight of what the beginning of FY27 would be taking cues from this quarter, what would you have to say?
Yeah, thank you for the question. As you called out many numbers, I think there are many positives, and let me try to summarize. The operating performance, I think, has again improved further into this quarter. Net interest margin has improved to 5.93%. It was almost an improvement of 17 basis points in this quarter. We had guided the market for 5.85% in the previous quarter. We have come slightly better. Cost of funds has reduced further, and now happy to report that it has touched 6%. This has come off by almost 50 basis points in last 1 year. Similarly, if I talk of fees, that has grown very strongly at 21% YOY. If I talk of operating expenses, that has been very stable around the 12% mark. So I think we are doing well there. Provisions, I think, is the highlight, and that has been delivered through the improvement in the asset quality. We have been talking about MFI for some time, but there the slippages were just less than 100 crores this quarter, and it has kept coming down. And even if we see X of MFI, there the slippage ratio for the quarter was at 2.60%. It was an improvement of almost 60 basis points during the current quarter. And credit cost, if I've talked, because all of this translates into a credit cost for the quarter was at 1.63%, and this was lower by 42 basis points from the previous quarter. And this all has come through improved collection efficiency, both on MFI, non-MFI. As a consequence, GNPAs have reduced, NNPAs have increased. So all of that has translated into better operating performance. Core operating profit, if I have to say, has improved by 10% sequentially and 32% on a YOY basis. There were certain one-offs, so we have taken an upfront impact of an isolated fraud incident. As you rightly said, we had some treasury loss during the quarter because of widening of yields. Some counter to that was a positive income tax refund, which we got of about 174 crores during the quarter. If I take off, just the last point, if I take off all of these one-offs, which is the fraud incident, trading loss, and this another income tax refund, profit for the quarter jumped from 503 crores to 746 crores, which is almost a 48% improvement. So I think we are set in for a good FY27. All the operating parameters have improved, and we are quite hopeful.
So, Sudhanshu, my question is, despite that strong year-on-year growth, if you have to look at the deposit side as well, the CASA has sequentially dipped to 49.8%. Now, given the recent 50 to 200 basis points interest rate cuts on savings account, how do you really plan to achieve this 25% CAGR, deposit growth target for FY25?
Yeah, so deposits during the quarter did come down. We were growing quite strongly till December, I would say. But there were many events which played out during this quarter. We all know the West Asia crisis has been going on. We had reduced the rates on savings account in certain buckets by a huge order in January. Then there was tight liquidity. So there were advanced tax outflows. So we did have an impact in Q4. But we are also guiding that as we see April, I think it has again started on a very solid footing. We are quite comfortable that again deposits starts growing at upwards of 20%. for FY27. Loan, we have been growing strongly at 20%. So we feel that everything comes back. So it's now quite normal from here on.
Okay, what about your net interest margins? Because you've guided and you're saying that you'll stabilize at around 5.75% in FY27. Now the shift towards low yield, low credit cost segment, if you have to look at that aspect as well, how will that impact your ability to maintain this, especially if the CASA ratio remains under pressure?
CASA ratio, first of all, let me tell you, 49.8% is still a very good number. If you look at an average CASA ratio, that was at 50.4% this quarter, and it improved, in fact, by 40 basis points vis-a-vis the previous quarter. So even into the next year, we are quite confident of maintaining CASA around the 50% zone, and hence that to play out. So we don't see a challenge in terms of deposit mobilization.
Got it. Provisions are at what? A 2-year low. Can we expect the credit cost to then stay below that 1.8, 1.9% mark throughout FY27 then?
Yeah, so this year, in fact, for the full year, we came at about 2.13%. This was about 33 basis points lower from the last year. But the good part is for the next year, we see this more around 170 to 180 basis points. So we expect a sharp improvement in provisions for the next year.
Okay.
So we see an improvement in top line, we see an improvement in credit cost, and I think both of it will help to have a better profitability.
Right. Sudhanshu, when it comes to your ECL transition provisions, I know final guidelines are awaited by the RBI. Everyone saying post or April 27 is what you will see. How are you looking at the transition capital impact? Do you think it'll be manageable, or are you provisioning something around it?
So we think, while, as you rightly said, the guidelines are still awaited, we think that the impact would be manageable at transition. Of course, we will need to park more capital or set aside more capital when ECL guidelines do come in. But we may get some benefits because of also application of equated interest rate, or the EIR method, which we say, which comes along with these guidelines. Just very quickly, I'm saying today we incur operating expenses and we also get processing fees. In an EIR regime, both of this will be amortized. So we will get some gain because of that on transition. Plus, there are also guidelines expected around operational risk. There is a benefit expected on credit risk guidelines. So all of this put together, I think should be quite a manageable number for us at transition.
Okay. Sudhanshu, I mean, the management has labeled FY27 as a breakthrough or a lift-off year. Let's look at the FY27 lift-off narrative, because ROE targets, ROE of 17 to 18% is what you were looking at, but I know it's come lower this time because of the one-offs. What is that realistic bridge that one should be watching out for to these double-digit returns by the end of FY27 then, if you have to look at ROEs and ROAs?
First of all, we want to hit the 1% mark for ROA. We had touched that in FY23-24. Since then, we had the MFI crisis and so on. As I said, MFI crisis is not broadly done and dusted. In fact, if you see the normalized profit and its translation into ROA for this quarter itself, we have touched 0.75%. So we are first gunning for reaching the 1% mark, but it will not stop there. We are quite hopeful it keeps improving from there. And definitely that will result in even in ROE improvement and so on. So we are quite, as you rightly said, we are quite optimistic getting into the next year. And we feel that the track is very clear.
Okay, so track is clear. And my last question, or maybe the second last one, is do you anticipate a fresh equity fundraise in FY27 to support that projected 20% loan growth?
Yeah, so we would need one round of capital, and this is what we had guided the market even earlier. So we would need one round of capital towards the end of the year to support our loan growth. And as profitability keeps on improving into the year, the requirement will keep easing off, right, as we project growth for the future years. So we will need one round of capital to answer the question.
So, Sudhanshu, last is, now the recent headwinds have actually put the stock under pressure. I know you would not really want to comment on the stock price, but that has somewhere impacted investor confidence as well. And all brokerages are talking about a structural re-rating that could be coming in, which will mainly hinge on improvement in cost ratios, which is obviously key to your ROE expansion, your steady earnings outcome and better outcomes on deposit mobilization as well, taking the recent fraud incidents. Anything that you would want to tell investors?
Yeah, so first of all, for FY27, we see top line growing at about 18 to 18.5%. We see operating expenses to grow at 13 to 14% zone, which means the core operating profit is expected to increase quite a bit into the next year. I already echoed that credit cost is expected to further come down. So all of this will lead to ROA expansion. If I talk of deposits, we have guided that even in Q1 itself, we are looking at about 4 to 5% sequential growth in deposits, and at 20% plus certainly for the full year. Advances have been coming strongly. Of course, we have been also watching the developments as far as the West Asia crisis is concerned. But we feel that net-net, all of the parameters should do well, and it should be a much normalized year as we head into FY27.
Okay, so a normalized year is what the management is indicating when it comes to IDFC First Bank. Let's see what it turns out to be. But moving on, Union Minister Piyush Goyal is set to meet exporters and industry bodies today amid the India-New Zealand FTA signing and the geopolitical uncertainties that we've been watching out for. Rishabh, my colleague, joins us with more details as to what this would actually mean for the Indian diaspora. Rishabh, over to you.
Absolutely right. After the New Zealand free trade agreement signing, you have Piyush Goyal, who is set to meet export promotion councils varying from sporting goods to leather to engineering goods. This is yet another meeting in the standard sort of monthly or bi-monthly meetings that the Commerce Minister holds with exporters. This is to simply assess the current status of trade, the current sort of export numbers that India has been able to post and how to bring those up. What we have is, of course, exporters will continue to flag certain sector-specific issues, whatever benefits they might need in terms of ROTTEP getting restored, in terms of other sort of gains that they could see coming in from minor policy tweaks. That's what the exporters will be flagging to the Commerce Minister. What you have and why this particular meeting is important is because exports are seeing a hit when it comes to the Middle East region. They are still impacted. Movement has still not opened up fully. What you have is, of course, a lot of new trade deals that will be operationalized within this fiscal year in New Zealand, in UK, in EU. So you have these multiple trade deals also coming up that can act as a hedge to all the issues that exporters are facing. So that's what will be the highlight of this particular meet between Piyush Goyal and the exporters.
Okay, thank you so much, Rishabh, for that. That is going to be an interesting development, and any positive news will mean you will see export-driven sectors that could see some bump up in the trading day today. But completely out of time. With that, it's a wrap on this edition of India Markets Open from Tamanna, Neeraj, the team that put the show together, and myself. Lots more lined up on the other side. Up next is Ask Profit with Mahima and Puneet. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me today is Mahima Vachajani. And over the next hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending in your queries on the numbers that are flashing on the top of your screen. You can also call us, speak to us, as well as the guest directly on your stock-related queries as well. The landline number for that is flashing on the top of your screen as well. But before we do that, as customary, it's an important day to track the markets because we've had the benchmarks, the Nifty 50 largely being focused on individual names. So you've seen Reliance being one of the key ones, largely weak set of results, but stocks not doing too much today. On the other hand, Sun Pharma announcing a major acquisition. Let's look at the heat map for the Nifty 50 very quickly as well. Is now up 8% today. It's a large cap stock, viewers, and stocks climbing throughout the day today. You had the announcement of a $12 billion acquisition, $11.75 billion acquisition in terms of enterprise value of Organon by Sun Pharma. Majority, a lot of it, almost $8 to $9 billion will be funded by debt. But the street likes it. It's something that the company has evidenced with the acquisitions of Taro as well as Ranbaxy in its history. And street's quite positive that they will be able to come across this curve as well. In terms of the other movers, Adani Ports is up 3.3%, so is JSW Steel, and Wipro has now moved itself in the top 4 to 5 names on the index. Tech Mahindra is also doing well on the losing endo. Post results, Axis Bank is down 3.8%. Shriram Finance, while the results came in on Friday, you've had brokerage reviews coming in and largely being continuing to maintain their view, but there were some ifs and buts, and we've covered that in the previous show, which tells you the story on the stock price today. BL as well as Coal India and Bajaj Finance are some of the other names that continue to be in focus on the back of this. Sectoral heat map also gives you that perspective. We've seen that the PSU Bank Index has been one that we've had consistent focus on, but today the Pharma Index out there as the clear winner. You've also seen the Nifty Healthcare also do well in trade, so is Nifty Metal, while the private banks as well as the Nifty Bank is barely down, but largely a green screen, and we'll take that with both hands at this point of time. In terms of the advanced decline ratio, that's the other quickly pull that up as well, because we've seen that broader markets continue to be in focus. While it has been a day of large caps, you've seen most of the gainers coming into the broader market, so almost a 5:1, 6:1 kind of ratio in favor of the advances. Mid cap, small cap also reflect what you're seeing currently on the screen in terms of advances. So you've seen the mid cap 150 up 1.2%, small cap continuing its upward momentum at 1.5% as well. And finally, the BSE 500, these individual movers, a lot of them then that we spoke about right now are reflected on your screen as well. Cohance Life is definitely one of the stocks of the day in terms of the broader market action. Umang Vora, the ex-CEO of Cipla, has now moved to Cohance, and that stock has gone through the moon today, up all at 20%, locked in the upper circuit. It's been a rank underperformer. Stock's down 68% in the last year, but today a big fillip for this counter. Shyam Metallics, Tanla Platform on the back of results, India Cement on the back of results is also up 10 to 13% in trade. So is Spark, which is of course owned by Sun Pharma in a majority stake, and Symphony up 6% as well, and M&M Finance on the back of results. But that's largely in terms of the market action, very, very positive today. And let's start taking your queries. Saurabh Jain, Equity Head Research at SMC Global Securities. Now joining in on the fundamentals, you have Gaurav Sharma, Associate VP and Head of Research at Globe Capital, joining in. Gentlemen, both of you, thanks so much for joining in today and starting off this week with the first set of queries. The first one coming in on very topical yet again on Shriram Finance, and Muralidharan from Pondicherry is asking us this question, asking what he should do with this counter now. He is of course tracking this on the back of results and asking if he can buy this at this point of time. What would you recommend, dear Saurabh? Very good morning to you. Is there enough evidence post results to continue maintaining that positive view once that big acquisition came through?
Hi, good morning. Thank you for having me on the show. Yes, if you are there for the long term, I think there is a merit holding Shriram Finance. Yes, the results were not that great, but yes, after the investment, the outlook is reasonably solid. I think going forward, the business asset under management will grow above the industry average, and surely the margins would also stabilize. So, in my opinion, I think you should hold for the long term.
Got that view, Saurabh, but let's go across, take the next question. This is on Emphasis. Now, IT had a forgetful week last time, and last week essentially. Today's stock's up 3.5%, but Lalita from Bangalore holds 27 shares at 2771. So she's currently sitting at a loss, asking what she should do with this counter now. Should she average, hold or sell here, Gaurav? Good morning, what would you recommend?
Hi Puneet, morning. Thanks for having me today. So it's a 10% loss from where she has bought it. Stock is, yes, it is reeling under pressure in line with other IT counters. I'll suggest her to take a stop at 2150, hold a position. If the stock gains momentum, consider booking it closer to 2400 mark.
2400 mark is something that Gaurav is looking on for Emphasis at this point of time. But the next question coming in now, it's on Clean Science, bought at 818 by Suman from Kolkata. And her question largely being, is it the right time to add more into this counter for Clean Science? So she's bought it very recently. I think she might have bought it today itself. But what would you recommend, dear Saurabh? Is there enough evidence, given what we've seen in a couple of chemical companies, the likes of Deepak Nitrate, on the back of product pricing is doing very well? Is Clean Science one of those contenders?
I can't say right now because on the operational metric side, the things are not looking that great. And, it is very difficult to predict whether the worst is yet over because the crude prices are also inching up. In my opinion, I think you should avoid.
But let's go across, take, pardon me, the next caller from Vijayawada. And Anjali is now dialing in for a stock query. Anjali, good morning. Welcome to the show. What's your query?
Yeah, very good morning to all of you, sir. So I'm having Oracle Financial Services shares at 8,200 average for 110 shares. So what is which point I need to sell this? Like a long term is good, or because sector is not doing good, only this share results are good. So what is the point to sell? And if I want to enter again, what is the point to enter?
Anjali, had you called us before when the stock was at 6,200 also for Oracle as well?
Long back, sir.
Long back, yeah. It's been a while, but most certainly you held on. So many congratulations on the gains visible. I think, Gaurav, if I'm not wrong, I think we asked you itself on this stock-related query at 6,200. I think you'd given a buy call with a target of 9,200. We're bang on that target right now. What would you recommend here? Should she book her profit, be happy with the gains of 1.4 lakh rupees on this one?
Yes, rightly pointed. Yes, I am bullish on this stock as far as IT is concerned, and no doubt the stock has given better than expected, run up. Again, a little more upside still remains in the stock. 9,700 is the immediate upside momentum. I think she should still hold on to her position because the stock has witnessed all the negativity and still the company has maintained its upward trajectory. I think it will manage to go past this 97 hurdle as well. So if there is no need for any kind of cash, then I think she should hold on to a position.
That view, Gaurav. So most certainly we've come full circle on the query. Hopefully, Anjali, that answers your question. The next one coming in on Ajax Engineering. Now, Sabu from Kochi actually wants a 6 to 9 month view on this stock, holding 70 shares, but currently is at a 25% loss. So he's not mentioned his buy price, but Gaurav probably holding at 700, 800 or mark. But what would you recommend on this one?
Track this stock very closely, but still I can have a bleak understanding of this. Just give me a moment. So stock is underperforming and it is having some resistances around 560, 570 zone. So if the stock manages to go past, then only it will head towards further 600, 610 levels. Otherwise, it will flip down towards 400, 450 odd levels. So in my sense, he should maintain his stock at 480 and hold a position. Be a little conscious around 560 levels.
Okay, all right. So that's the view coming on Ajax Engineering. The next one that we have is, I think, from Harsha, was writing us from Vijayawada, asking about LTI Mindtree, which is now, of course, known as LTM. Bought 45 shares at the levels of 4,500. Wants to know whether to add, hold, or sell at the current levels. Saurabh, your view on this one?
You remains negative on the IT side. The IT biggies are guiding for a 1 to 3-4% kind of a range. LTI, Mindtree, the numbers were not that great. I think there will be continue to be pressure on the IT stocks, including LTI, Mindtree. I think this is the sector where should be underweight. My sense, it is better to exit.
Got that view, Saurabh. But let's go across, take another call in from Ambala. And Ajay has a stock query for us. Ajay, good morning. Welcome to the show. What's your query?
Good morning, sir. Good morning to all the panel, sir. Sir, मेरा क्वेश्चन Hyundai India पे है, सर. मेरे पास शेयर्स हैं 2136 पे 300 शेयर्स. सर ये मैंने फरवरी में लिया था. सर रीजन इसके पीछे दो थे कि एक तो सर जीएसटी रिडक्शन का बेनिफिट मिल जाएगा और सेकंड था कि वो ट्रेड टैरिफ यूएसए के साथ सेटल डाउन होगा. अगर सर ये स्टॉक तो काफी नीचे आ चुका है, तो क्या मैं यहाँ पे 50 शेयर और ले सकता हूँ या इसको बेच के कुछ और शेयर में शिफ्ट कर सकता हूँ?
अजय जी, आपके पास पोर्टफोलियो में और कोई ऑटो कंपनी है, मारुति टाइप के, या सिर्फ ये एक ही है?
नहीं सर, Hyundai के साथ मेरे पास सर दूसरा शेयर है, ये अपना जियो फाइनेंशियल का सर शेयर है एक्चुअली.
ओके, जियो फाइनेंशियल. ओके, तो ऑटो पैक में सिर्फ Hyundai है. गॉट इट. सौरभ,
Hyundai है सर.
गॉट इट. सौरभ, Hyundai ऐसे एक रैंक अंडर परफॉर्मर रहा है. आई थिंक वो 2800 से सीधा ऐसे क्लिफ डाइव टाइप का स्टॉक मूवमेंट रहा है, एंड वो डोमेस्टिक मार्केट में कंटिन्यूसली मार्केट शेयर लूज किया है लास्ट 2 साल में. फंडामेंटली क्या आपको लगता है कि our viewers should continue holding the stock? आपकी क्या राय है?
देखिए, जब एक्साइज ड्यूटी कट हुआ तब एक्सपेक्टेशन यही थी कि बूस्ट मिलेगा ऑटोमोबाइल प्लेयर्स को, और उस एक्सपेक्टेशन में काफी स्टॉक्स चले भी. लेकिन जैसे कि आपने बताया कि स्टॉक जो कंपनी है वो वॉल्यूम्स में हमेशा उसने लैग किया है, बिलो इंडस्ट्री एवरेज रहा है, इसीलिए स्टॉक ने अच्छा प्रदर्शन नहीं किया है. मेरी समझ से देखिए, कोई औचित्य नहीं बनता कि आप इसमें और पैसे लगाएं, बल्कि आपको इसमें से निकलने की चेष्टा करनी चाहिए. और जैसे कि आपने पूछा किसी और क्षेत्र में यहाँ से पैसे निकाल के डाल सकते हैं, तो मुझे यूटिलिटीज का क्षेत्र काफी अच्छा लगता है. इस साल डिमांड काफी अच्छी रहने वाली है, गर्मी काफी अच्छी रहने वाली है और बारिश भी कम होने का अनुमान है. और क्योंकि क्रूड और गैस प्राइसेस, गैस भी की अवेलेबिलिटी कम है, तो इलेक्ट्रिसिटी में जैसे कि इंडक्शन वगैरह में ज्यादा यूज होने की संभावना है. यूटिलिटी सेक्टर अगर आप देखें तो अच्छा प्रदर्शन भी किया है. अगर अभी के 2-3 महीने के पीरियड में देखें, मार्केट को आउट परफॉर्म किया है. तो मेरी समझ से आप या तो ईटीएफ में, यूटिलिटीज के पावर ईटीएफ में पैसे डाल सकते हैं, या कोई ऐसी एनटीपीसी, जेएसडब्ल्यू एनर्जी, निवेली लिग्नाइट जैसी कंपनी में भी इससे हुंडई मोटर से पैसे निकाल के डाल सकते हैं.
Okay, all right. So that's the holistic view coming in on the power space, and of course about Hyundai as well. But moving on to the next one, data patterns is what our viewer wants to know about, and this is from Lavish, who is holding at the levels of who's been holding at since the levels of 3100. Currently, I think data patterns is trading around that 4100 levels. Wants to know if this is the right time to book profits on this one. Gaurav, what would you recommend seeing the charts?
Hi, morning. So the stock has really performed well. It is into the uncharted territory, trading at its lifetime highest point. I'll recommend him to hold his position with a trailing stop, as it is in a good shape and the company is doing very well. 3800 is the stop that he should hold on with, and keep trailing the stop with every rise.
trading stock with every rise is what Gaurav recommends. But let's go across, take another caller now from Hyderabad. And Shweta has a stock query for us. Shweta, good morning. Welcome to Ask Profit. What's your query?
Hi, very good morning, Puneet and Mahima. I'm holding Mahindra and Mahindra shares at a price of 3,300. I have 20 shares.
Okay.
I would like to know, is it good to hold it for a long-term period of, at least for a 1 year, because the steel prices are increasing and the crude is also, unpredictable right now.
Right.
So is it good to hold it, or should I add now, or can I shift to Nestle India or Marico?
Got it. Well, pertinent question there as well on coming on this one from Shweta. But Saurabh, I know you're bullish on Mahindra and Mahindra from the long term. We've seen a correction from almost 3,900 odd levels to 3,000 where it's trading currently. Would you recommend Shweta to continue holding? Is this an opportunity to buy more or shift to Nestle and Marico as she asked?
See, if she wishes to hold for the long term, then I will suggest to hold on. See, this year the stock has underperformed partially because it has run up in the past quite heavily. It got re-rated and now it is a bit cooling off, kind of a consolidation. If you look at the numbers, the company is putting up a good show in all of their segment. And if you compare its valuation, it is at stark discount to even a player like Hyundai, which is struggling with the volume. So my sense is better to stick with it.
Got that view, Saurabh. But time now to take a quick view of the BSE F&O setup there. Let's pull up the heat map for the Sensex, and you'll see, one of the key stocks, of course, has been Sun Pharma for today. Pharma continues to be a pack now, up 7.4%. Adani post Tata Steel, some of the stocks we discussed in the Nifty heat map also doing well, while Axis Bank continues to be under pressure for today. But let's look at some stock-specific action in terms of stocks which are seeing some long build-up in trade today. Sun Pharma unarguably is one of the key stocks for today, seeing a massive build-up of longs. Torrent Power is the other one that's also in focus. In terms of shorts being covered, Hindustan Zinc on the back of results, so is IndusInd Bank, seeing covering of shorts today in the system, while longs are being unwinded on a couple of banking names. So both of them results came on Saturday, not too enthusing according to Street, and there you're seeing longs which are already built up being unwinded in the system. Now selling essentially happening of those or cutting of those shorts as well as the longs that had built up. And in terms of shorts being built up, fresh ones, you're seeing on Paytm, we saw the news and announcement, as well as Shriram Finance post results is seeing shorts being built up as well. So those are some of the key stocks that we continue to monitor as well. But go across, take the next query. This is coming on EPAC Durable. And Krishna Prasad is holding shares at 320 and he's holding 1,000 shares. So it's a considerable amount. Asking what he should do with this counter now. Now, Saurabh, we've seen essentially delayed onset of summer, and Q3 saw build up of ACs as well, but not reflected in the numbers. What's your view on EPAC? Is it a preferred play in the AC space, or would you rather venture into via Blue Star or Amber Enterprises and those kind of names?
I think if you look at the stock performance, it has underperformed the broader market, and these players usually do business at a very thin margin. And now what has happened, the raw material cost has also shoot up, and you cannot foresee how the sales volumes will be in the future. So I think the valuations were also high, which are getting corrected. My sense, it is better to avoid this space, and the sectors we are looking at are utilities, capital goods, banking space, as well as maybe a bit of hotels.
Okay, all right. So that's the view coming in on EPAC Durable. We've got our next caller. Pramod is calling us from Guntur. Pramod, a very good morning to you. What's your query about?
Good morning, madam.
Good morning. Go ahead, ask the question.
Good morning, Secretary India.
Okay.
I bought 30,000 shares at the rate of 43 rupees.
Okay.
Can I hold for long term or exit, and again I can buy to lower rates?
Okay, Pramod, did you see the charts while buying it?
Huh?
Did you see the charts while buying this counter?
I can't understand what happened.
Short term. Okay, all right. I'll take this up with Gaurav then. Gaurav, so GDT India is entered at the levels of 46 and he's got huge quantity. 30,000 is what he said, I think, if I'm not wrong. Do you think he should continue to hold to bounce back to those levels or maybe see some profits, or should he exit?
Well, the stock witnessed steep sell-off from the peaks somewhere around 54 odd levels. That was the earlier January, and it has come down to 36 odd levels. Currently, it is in a consolidation phase. I'll suggest him to hold his position as he has already seen a lot of loss. There's a little bit of chances already there. Take a stop at 40. Hold your position. If the stock manages to go past 44 odd levels, there are bright chances it will head towards 48 and higher levels. So I think this particular chance is worth taking.
That we got up, but let's go across, take another query now, and this is an interesting one. Mohit, who's a regular viewer, wants to know if it's a good time to enter into either of the stocks in REIT or the InvIT space. Now, Saurabh, we've seen a few REITs there in the retail space, Mindspace, of course, on the corporate side, and InvITs, of course, include the road projects as well. So any in that space for the next 3 to 4 years that you like for Mohit?
Will not be able to guide on this.
Anything on the charts, Gaurav? I know it's a difficult one, but because largely annuity business is there, but any that's on your radar?
See, even we are not recommending REITs to our clients, or even InvITs for that matter. We are totally into the real estate segment, and that is what, and the infra segment. So probably not a clear answer on this.
Okay, all right. The next one that we have is on MRPL. So Shira from Benri is holding at the levels of 179, and she's got 5,227 shares. Wants to know the short-term targets on this one, Gaurav. She's sitting on losses of around 28,000 odd rupees right now. Would you recommend her to continue to hold, book losses? What's the view on the charts?
Better to hold it with a stop at 164. The stock may take 1 or 2 days to come down to that level, and if she has some spare cash left, she can even consider averaging at that point and take a stop at 150. In a 2 to 4 weeks kind of a time frame, I expect a reversal in this stock somewhere close to 180, 185 levels are pretty much possible.
Got that view. The other counter coming in now, it's on Shriram Pistons. It's again a stock that's just flown through over the last few months. Viewer Usha from Bangalore holds 200 shares at 3626. So currently entered, I think, very recently. Gaurav, what would you recommend on Shriram Pistons? Is there more up move from these levels as well?
Yes, pretty much possible. The stock is doing exceptionally well, very well placed, consolidating at higher levels after a steep run up from 2,900 to 3,700 odd levels. One should hold on to a position, keep a closing stop at 3,450 and look for targets close to 4,000 and beyond.
The next one is coming in on Irida. Arvind is asking this question. From a long-term perspective, he's been holding 2,700 share of this counter at the levels of 167. Wants to know from a long-term perspective, what is the future growth potential for this one and whether he can continue to hold or not. Saurabh, your view on this one?
I think you have to hold seriously long, maybe more than 2-3 years. Then only you can expect because the stock got re-rated in the past, the valuations are too high, and now what is happening is it is the valuation corrections, and earnings are not matching up with the valuation at which stock is trading in. So you have to seriously wait for long term.
Right, it's time for our rapid fire round. Saurabh as well as Gaurav, you both know the drill. Try to keep your answers as short as possible. The first one is from Arvind on Canara Bank. The possibility of this one reaching 230 anywhere in 2027. Gaurav, on the charts, your view?
Pretty far off. I think you should maintain a stop at 130 and hold the position. Yes, we remain bullish on the PSU banking pack, including Canara Bank.
Rainbow Hospital is bought at 1337 levels. Saurabh by Mahesh. He's asking what's the long-term outlook and if it's a good time to add more at this price.
Long-term positive. You may add another hospital stocks like Apollo Hospital.
Kalyan Jewelers, what would be the right entry price from a short-term perspective is what Sabita from Hyderabad wants to know. Gaurav?
440 and then further add above 460. So these are the 2 points that she should consider in one.
Mahesh is holding on to Poonawalla FinCorp at 407, Saurabh, asking what he should do with this counter now. Is this still strong? Post the QIP, good time to add more?
you can hold it for the long term. Do not add more.
Okay, Prashant from Hyderabad wants to know about Infosys. Is holding 2,493 shares at the levels of 1204. Hold or sell from a short-term perspective? Gaurav?
Sell.
Next one coming in now, it's from Ramesh from Chennai on Eicher Motors. Wants to know if 7247, the level that he's bought at, is a good one. Gaurav, what should he do with this counter?
Absolutely. Hold his position at above 7,600.
Good time to accumulate Karur Vysya Bank. Lavanya wants to know this from a short-term perspective. Gaurav?
Yes, it is good time. It has done well. Expected to post good numbers as well going forward. 340 is the immediate upside target.
Sunil from Vizag has bought into Reliance at 1,300 rupees, holding 108 shares. Asking what he should do with the medium to long-term view. Saurabh, post results, I think it was a disappointing set of numbers, but what's your view on the stock now?
I think many of the segments are doing good. It is the oil and gas and petrochemical segment which seen pressure. I think from the long-term perspective, it is still good. Valuations are on the right side.
Okay, Pine Labs, is this a good buy from a 12 months perspective? Venkatramani from Bengaluru wants to know. Saurabh, your view?
Avoid.
Zydus Life Science bought at 361, holding 30 shares is Shriram. What would you recommend here, Saurabh?
Hold.
HCL Tech bought at the price of 1478. Hold or exit from a 6 to 9 months perspective. Gaurav?
Hold, take a stop at 1100 and book around 1400.
Shobha holds Info Edge at 1354. Gaurav, stocks trading at just about 1,000 right now. Should she hold on to this counter?
What is the buying price?
1354.
Stock is not looking good. Take a stop at 960. Hold your position.
Okay, ICICI Bank 33 shares bought at an average price of 1345. Should I buy more right now from a long-term perspective, Saurabh?
Buy in a staggered manner on correction. Keep on holding.
Navendu is asking if it's the right time to add Medi-Assess for the long term. Any view here, Saurabh?
No view.
EIH Limited 400 shares at the levels of 331. Continue to hold it for the next 2 years, Saurabh?
You can hold.
Next question coming in now, it's on NLC India, and our viewer Vishwanathan is holding shares at roughly around 56, so bought it way ago. Any view here, Gaurav, should he continue to hold?
Yes, hold. One of the strongest mid caps available as of now. Hold with a stop at 295.
IEX bought at the current levels, bought at the levels of 140, average at the current levels from a short-term perspective, Gaurav?
No, do not average. Rather take a stop at 120.
Okay, alright, okay. That brings us to the end of the first rapid fire round of this edition of Ask Profit. Gaurav, thank you so much for taking out the time and helping us answer all those stock-related queries. Viewers, it's time to slip into a very, very short break, but we'll be right back answering all your queries on the other side, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade. spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either give us a call or send us your stock-related questions on the WhatsApp number that's flashing on your screen up there. There you go. That's the number. But on this side of the show, we're also joined by Ajit Mishra, who's the SAP researcher at Redigare Broking, joining us now. Ajit, a very good morning to you. The next question that we have is from Balaji, who's writing us from Chennai, asking about Compton Greaves Consumer Electricals. He's saying that whether this is the right time to make an entry into this counter from a 6 months perspective. Ajit, would you recommend that?
Yeah, good morning, Mahima. So, Mahima, if you see that the last, almost 1.5 years been more of a corrective trend for Crompton, means from 460 to 220. And now we are seeing a bit of a base formation from last couple of months. So possibly, yes, we may see a rebound towards 275, 280 area, and where 235, 240 is the immediate base. So with that as a stop loss, definitely one can look for short to medium term long opportunity. But the actual momentum we'll see in the stock once it reclaims its long-term averages, which is placed around 275 levels. So once we see that, then probably the stock may witness a recovery towards 300 plus zone also. So as of now, 275 is the immediate hurdle, and then probably around 300.
Got that view, Ajit, and welcome to the show. The next question coming in now, it's on Mr. Dhatu Nigam. Our viewer Arnab is holding shares at 342. He's also mentioned that he has data patterns as well as Zentech in his portfolio at this point of time, besides Medani, asking if he should book profits in Medani right now and or should he continue to hold for the next 6 to 12 months. What would be your view here, Saurabh?
Quite positive on the metal stocks, and Mishru Dhatu is the stock where we are positive. I think one should hold for the long term. Going forward, the earnings are likely to rise because of the consistent rise in the metal prices, and it is one of the it is a company which produces a metal which no one other produces. So in that sense, I think it is a good hold.
Okay, the next one is on IDFC First Bank. Rajalakshmi from Chennai is holding 10,500 shares of this one. Bought during COVID. My average buying price is 44, so she's sitting on significant profits right now. Wants to know if she can hold or sell this one and go ahead and buy HDFC Bank instead. Saurabh, would you recommend that strategy? She's already sitting on loss for profit of around 2.5 lakh rupees.
I think she has made a profit, but it is insignificant because she's holding still since COVID, and people have multiplied their wealth like anything. IDFC First Bank recent numbers were a bit positive, but that were not great. And this bank has overall disappointed in the long term. So my sense is better to take profits from the table and do not go for the HDFC Bank. Instead, if you wish to park your money in the banking space, go with a bank like Indian Bank or maybe Canada Bank, or otherwise you can put your money, divide your money into utilities also, like JSW Energy or NTPC.
Got that view, Saurabh. But the next question also very interesting here. Guneet from Mumbai has bought into Azad Engineering at 951, and he was smart enough to buy 100 shares at that time. So he's doubled his money in this particular time frame. Stocks up over 4.4% as we speak now, across the 2,000 rupee mark. Asking if he should, continue to hold given what's the outlook. Saurabh, we're seeing, resurgence in a lot of names with exposure to aerospace. So you've seen Sansera also do well in this space. What's your view on Azad Engineering, especially given the buying price of 951?
Well, the space is looking good, and it is surely it is buzzing also. The stocks are also going up and outperforming the broader market. But only concern is the valuation. Stock is trading at it's richly valued, and even after looking at the growth, trading more than 100 times to its trailing earnings and maybe more than 10 times to its price to book value. I'll suggest to book partial profits here so that he can take his investment back and park your money in the sectors that we have discussed, like banking, utilities, and capital goods.
All right, so that's the view coming on Azad Engineering. We've got Prashant calling us from Bengaluru. Prashant, good morning to you. Go ahead, ask your question.
Yeah, hi, Mahima. So I currently hold a Tata Power 250 quantity with an average buy price of 392, and I'm targeting a exit of around 440 to 460 and want to enter CG Power. So I wanted to validate if it's a good strategy and what would be the entry price recommended for CG Power?
What is the time horizon that you're looking at, Prashant?
About 2 years.
About 2 years. Okay, so then I'll take this up with Saurabh. Saurabh, do you think that's the right strategy?
I think he can do it. He can wait for his target price in the Tata Power because utilities are anyway going up, and CG Power is also looking good for the long-term investment purpose. So he can go ahead with his strategy.
That view, Sun Pharma also continues to be in focus, and we've mentioned about the big acquisitions the company has done, seeing some pullback from those level of 8% now. Management is expected to speak very shortly, so we'll get you that bite very quickly. But before we do that, let's take couple of more questions now as we speak. The next one's coming from, those are the visuals that we were speaking about. On stage, of course, you have Dilip Shanghvi. He is, of course, the MD and CEO of the company, and a bigger acquisition there of almost $11.75 billion. Probably the one in this decade that will define the next one for Sun Pharma, especially in the biosimilar space. And you've seen that the last one we spoke about at the start of the show, that Ranbaxy Taro, led the company into where it is today. With those two acquisitions in the 2010s and the 2015 era, you're seeing now coming into the 2020s as well, where a big acquisition has been announced by the company. And given the historical evidence, you're seeing such a big up move on the stock today. A conference call was held today in the morning as well, but let's cut in and listen to what the management has to say.
Good morning, all of you. I'm happy, excited, also a little bit anxious. It's a large transaction that we are entering into. In a way, I think it kind of reminds me of announcing the Ranbaxy transaction. At that point of time, we were, of course, a much smaller company. But at that time also, we were buying another company which was almost 80% of our company in terms of size. We did not pay for that acquisition through cash, but we paid for that acquisition through a much more expensive currency. We paid through our stock. And dilution to Sun Pharma shareholders was close to 20%. Kirti will present the details to you about both the companies, and you will see that Organon in terms of size is more or less the same as that of Sun Pharma. In terms of profitability is maybe even little bit higher than Sun Pharma. However, the transaction values Organon at less than 25% of the Sun valuation. So the key difference in my mind is the difference in our growth trajectory. Sun has been consistently growing and Organon has not been growing. So we know that for us to create value, the key driver is to find a way to grow this business much better than what it has been able to do. It'll possibly require some investment, some focused effort to improving processes, and also many of the other tools that Kirti says we plan to use so that we can reignite the growth of the company. But what is more important for me is that it gives us a global presence. It gives us a ability to license products globally, also launch many of the products that we already have in our pipeline in many geographies that we are not currently present in, and those are interesting geographies. However, I think some of the concerns that people have expressed to me are related to large size of debt that we might have to raise to pay for the company. We will be, of course, using our own cash, but we will also have to raise some significant debt. So I think I want to remain objective. This debt, even though large in terms of overall size, it's still going to be 2.3 times the combined company EBITDA. And we have a focused effort towards finding a way to minimize the debt by finding a way to repay the debt as early as possible. I mean, all of you who've been tracking the company for a long time, you know that we've been either a low debt or maybe a significant cash positive company for a long time. And even the debt that we got as a result of Ranbaxy acquisition, we found a way to repay it in the shortest possible time. So that would be our effort, that would be our focus. But we will still have ability to do business development deals, and we will focus on investing our investable surplus into products which are close to market and products in therapy areas of our interest. The other important issue is the ability to repay the debt. I think Kirti and Jayashri will share with you what you call combined company cash flows and what is it that we can theoretically achieve. Other important issue is the dividends that we pay. We know that for investors, especially who invest in emerging market, dividend is one of the attraction for them to invest. So whatever decision that we will take for what to do with the future dividend policy, we will factor this preference and liking of our shareholders while we take a decision, and we will keep people informed. As on today, when we've done the cash flow calculations and our desire to repay the debt, I think we've kept a provision so that we will continue to have the dividend maintained. But I think greater clarity for all of you and also subsequently questions from you will help people understand the logic of the transaction and also why we see ability to create significant value for Sun shareholders as the time passes. So thank you.
Good morning. And thank you for coming on such a short notice. Today I feel very excited and very proud. This is a historic day in Sun journey as we are accelerating the Sun's transformation toward becoming a global pharma company. I think in next 15-20 minutes I will try to explain you the deal rationales and what is a compelling story, why these two companies are coming together. And we'll also take some of your questions, some of your doubt. So that should also help you to understand the rationale behind acquisition of Organon. So there are initial few slides about Sun. I will run them through fast and then talk more about Organon. These are some disclaimers and forward-looking statements. So all of you know Sun well. We are like a $6 billion company present in 100 countries. We are number one in India. We are number one in another 2-3 geographies like Romania. And 20% of our business comes from innovation. So what we have been focusing for last few years is to increase the innovative part of the business. And then we have a strong balance sheet, $3 billion of a cash as on FY25. So this is all about Sun. That is a business part. Second is, like you know, Sun is all driven by values of Sunology. We always focus on patients. I always look at how do we solve unmet needs of patients. How do we come with new product which will solve some of the patients' problems. And third thing which is important is the execution rigor. And Sun has been doing things well, executing it well, and that helps company to grow to the next level. If we look at our track record, which Dilip Bhai also mentioned, is acquisition of Taro, Ranbaxy. I think post-acquisition, we did well. We grew the business. We also integrated the team well on both the side. And the new Sun, which was formed, was growing faster than what we used to go earlier. This is a history of Sun, and these are the not all the milestones, but major milestones is like which includes the acquisition of the companies on the top, and on the bottom is some of the major licensing deals what we have done. So 2010 around we acquired Taro, then of course DUSA was entry into dermatology, then in 2015 Ranbaxy, which was also like same size of the company. We were 2 billion, Ranbaxy was also 2 billion at that point of time. And then Concert and Checkpoint acquisition happened recently. Incidentally, the Illumia product which we have licensed from Merck was developed by Organon. So this is just a coincidence, like we are acquiring a company which developed this product historically a few years back. So what we have seen in last, say 15 years, if you can focus on the bottom part of the slide, is like from 2010 to 2025, our CAGR of revenue is 14.4%, and the EBITDA is also in line, almost like 13%. So consistently, the objective for the business is to continuously grow the business, and sometimes some of the businesses are also growing faster than the market. What's Organon? And I will spend maybe a couple of minutes on this slide because earlier part was more on Sun. So Organon has 3 business verticals. One is a women's health. And women's health is mostly an innovative part of business. In women's health, in contraception, they are number 2. In fertility, they are number 3. So that's one part of the business. Next big part is the established product business, which is almost like 50%. And there are strong 50 brands. Some of the brands I will also show is like a household name. Every SCP, doctors, patient knows this brand. And out of this 50 brands, 15 brands, 15 brands are large size, and that is 100 million and above. What Organon also helps us is our entry into biosimilars. So we become like the number 7 players worldwide in biosimilars. I think the next point is most important, is what I will keep repeating throughout my presentation, is what Organon is giving to Sun, is a global commercial presence and a global platform to commercialize our existing product as well as future products. And it also gives us entry in some of the markets where we are not present today. And one notable market is China. And I will talk about more details in China going forward. In terms of manufacturing footprint, Organon has 6 sites, 3 of them in the EU and 3 in the emerging market, and has a good manufacturing footprint where most of the product they are able to manufacture on their own. So this is a business part, but even if you look at financially, it's a very stable EBITDA company where the margins are in excess of 30% over last 5 years. And they are generating free cash flow of about $1 billion. And most important is the history of any company like Organon has a legacy of more than 100 years. And in these 100 years, they have developed complex products. They have developed complex biologics, like I said, Illumia. Like that, new biologics were also developed in Organon in the past. So all of these things, how does it help Sun to achieve our transition and go to the next level is what will follow in the next part of the presentation. So three parts of the business, women's health, and some other innovative products. So the top four products are women's health product. The biggest product is Nexplanon, which is a contraception used for 5 years. Then we have product like Folistim, which is also into women's health fertility. Then there are two products. One is Imgality and Vitama. They are for, say, migraine, and Vitama is for dermatology. So this is almost like 33% of the current revenues of Organon. But more important is a central piece, which is established product. And some of you may be very familiar with some of these brand names like Zetia, Atozet, Hyzar, Kozar, Singular. These are like, though they are not like a consumer product, but they are recognized brands and well-known brands across the world, not only in India, but mostly outside India. This part of established brand contributes almost 55% of the business. And third area, which is also equally interesting, and I will explain you in more detail, is biosimilar. So currently they have 5-6 products in biosimilar, and that contributes around 11% of the revenues. So coming to all three areas, I will explain. Like women's health is a large unmet need. So today the market size is almost like 35 billion, growing at 6 to 10%. And there are more than 100 opportunities or assets which are under development in women's health. So what I'm trying to say, for growth of the business on women's health side, we may have to do future licensing, and such assets are also available. And this is an area where the complexity of developing product is also very high. So for somebody to really replicate or come with a generic product is always has been challenging. In terms of, I think ranking, I already told they're number 2 in contraception, number 3 in globally, and also have a complex product like Nexplanon and Nivaring, which are difficult to develop. Coming to next part of the business is which is established brand business. So established brand business, I will correlate to like what we do branded generics in India. It's very similar. These are the brands which were launched before patent expiry, and they continue to do well. As an example, like some of these brands having multiple generics in many markets. I'm just giving as an example, like Propecia in China is a very big brand. In spite of there are 25 to 30 generics being available. So all these brands, 50 brand has a strong brand equity and very close association with both SCPs as well as the patients. And they want to use this brand in spite of availability of many generic products. So like that, Organon is present in cardiovascular, bone health, Nasonex and Singulars are very strong brand in respiratory. And then they have other brands in dermatology and also Propecia and Proscar. So very strong brand franchises, out of which like 15 brands are about 100 million. And this is a big portfolio. So why I'm talking to you about this portfolio? Because what do we do this portfolio going forward to grow the business? That is a question I'm anticipating from all of you. So as a Sun Pharma as a company and with our background, we understand that how do we develop the line extensions of these brands? How do I combine this product one with another? How do I have a new forms of this formulation which can help us to grow this franchise going forward? Third piece of the business is biosimilar. So this is also like entry of Sun into biosimilar. We have a very small biosimilar business in India, but outside India we have no biosimilars. And if you look at the track record of Organon also from 2021 till 2025, this business is growing at 13% CAGR. So it's a good business and continues to grow. But what is more important is the future opportunities. If you look at the IMS, what it tells you, there are $320 billion worth of biologics which are losing the patent by 2035. And roughly, if you convert this 320 billion into a biosimilar market, there can be an opportunity for us to look at like something like 70 billion type of a market in which we can play. So today there are 6 products, but it also gives us an opportunity to in-license more products in biosimilars and make them available globally across the markets. So it's a transformative opportunity for Sun, and what I'm looking at is how do we use this platform to grow the business faster. So I'm focusing on only 2-3 part of it. One is the innovative part I will discuss with you. Then branded generic play, where we have a lot of experience in India and emerging market on how do we promote this brand to the doctors. So similar will be used when we look at established product business. And biosimilar is a new opportunity, like we will be ranked 7 globally, and there is opportunity to grow this business. The last important part on this slide is also this commercial platform can be used to become a licensing partner of choice, and that would also bring next level of growth. So if you look at the innovative portfolio of both companies together, women's health is a area we are adding into our innovative basket, which was not there earlier.
All right, so you heard the management talk about what this acquisition exactly means for the counter. The counter is up almost 7% as we speak, almost at its day's high point. But with that, viewers, completely out of time on this edition of Ask Profit, but do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharp voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit for your...
Hello and welcome to Know Your Company. I am Mahima Vachharjani and today we're going to talk about a very interesting company. It's called Rushil Decor. Now why is this interesting? Because this is one of those companies that is into and one of the leading manufacturers, by the way, of MDF boards as well as laminates in India. Not just in India, they're expanding in terms of geographies internationally as well. Now they've got 100 plus years of lineage when it comes to wood engineering. In terms of the products that they make, they've got a very big experience coming in. Recently, they entered into manufacturing of jumbo laminates as well. This is going to be one of the key drivers for them going forward as well. It's one of the third largest market share. It has one of the third largest market share in terms of MDF boards in India right now. In terms of the overall experience in terms of both of these products, their main key hero products, 32 years plus of experience in MDF boards as well as laminates is what the company holds. In terms of the product range, they've got 1200 plus designs when it comes to both of these products, that is MDF boards as well as laminates. In terms of the product range, in terms of brands, they've got 6 distinct brands. Even in terms of the applications of these products, it's used across commercial as well as residential furniture, also used in wall paneling and others. So it's got varied range of areas in which all of these products are used. Now, it of course is seeing increase in focus of value-added MDF boards. Plus, considering that housing development is going to, pick up going forward, they're in for a huge growth coming in as well. In terms of distribution, they've got 700 plus direct distributors. In terms of retail distribution, also, if we can, pull that number up, they've got 4,700 plus retailers and dealers present right now as a whole. In terms of manufacturing, they've got 6 manufacturing facilities across India, of which the breakup is that one MDF plant is in Andhra Pradesh, 2 of their MDF plants are in Karnataka, and they've got 3 laminate plants in Gujarat. They've also now recently, the entire unit of, jumbo is also started. But before that, let's take a look at the installed capacity and capacity utilizations as well. For laminates, the installed capacity is 34,92,000 sheets per annum. The utilization for this one as of 9 months FY26 stood at 89%. For MDF boards now, the overall capacity stands at 3,30,000 cubic meter per annum, and the capacity utilization here stands at 72%. They are of course planning to scale in when it comes to the capacity utilization. We'll ask the management about the same. In terms of total capacity for jumbo laminates manufacturing platform, that is around 28 lakh sheets per annum. This is a very recent one that they've opened in Gujarat, the plant for this one in 3 different phases. And the jumbo laminates has opened key access to key Europe markets as well. So this is something that is going to expand their international horizon. Now VIR as a brand has also expanded across 57 countries. So that is also one of the key developments that we'll be tracking for the company. In terms of certifications and quality, that also supports their export growth. So all of these 3 points that I mentioned are very important when it comes to their international expansion and accessing the global markets. Plus, the product quality and manufacturing certifications give them an advantage in driving export sales growth, and that is going to be one of the key factors that leads to their key growth going forward as well. This is everything that you need to know about the company. Let's also take a look at the parameters that we're going to look at and assess the company for Rushil Decor as a whole. Let's try to pull that up and see in terms of what parameters are we going to take a look at. The first one that we're going to keep an eye on is the income statement. We're going to talk about how the company has done in the past year in terms of revenue, EBITDA, margins, as well as PAT. The next one that we're going to talk about the balance sheet as to how healthy it is in terms of its borrowings, its cash positions, as well as in terms of where the equity stands. Cash flow, we're going to talk about how cash flow from operation has fared over the years and how EBITDA is getting converted into that cash flow from operations. And we're also going to talk about return ratios as to how the ROC of company has fared so far. Then we're also going to talk about the shareholding pattern, whether the promoters have skin in the game, what are FIs and DIs doing with regards to this counter. All of that we're going to discuss in shareholding pattern. Then we are going to talk about street cred. Now, street cred is something that will tell you as to how the stock has done over the years. We're going to break that down into different time frames as to what kind of return it has given to its investors. Then we are also going to talk about valuations, because that is an important perspective as to how this particular counter stacks up against its peers and what is the outlook looking like in terms of where the valuation stands. And that's the outlook part also we are going to separately discuss in the 8th parameter, and we're going to talk about as to what is the guidance that the management has given. Now let's take a look at the first parameter, that is the income statement. Now if you take a look at the last 3 years for this counter, the 3-year CAGR, we've taken FY25 up to FY25 numbers for simplicity of understanding. 3-year CAGR in terms of revenue stands at 13%, but if you take a look at the last 3 years, the revenue has been range bound in that 800 to 890 odd crores. EBITDA has also seen a similar CAGR of 13% in the past three odd years, and what we're seeing is that overall revenue as well as EBITDA both are growing hand in hand. But PAT overall, if you can go back to the previous slide once, overall in terms of the PAT numbers as well, we've seen a good growth of 28% when it comes to the 3-year CAGR, but the last 2 years the PAT has largely remained in that 40 to 45 odd crore range. Let's take a look at the margins as well. Margins is something which is concerning because that's dropped from FY23 to FY25 from a 17.8% to 11.8%. This we're going to talk to the management about, but I think the main concern here is with regards to the rise in raw material cost inflation, and I think that is the reason as to what is putting pressure on margins. And plus I think probably they're going ahead and spending in marketing spends as well. We'll try to understand of course that part from the management, but overall in terms of the overall CAGR plus the margins, considering margins into picture, we've given it a neutral rating when it comes to the income statement. Let's take a look at the balance sheet as well. In terms of the overall picture when it comes to the retained earnings, that has grown steadily over the past 3 years from a 344 odd crore to a 600 odd crore in FY25. So that there is no problem there, completely a thumbs up. In terms of the debt, that has been reducing, considering both the long-term and short-term debt. It stood at around 400 odd crores in FY23, gone down to 267 odd crore in FY27. This combines both long-term and short-term borrowing. We'll try to understand from the management as to what are their plans going forward when it comes to debt reduction. Cash in bank is the other factor which is slightly concerning, because overall their average cash flow has remained in that range of 5 odd crores. So we'll try to understand from the management whether they're planning any fundraise and apart from that, what are the plans to retain cash going forward, because if you take a look at the cash flow picture as well, I will try to understand as to how the net cash flow position has remained zero throughout the years. They've overall managed to grow in terms of their operating cash flow to EBITDA number, which is a healthy number for sure, from 77% to 102%, but overall slightly in terms of cash flow from operation has been reducing a tad bit, and the net cash flows have remained zero, which is not a concern when there's conversion happening in terms of EBITDA number. But overall we try to understand from the management with regards to what are their plans are when it comes to the cash position. But because the ratio is healthy here, we've given it a thumbs up when it comes to the cash flow statement. Let's now try to understand the ratio aspect and see as to how return ratios have fared over the last couple of years. Let's try to look at that chart. It's an interesting one. It went to 16 odd % ROCE in FY23, but since then it has come down. It's come down to 12% in FY24 and 10 odd % in FY25. So we'll try to understand from the management as to what the internal targets are to grow that ROC percentage, and because of it declining in the past 3 odd years, we've taken a conservative approach here and given it a thumbs down when it comes to the return ratios. Let's try to pull up the shareholding pattern. Now, the promoters have largely held their stake in the company, so there is skin in the game. It is above 50% mark. So overall, that has remained largely stable in the past 3 years. When it comes to the FI holding, not much of an interest for FIs and DIs both here, because FIs have largely maintained their 1.2-1.3% stake in the company. However, there's public holding which is very strong on this one. 42% to 44% it's gone in the past 2 odd years. Because there's no FI DI interest that we've seen in this counter. Of course, it's also a very small market cap company of around 500 odd crores, and that is why probably we're seeing less FI DI interest. But considering that approach, I think we've given it a neutral rating for now. This is the number of shareholders that have grown in the past 3 odd years, from a 24,000 number to a 50,000 or 74. This is of course in of thousands. Let's try to pull up the next slide and see as to how the street cred has been right now. Interestingly, in the past 1 month, the stock has gone up almost 22%. But if you take a look at the performance from a larger scale, 6 months it's down 39%, YTD it's down 28%. 1 year, the stock is down 29%, and 5 years, it's not done anything. It's just given return to its investor by about 5 odd percent. And considering that, I think we've given it a thumbs down for now, but we'll have to wait and watch out for whether that 1 month move that we've seen in the past 1 month will continue in terms of momentum or not. So that's with regards to where street cred goes. Now let's take a look at the outlook picture as well, because the management has given guidance when it comes to FY26 as well as FY27 going forward. But before we do that, let's take a look at the peer comparison as well. In terms of the peer comparison, Rushil Decor is one of the cheapest stock available right now in this space, because if you take a look at Century Plyboard, that's trading at 72 times, Greenlam Industry trading at 313 times versus Rushil Decor just trading at 16 times, because Stylum and Greenply are also trading at 27 times and 40 times respectively. So Rushil Decor right now is one of the cheapest stock available in the entire space of MDF as well as laminate. So that's why we've given it a thumbs up when it comes to the valuation, but we'll have to wait and watch out for as to how growth for the company fares going forward, because that will also determine as to how valuations fare. Lastly, in terms of outlook, FY26 revenue, they're targeting around 900 crores. They did around 890 odd crores in FY27, so not much of a growth as compared to FY25. EBITDA margin is expected to be around 8 to 9%, which is slightly lower as compared to what they did in FY25. So we'll ask the management as to what the plans are going ahead. FY27 revenue, however, they're bullish when it comes to the FY27 revenue. 1,000 crores is what they're at least aiming at. Overall, in terms of EBITDA margins, they are expecting this to go up to 10 to 11% from at 8 to 9% in FY26. So this is the overall guidance given by the management of company. Strong guidance coming in for FY27, and that's why we're giving it a thumbs up when it comes to the outlook. So that's with regards to where, of course, the overall parameters go for the company. Let's now take a look at what ratings have we given for this one in terms of the total overall ratings for Rushil Decor. Let's try to pull that up and see. For income statement, we've given it a neutral rating considering margins declining. For balance sheet, we've also taken a conservative approach here and given it a neutral rating considering the borrowings picture. Cash flow, we have given it a thumbs up because operating cash flow to EBITDA is a very healthy ratio for the company. Return ratio, we have given it a thumbs down because the ratio has been declining when it comes to the ROCE number. Shareholdings, we've given it a neutral rating right now because it's a small company, no FI, DI interest. So just a conservative approach is what we've taken. Street cred, 5 years, the stock has not done anything, and that's why we've given it a thumbs down. But of course, we'll be watching out for, because in the last 1 month, there is momentum seen in this counter, and we'll keep an eye on what happens next for the company. Valuations, most certainly a thumbs up, because one of the cheapest stock available in the space at 16 times right now. Going forward will become cheaper as well, but growth is something that we'll be watching out for, and outlook definitely a thumbs up. The guidance given by the management for FY27 is most certainly a bullish one. So that's with regards to Rushil Decor goes. The overall rating comes out to be 4.5 out of 8 for Rushil Decor. So that's with regards to where the final ratings go. But viewers, time to slip into a very, very short break. We'll be speaking to Rushil Thakkar, the managing director of Rushil Decor, on the other side of the break. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall
Ecosystems.
Welcome back. You're watching Know Your Company, and we were talking about Rushil Decor. We've given the company a rating of 4.5, healthy financials going forward, and healthy guidance also the management has given going forward. And let's talk to, in fact, Rushil Thakkar, the managing director of Rushil Decor, who is joining us now. Rushil, thank you so much for first of all taking the time and speaking with us at NDTV Profit. My first question is with regards to how we've analyzed your income statement. Just want to understand, you've already given FY27 guidance of that 1,000 crore odd mark. In the last 3 to 4 years, there has been a tepid growth, and this I suppose is considering the growth in terms of how industry is going in terms of real estate as well. Plus, there is raw material cost inflationary pressure continuously on you. But what gives you the confidence of achieving that 1,000 crore in FY27? What will be the triggers going forward?
So first of all, good afternoon, and thank you, Mahima, for the opportunity. So as we look to grow towards the 1,000 crore company, so first of all, our Jumbo project is now in place, and all the research and development which has to be done has been in place, and we are opening up the markets in Europe and Northern America and Latin America, which will grow our export revenues in laminate. In terms of MDF, we are growing with the value addition. So our target is to reach 50% of the total capacity with the value addition, which will give us another boost in the top line and also in the net margin ratio. So we are very clear with and focused with our vision, what we want, and that's how our company will be growing at this year for 1,000 crores.
Okay, Rushil, with regards to your margins, you've said that you'll do 8 to 9% this year, but that will go to 10 to 11% next year. Considering the West Asia conflict into consideration, that has probably pushed your raw material inflation further, if I'm not wrong. Do you think those margin levels are still achievable in FY27? What is the hit that you've taken in FY26, and what is it that will, be followed through in FY27?
So yes, price hike we have taken in MDF roughly around 15%. Our first hike was in April first week, which was around 10%, and the second hike we took somewhere around 10th of April, which was somewhere around 5%. So, and looking at the current scenario, yes, our prices are sustainable. When we talk about our HPL business, we have roughly taken 18% of price hike in 1mm, which is our premium product, and slightly lower in the lower range of the side. So margins are retainable. Talking about the chemical prices, yes, the chemical prices has gone up drastically, and we are trying our best to procure at the best rate possible and sustain our margins what we have already committed. But speaking towards the margin for this year, yes, we are expecting to have EBITDA margins of roughly around 11 to 12%.
Rushil, with regards to the overall cost price that has gone up for you, just want to get a sense as to how much of West Asia conflict has actually impacted you right now, and will that hit be taken forward in FY27 is what I want to understand.
So currently, yes, our strong markets are Far East and Gulf. Gulf has given us a good hit for MDF exports, but now we have slightly looking towards the other part of the world as well, and we are exploring some more customers. So we are expected just not to depend on one country for our MDF export, just one continent for our MDF exports. And talking about laminate, yes, laminate, we have a vast number of countries, like we are operating in more than 63 countries currently. So West Asia conflict has given us a hit in terms of MDF, but in laminate, yes, we have other trajectories where we are working very strongly. And talking about again the coming back to the raw materials side, yes, our majority of the raw materials in chemicals come from Gulf, and which has given us a higher impact in terms of cost increase.
So then, Rushil, I want to understand as to what's your difference between, breakup between your exports and domestic sales right now, and how will that fare in FY27? How does that change things, and that, having impact or bearing on your margins?
So first of all, when we talk about laminate, our laminate turnover is 65% from exports. And when we talk about MDF, our 20% average is out of the exports. And combining both together, around 25% of the turnover comes from the exports. That's how the blend of the turnover is. Domestic in MDF is the major part where we are playing, and it is a major part of our top line as well. So considering that, yes, the ratios we will try to increase up to 30% for exports in both the products. That's what our target is.
With regards to your debt, Rushil, that stands at around 139 crore as of FY25. This is the long-term debt that I'm talking about. Any plans of bringing that number down in the near future? I mean, you might have reduced it in FY26 already. So if you can give us a perspective on that number and then going forward in FY27 as well.
So our yearly repayment to the debt for the long term is roughly around 50 crore rupees every year. So considering that we have already paid the 50 crores for this year, so we consider ourselves as a debt-free company in upcoming 2 years.
Rushil, the other aspect is with regards to your cash position, because on an average you have maintained that cash position anywhere between 5 to 10 odd crores. Do you think that you have more requirement in terms of where the cash balance stands, and would you be looking for any fundraise going forward, maybe for that reasons?
No, currently we are comfortably operating with our cash ratio what we have, and in current stage we are not at all looking for any fundraisers from the public or any kind of offerings from the public or any private equity, and we are clear with it that in this financial year we will not be raising any kind of fund.
Okay, got it. Rushil, for your ROCE number that has declined in the past 2 years from that 70% mark to that 10% mark, if I'm not wrong, any plans on internal targets to raise that number going forward? And if yes, any range that you would want to give in terms of how that number will fare in FY27?
So if we compare our ROCE with the FY23, the 23 was something really very, very good year for us because of certain things. We had a newly installed capacity in hand and everything was online. But when coming years ahead, there were too many domestic competitions started, because of which there were too many internal domestic competition and conflicts going on. Now it is a time that we are seeing that we'll be growing, but I can't give you the indication at with what percentage the ROCE will be growing. But I would assure you that the current ROCE which we have will be maintained in any case.
So then with regards to your installed capacity right now for both laminates as well as MDF board, laminates I think utilization stands at 89%, which is a very healthy number, and so is for MDF boards, which is at 72%. What is your blended utilization at currently right now, and how will that number go going forward in FY27? Because even the jumbo laminates manufacturing is, if I'm not wrong, now fully operational and will start contributing to your overall capacity utilizations.
So in HPL, when we see, we divide it into two parts. One would be the jumbo facility, which we are operating currently at roughly around 25%, which we have targeted to utilize more than 55% this year. Talking about the old facility or old capacity, what we have, we are utilizing at the peak somewhere around 85-88%. And in laminate, there are too many permutation combinations on which the capacities are calculated. So in the older side, we are not expecting that we will be having a long difference between the capacity utilization. It will stand somewhere around 85 to 90% depending on the project, depending on the product mix. In jumbo, yes, we'll be increasing to 55%. Coming towards the MDF, our capacity blended with both the units, Visakhapatnam and Chikmagalur, is somewhere around 87 to 90%. And in our Chikmagalur facility case, we have almost utilized sometimes up to 120% also. So we don't see a capacity concern rising as of now for this financial year, and we are very confident to utilize that MDF capacity to about 90% as well in blended form.
All right. Thank you so much, Rushil, for helping us answer, in fact, all those questions so candidly and taking out the time and speaking with us at NDTV Profit. So that was, of course, the management of Rushil Decor. But, let's cut across to Sun Pharma's press conference where NDTV Profit team is speaking with the management. I think Varsha is speaking with the management. Listen in.
Who also develop product for specific region or areas. Like in our past experience, we have seen a lot of companies, they develop product only for US. And then they license out for the rest of the geographies. So the combination of both these, some of the innovation from China and from the rest of the world, we will be able to license a product which fits into the new therapy area what we have today with the addition of Organon, and that should help us to grow further, including China for China is one of the example. Like we can also look at some of the assets licensing from China for China, because it's a big market and it would justify licensing for even single country.
Mr. Sanghvi, hi, this is Varsha from NDTV Profit, and congratulations on the deal. Investors are really happy on this deal. But my question is that you are acquiring an asset which has a high debt and has a slow growth. Why not invest in your own innovative portfolio versus buy this asset? I mean, what's that single biggest moat that you see in Organon due to which you have, you are planning to acquire this? Thank you.
No, I think that was the part of the presentation, is that while we will continue to invest in R&D, we will require infrastructure globally and relationships in all these geographies, so that when we launch our product, we are able to get meaningful market share. Now, for Sun alone, on its own, would have taken a much longer time to reach where we can potentially reach post the Organon acquisition. This does not change our investment philosophy for investment in innovation. It also does not change our approach to finding a continuous way to grow the business. As Kirti says, it actually significantly enhances our ability to grow in our markets where we are already present, and gives us opportunity in new markets like where we are currently not present. So like we are not present in most of the countries in South America, Korea, Taiwan, China. We get a direct presence. Middle East, even Turkey, many countries there we have no presence. So it gives us an ability to launch whichever product we develop in a much bigger geography. I think Kirti says that we've launched Illumia only in 35 markets. In many markets we don't have either a licensing deal or a direct launch. So we can leverage this to sell many of our innovative products also in those geographies.
Ben, this is Ben from the New Dennis Plus. You spoke about further investment in the company. Can you give some clarity on that? And plus, have you reached the financial closure for the loan debt side of the deal?
So,
not clear what you're asking.
Ben, can you ask your question again, please?
No. Mr. Shamki spoke about further investment into Organon. Could you give some clarity? What?
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
But
benchmarks trade in the green, broad-based gains seen across the market, powered by sectors like pharma, IT, real estate, and metals as well. Financial services and Nifty Bank remain on the back foot. Paytm is under pressure after the RBI cancelled the banking license of its associate entity, that is Paytm Payments Bank. Paytm has issued a clarification stating that the regulatory action would not disrupt its Paytm operations as usual. Reliance Industries reports below than estimates fourth quarter with pressure clearly visible on the margins and profitability. Axis Bank delivers in-line numbers while RBL Bank sees a strong quarter. IDFC First too sees improvement in its asset quality. Sun Pharma has signed a definitive all-cash deal to acquire Organon at a 24% premium compared to the closing price that we had seen for the company. Now, this deal is expected to close in early 2027. Company says its top priority post-deal will be a focused effort to reduce debt and strengthen balance sheet. Brutal heat wave across North India turns up the heat on air conditioner makers and power companies. Stock edge higher as investors bet on stronger cooling demand and a spike in electricity consumption. Good afternoon, you're watching Markets at 12 with me, Somit Sarkar. This is the show where we get you the updates on the top buzzers and news updates on the at noon. But first thing first, let's have a quick look on the markets. If you look at the markets, we have conquered the 24,000 level, and for the last few hours, we have been quite a range bound. From 24,000 to 24,100 is the tight range where the benchmark has been moving across. If you look at the banking names, those are in red, largely led by Axis Bank, ICICI Bank, AU Small Finance. These are the main culprits that have led the Nifty Bank Index or Nifty Financial Index down in trade. Apart from that, the sector indices that are gaining in trade, it's Pharma and Metal Index. Pharma is largely led by Sun Pharma and Metal is largely led by Hindustan Zinc. If you look at the F&O names as well, Sun Pharma is a top gainer, followed by Torrent Power, OFSS, Amber Enterprises and Hindustan Zinc. All stocks are gaining anywhere between 4 to 6% in trade. Apart from that, all other power stocks have also been gaining in trade. On the flip side, it's Axis Bank, Shriram Finance, RBL Bank, AU Small Finance Bank, all financial service or banking names that are trading in red. Paytm is also down around 3%, 2.5%. In fact, it has recovered very nicely from the day's lowest point. At one point of time, the stock was down around 8%. Right now, it's just down 2.5% in trade. Jubilant Foodwork, Bharat Electronic, Keynes take down anywhere between 1.5% in trade. Let's also welcome in our fundamental guest, Sonam Srivastava, founder and fund manager at Right Research PMS. Sonam, firstly to understand, how are you looking at the markets on an overall basis? Are you seeing a good growth in earnings, or earnings have been subdued? What is your understanding here?
No, definitely. I think the earnings have been better than expectation right now. If you see, there are more upgrades and downgrades that I can see. Even the stock is seeing strong reaction after earnings, and I don't see that there's a very adverse earning that might have come. So I think the earnings season definitely is looking positive as of now, but there's a long way to go, right, for the whole season to complete. And yeah, I think today's up move in the market is definitely coming after 3 days of consistent correction in the market. And we expect this up move to sustain. And I think if the Nifty crosses 25,000, that could be a very positive sign that could trigger a further up move.
Okay, and overall sector-wise, which is the most attractive sector that you're finding, given the fact that sectors in which you're expecting earnings growth to be stronger?
Okay. See, I think sectorally, you definitely, I think banks, you have a strong expectation. But our stronger sort of expectation will be coming from the auto pack, right? From the auto financiers, even auto ancillaries. I think that's one of the favorite sectors in the market right now. We also like, some of the metals in this space. We like a few industrials, stocks in this space. So I think that is where we see a strong growth coming in. On the other hand, you would see, decent earnings coming from banking, pharma, and that pack as well, right?
And on the flip side, which are the sectors where one should avoid, given the fact that earnings growth are not expected to be that strong and valuations are also on the expensive side?
So I think, you're not expecting a very strong earning coming out from the IT pack, even though, DCS gave decent numbers. So I would probably be a little bit careful over there, but valuation definitely are quite low, right? So I think you have to look at that as well, and you can see people are strategically taking bets in the IT sector. So I would say that avoid it, but we're not expecting some extraordinary earnings coming out. I think on the FMCG pack also, or other companies which have a lot of dependence on crude prices like paint, etc. You can see they are at the absolute bottom, and you might not see strong up moves coming out after this earnings season.
Okay, and banking is one of the names that I actually wanted to discuss with you. See, if you look at the other banks named like ICICI, HDFC Bank, the numbers were not that great, but we haven't seen an up move in these counters. Even Axis Bank, for that matter, the numbers are not bad, but we are still seeing a downtick coming in this counter. So how should one read into the banking names right now?
See, I think, if you're expecting a strong up move from here, you might not look at banks to be your biggest growth drivers. But what I would say is that banks definitely will be the stability driver, right? So if there is any volatility or any trouble in the market, banks should be, the stable core of people's portfolio. And like you said, earnings have not been bad. Earnings have been pretty decent. I think ICICI, HDFC, they gave with positive. Even Axis Bank has outperformed various brokerage estimates. I think Citibank came out with some concern for Axis Bank, which could be one of the reasons why we're seeing some correction. But yeah, I think banks could be the stability drivers. The market itself right now, you've seen a strong recovery, but we're not out of the woods yet. And banks can definitely be the strong anchor in people's portfolio. But yeah, I really like the NBFC sector. So we saw very strong numbers come out from M&M Finance and Canfin Home, which are both of these stocks where we have holdings. And you saw M&M Finance actually double its profits, right, in the current earnings. So I think I definitely like the financial services, and I expect banks to be a stable core.
Sonam, hold on. Varun Beverages has come out with its numbers, a stellar set of numbers, in fact. If you look at the net profit, it is a beat of around 3% compared to what the street was anticipating. Strong beat on the margin front and EBITDA front as well. Let's get in Mahima with more details on Varun Beverages here.
Right, so Amit, so as you rightly mentioned, it's most certainly a beat versus what the analysts were expecting. In terms of the top line, the beat, excluding the excise number, is around 500 crores and including the excise is around 300 odd crores when it comes to the top line. In terms of the net profit number, also the expectations were that the net profit number will be flat at that 720 odd crores, but it's come in with a growth of 20 odd percent with the number of 872 odd crores. Margins have also come in at 23.3% versus that of 22.7%, much better than what the street was expecting. And EBITDA has seen a growth of 21%, slightly higher than how the revenue has grown. In terms of the sales volume number, consolidated sales volume number has gone up by 16.3%. Overall volume was driven by 14% volume growth in India, and international business saw volume growth of 21.4%. I think the key developments in this quarter also include the 100% acquisition stake that they've completed in Twiza, which is a very important international acquisition for them. Even a 100% acquisition in Crickley Dairy Properties in South Africa was also one of the important developments that happened in mid-March, around 17th of March. And overall, company has also declared a dividend of around 0.5 per equity share. So this is the overall development coming in. Even in terms of the management commentary coming in, the management has said that overall in India, demand remained encouraging during the quarter, supported by wide distribution reach and strengthened execution and continued investment in terms of manufacturing capacity and chilling infrastructure. They said that they've undertaken targeted initiative to drive volume growth to strengthen the domestic portfolio, including pack pricing. Selective price point launches have been identified in these markets to onboard new customers. On international front also, they're saying that they've made steady progress during the quarter, and of course they talked about the two acquisitions, that is Twiza and the other one. Overall, in terms of looking ahead, they said that they remain confident in the long-term opportunity across the markets, supported by favorable demographics, rising income, as well as growing urban consumption. So this is the overall view as to how Q1 is fared for Varun Beverages. However, the stock probably is now taking a knock and seeing some profit booking coming in.
Well, thank you, Mahima, for that roundup when it comes to Varun Beverages. So now my question to you is not stock specific, but on the entire space which actually gets benefited because of this harsh summer season that we are seeing, be it power names, be it AC, be it FMCG names like Varun Beverages, Dabur. Given the fact that the temperatures are expected to be worse going forward, any sector that looks more attractive to you from summer specific? Do remember that power stocks have already run up a lot. So how are you looking at this theme?
I think the demand for power would continue to remain strong. You've seen corrections, in the past month, and I think taking strategic positions in the power sector, given the summers plus data center theme continuing to be very strong. I think power sector definitely makes sense. Along with it, I think the EMS names, right? For example, your Voltas, PG Electroplast, and a number of other companies, Amber, which have exposure to the AC space. I think that would definitely be interesting. Number one, because we're expecting summers to be strong, and secondly, these stocks are at very attractive valuations. They've corrected quite a bit. So I would be definitely looking out at some of these, AC stocks in the EMS segment.
Thank you, Sonam. Thank you for joining us and giving us your perspectives on the sectors that we discussed. Moving on, pharma is a sector that remains in focus. Multiple news that has come in. First, let's address the news that has come in for Cohance Life. Now, here a big appointment has come in. Umang Vohra, who was earlier with Cipla, is now joined as the chairman and the group CEO of Cohance Life. The former CEO of Cipla joins the organization to spearhead its next phase of transformation and growth. Let's get in Varsha to understand how this new appointment will actually benefit Cohance, which has hit an upper circuit of 20% in trade.
very positive and big news for Cohance Life Sciences, and this is a shocking news. I mean, Umang Vohra joining Cohance Life Sciences. Well, why this is an important one and why you're seeing such a huge surge in stock prices. One is why Umang Vohra is a strategic fit for Cohance. One is he has a proven ability, to grow globally while protecting margins, what he has done with Cipla. And also talking about the customer-centric CDMO segment, we've seen a clear shift from volume manufacturing to value partnerships in Cipla. And also this appointment supports Cohance transition to professional governance-led growth, which Cohance has been doing. And also the track record enhances investors' confidence and strategic clarity. Now, why I'm saying this, what Umang Vohra has done with Cipla, how he has transformed Cipla from 2016 to 26 is one is he has transformed this company from volume to value growth, pivoted away from commodity generics to complex and specialty products, built scale and leadership in respiratory and chronic therapies, and focused on high barrier differentiated products. And the key outcome of all these initiatives taken by Umang in Cipla was Cipla became the world's largest inhaler seller by volume, ranked among the top players in US inhalation generics, and established global leadership in respiratory care at industrial. So, a very big and positive news on Cohance Life Sciences, and I think this may be the start of the rally that we are seeing.
Well, shifting focus from pharma to Reliance Industries reported a weak set of numbers. Overall, the miss was because of a weak performance coming in from the oil and gas divisions of Reliance Industries. If you look at the O2C segment, that reported the biggest drop in its EBITDA in the last 7 quarters, while the oil and gas exploration segment reported the biggest drop in its EBITDA in the last 16 quarters. Now, what impacted the O2C segment? It was higher insurance cost, higher freight cost, more LPG production coming in, and higher crude oil prices also. Now, do remember that in the O2C segment, the retail fuel segment might have also got impacted because of lower retail fuel prices and higher crude oil prices. When it comes to the oil and gas exploration segment, that got impacted largely because of lower production and higher operational costs in the fourth quarter of FY26. Speaking about the retail segment, it was a modest growth that we saw on a sequential basis, but that was also because of a high base. But numbers are pretty much in line with what the street was anticipating. And when it comes to telecom segment, again an inline set of numbers, but the lowest or the slowest growth that we have seen in the last 12 quarters for revenue, EBITDA and net profit. ARPUs came in flat at close to 214 rupees per user per month, and the entire growth that the telecom arm of Reliance Industries saw was on the back of subscriber additions. Subscriber additions stood at close to 9.1 million, which is the highest that Reliance Industries has seen in FY26. So that led to the entire growth for the telecom business. Moving on to the Sun Pharma news. Now, this is the biggest M&A news that we have heard in the pharma sector for a very long time. Sun Pharma is acquiring the New York listed women's health care company Organon in what is likely to be one of the biggest India outbound deals in years. Now, the deal gives Sun Pharma global reach in more than 150 countries along with stronger cash flows. Now, talking about the conference call that the management held with the analysts at 8 p.m., they said that the Organon deal marks a clear pivot to higher growth segments, with management being confident that the transaction will accelerate long-term value creation for the company and its shareholders. Now, the company also acknowledged that it will be taking upon a meaningful debt to close the deal, with leverage expected to be at around 2.3 times its combined EBITDA. Now, do remember that the combined EBITDA of the entity would be close to $4 billion and the debt would be nearly 2.3 times of that. But they also stressed that a sharp focus will be on deleveraging its book at earliest as possible. Now, management also expects to rebuild the value erosion linked to Organon while scaling its biosimilar portfolio. Now, post-acquisition, Sun's innovative portfolio is set to contribute roughly 27% of the revenue, strengthening its global growth profile. Now, let's get in Thomas Abraham, research analyst at Mirae Asset Share Khan. Thomas, firstly, to understand with you, how are you looking at this deal? Should that be a bigger concern for the minority shareholders, or they should be happy given the fact that this deal will be EPS accretive and could lead to a new growth opportunity for Sun Pharma?
Yeah, so good morning. So when you look at this deal, there are two aspects to it. I would think of it in a long-term perspective. This is wonderful news as far as Sun Pharma is concerned, because given the size of the company that Sun Pharma is, in terms of growth in the long term, this allows them to actually move ahead much faster than if they did it organically. So considering that, it's a good deal. It's a good move forward for them. For sure, when it comes to the minority shareholders, the question really becomes about dividend payments and how it's going to be structured over the next few quarters and years to come. But especially given the fact that the management wants to pay the debt as early as possible in probably 3 to 4 years. So considering those aspects, it's a little bit of a thought that goes into all the minority shareholders as to what the dividend would be. But if you're looking at a long-term growth perspective for a company as big as Sun Pharma, well, in that sense, this is actually a very good news for the shareholders.
Now, given the fact that this acquisition has been announced and everything is now known to street, what is the kind of growth that you're expecting from Sun Pharma over the next 3 to 4 years?
No, I need to actually look into both the deals properly to be able to provide a growth per se. But considering the fact that the company is looking to finish off all the debt in about 3 to 4 years, despite good debt EBITDA of about 3x, 2.5 to 3x, more than the growth in terms of, the revenue growth that we're looking at, it's in terms of the EPS growth that we should look at in the longer term, given the fact that we have to pay off the debt. So that is how I'm looking at it at this point.
One more thing I wanted to check with you on the valuation front. Now, given the fact that this news was all over the media reports since Jan 2026, and we have seen a significant rise in the share prices of Organon as well over that time period. But even if you consider Friday's closing, which already had factored in a 30% move in the share prices, Sun Pharma is paying $14 per share, which is still a significant premium compared to what the market price was for Organon. So do you think that those expensive, those premium valuations for Organon is justified given the fact that the company has not reported any growth for the last couple of years?
When it comes to the acquisition, what really happens is that in terms of what Sun Pharma is gaining in the long term is what we're looking at. So Sun Pharma is gaining into the access in terms of the manufacturing units in US, Europe, European Union. They're able to bring a certain portfolio of products that that would actually take them off the generics platform and more into innovative and biosimilars. All those aspects is what eventually brings about a valuation. Sure, in terms of a 25-30% premium to what the share prices are for them right now, it looks a little on the expensive side, but given the growth prospects, there was concern in the street over the last few weeks as well with regard to what the valuation would be and how much would be the debt that Sun Pharma would be having and the deal structure as such. But again, at this point, I think it's still fair in terms of if they can actually be able to provide good operating cash flows over the next 3 to 4 years, then this is a pretty good deal.
And just one question on the Cohance Life announcement, given the fact that the stock has hit an upper circuit of 20%. If you have a coverage and if you could answer on that as well. Umang Vora has been appointed as the new appointment that has happened in Cohance Life. Obviously, it's a positive news coming in given the stock is up 20%. But how are you reading into this?
We do not have coverage on the stock, so I wouldn't comment on this.
But okay, then in the entire pharma space at this moment, under the stocks that are under your coverage, which is the most attractive one?
I've been bullish on Lupin. I've been bullish on Divi's Laboratories and Loris as well. The CDMO space looks good in the long term, and that's what I'll be looking at. And also with respect to hospitals, the healthcare sector, that is something I'm looking at in the long term.
Well, thank you, Thomas. Thank you for joining us and giving us your perspectives on the stocks that were discussed. Moving on, a host of other companies that remain in focus on the back of earnings. Let's get in Puneet to understand which are those companies that remain in focus.
Well, thank you for that. A lot of result reactions today. So let me start with IndusInd Bank. That's the first counter. Results are largely in line with estimates. Streets also rewarding the turnaround that's happening in this particular counter. NI is up almost 43% for the company at 4,300 odd crores, as well as the operating profit up at 2,200 odd crores as well. They've also reduced their provisions down 1,484 crores versus 2,400 crores for this particular company, and net profit is at 533 crores in this particular quarter versus a loss that they reported in the same time last year as well. In terms of NIMs, slightly improved to 3.39%, and brokerages have also largely maintained a positive view. Actually, HSBC has actually hiked the target price to 1,100 rupees per share versus 880 earlier, mentioning that they are increasing the FY27 EPS by 20% and a subsequent 20% increase to the FY28 EPS as well, while Morgan Stanley continues to maintain an equal weight with the target price of 730, and mentioning that the gradual improvement in profitability will be something that they'll watch. M&M Financial, another financial counter that's done well in terms of quarterly results. Total income is up 13%. Net profit has doubled to 938 crores, and they've also, increased the company's overall borrowing limit to 1.75 lakh crore at this point of time. Kotak has upgraded the stock to a buy versus a reduce earlier, and a target price is now 350 for this particular counter according to Kotak. They mentioned that they are better placed for a challenging year ahead and look out for the profitability metrics as well. Finally, Hindustan Zinc, another one. We've seen the variation in zinc prices, so 23% growth in revenue reported by the company. They've also reported a profit growth of 28%, and HSBC has actually hiked the target price to 730 versus 720 earlier, mentioning that Q4 earnings was a big beat in terms of higher volume. So these three stocks on our radar today.
Puneet, while you're with us, UltraTech will be reporting its numbers, and a big cement company, first cement company on the bigger side, that is coming out with Q4 numbers. What are we penciling in?
Well, it's going to be a quarter which is going to be volume-led growth essentially, and higher than the industry as well for UltraTech at this point of time. Their revenue is expected to rise by 12% to 25,900 odd crores, while EBITDA and profitability will increase by 14% each. Profit expected to be at 2,800 odd crores. Now, we're expecting industry volumes to be at almost 8% growth. Brokerage is penciling in, analysts expecting a 12% growth for UltraTech with volumes at 46 million tons. The other aspect is of realization. Realization is also expected to rise to 5,612 rupees per ton, with the blended EBITDA might decline to 2% because the other entities are currently at a lower EBITDA per ton. So that number is expected to be almost 1,100 rupees per ton as well. But expecting a good quarter, what I'll watch out for is how the prices of commodities as well as packaging and petcoke has moved in this particular quarter. So some commentary in what could be the key expectations in quarter one, and also in terms of prices, they have had a price hike in April. Is that sustainable? Those will be the two key aspects to watch.
Well, sticking with the Nifty names, Shriram Finance. Now, this company came out with its numbers on Friday during market. When the numbers were out, the stock jumped up in trade. But post the conference call, there are some concerns that are coming in, and that could be one of the reasons why the stock is down around 4% in trade. Let's get in Shivam to understand what concerns have brokerages pointed out here and why the stock is down 4% in trade.
Well, yes, Shriram Finance has posted a strong quarter four numbers which were driven by the operating performance. Their profitability has also remained strong with stable margins and lower OPEX, and growth was also healthy, and growth acceleration remains a next key trigger that we should watch out for. And regarding the brokerage's stance, the Bank of America has maintained buy rating on the stock with a target price of 11,080 rupees. They have said that the earnings were beat on the back of lower operating expenses. The cost income ratio has also improved, but the gross stage 2 and gross stage 3 metrics remains a key monitorable that should be watched to look out for. And second is the Morgan Stanley, which have given an overweight rating with a target price of 1,250 rupees, and they have maintained by overweight rating with asset quality better judged over the rolling periods, and they see a structural improvements in the financials going forward. JP Morgan has also maintained an overweight rating with a target price of 1,180, and they have said that the core profitability of the company remains robust, and re-rating is depends on growth acceleration going forward.
Well, thank you, Shivam, for that. That's all we have. That's all the time we have on this show. today on 12. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and today we have Puneet Javeri, who's standing at the NDTV Profit market pit with all the action in the markets today. Puneet, good afternoon. An interesting day of trade because you're seeing the pressure which has continued to build up right now from the day's highest levels. If you pull up Nifty 50 as well, you'll see the kind of gains that have been given up. But what are the key factors that you are watching out for right now? Because it is a volatile day of trade and Brent that has continued to remain elevated.
Well, most certainly, but we are keeping the Nifty at 24,000 and above level, so that's a key positive at this point of time. A lot of reactions on stock today led by earnings. So let's look at some of the key factors because we've of course seen a 160-point up move. We are down from the day's high today, crossed 24,100 at this point of time, but continuing to maintain that psychological mark of 24,000 at this point of time on the index. Now that is led by a broader market sectoral heat map that we are seeing largely being in green. Barring a couple of them, we're seeing most of the sectors continuing to trade in the green, and that is led by, of course, two key ones that we'll put focus on as well over the next half an hour. One is, of course, the Nifty Pharma, led by Sun Pharma and that big acquisition by the company. Healthcare also continues to do well at this point of time, the biggest gainers today as well. In terms of stock-specific action, we've seen Sun Pharma, of course, trading at its highest level over the last 5 years post this acquisition of almost $11.7 billion in terms of equity value of Organon, and hence you've seen that stock being in print trade. Cohance Life is the other one. Stocks at an upper circuit of 20% after they've approved the appointment of ex-Cipla head Umang Vora as the chairman and CEO. The stock was down 68% in the last 1 year, and possibly the first time when you're seeing such a big up move on this counter. The other key aspects to watch today have been the fact that IndusInd, M&M Finance, Hindustan Zinc are some of the key counters, as well as Tanla, buzzing on the back of earnings, where you've seen a very strong momentum for this quarterly results as well. But that's largely what we're picking up in terms of the key stock-specific action. Back to you, Hiral.
Okay, interesting moves that we're going to see today. Thank you for that. Let's quickly look at the watch list. Sun Pharma, the acquisition of Organon, the streets have taken it really well. Cohance has appointed Umang Vora, as Puneet was mentioning as well. Blue Jet volumes are pretty strong. If the field where Cohance actually functions is going to see an uptick, probably you have a counter reaction coming in on a Blue Jet. Paytm, where RBI has cancelled the PPB, that's the Payments Bank license. And the way we were looking at it was that there's no negative impact. The streets are still seeing a sentimental move. M&M Financial, strong Q4 that has been reported. India Cement as well, a strong quarter. Strong moves on both these counters. MRPL is under pressure on the back of a downtick in terms of profitability. And Axis Bank also a weak set of numbers. RBL Bank reacting to numbers along with the Shriram Finance. Sham Metallics, volumes in trade today. And you have a Reliance Industries which has missed street estimates. Tanla also, the highest ever gross profit is what they've seen. And Tarol has seen an order win of 150 odd crores. Strong volumes building up on Adani ports in today's day, along with JSW Steel, where they've done a JV with Japan's JFE Steel Corp, and Coal India will be reporting numbers today. You have Varun Beverages also, which has reported numbers. So that's what we're watching out for in terms of our watch list. But let me head across to Puneet to take you through the rapid fire with Sachin Janardhan, of IDBI Capital Markets.
Well, thanks so much for that. So, Sachin, good afternoon and welcome to the show. Putting across the first stock, Blue Jet Healthcare. Now, I know it's locked in upper circuit, but what's a medium-term trajectory you're looking at the stock right now?
Currently, the stock actually is in a downtrend. Near-term resistance is around 449. But if in case it is closing above 450 levels, the prospect of the stock will be good. And above the targets we can see is about 464 and 510 levels on the upside. On the downside, if 400 levels is still sustained on a closing basis, the stock can rise on the upward trajectory. But however, we need to be cautious as the stock overall trend is down.
M&M Financial is the other one on the back of very strong results here. They've raised their borrowing limit on the fundamental side. But Sachin, on this particular counter, how are the charts looking?
Overall, the trend is sideways to bullish only. If it is closing about today's high, which is 331, we can see the upside around 345 and 370. Overall, the support is around 290 levels. If that is protected on a closing basis, we can see the above levels.
The other one, Sachin, has been India Cements. Now, of course, UltraTech being the company that owns it, we are expecting results from UltraTech today, but very strong results. Is the charts and the momentum expected to continue for India Cements from here on as well?
Yes, the stock has actually broken out with very much high volumes, and overall, if we are getting similar close right now around 454, 455 levels as well, we can see 475 and 519 levels on the upside. Today, yesterday's low is important for the stock around 400 levels. If that is protected, we can see the upper levels. It has actually given a falling trend line breakout and a U-bottom breakout at the same time. So basically, the trend is strong for the stock.
Right. And anything on MRPL that you're picking up, Sachin?
Overall, MRPL is today it is down by 7%, but overall the trend for the stock is strong. Today it has broken its 100-day EMA, so the next support levels will be around 164 levels. Upside, what we are currently targeting is around 230 and 274 levels. Overall, a big cup and handle breakout has happened in the stock, and from last few days it is consolidating above the 180 and 160 levels basically.
A quick view, Sachin, on what we've seen on Axis Bank as well. Of course, another quarterly reaction, but a very quick view on Axis.
So if today it has taken support around 50-day EMA and around 38.2% Fibonacci retracement. So overall, right now, if it is closing like this, also on a negative note, it is making a candlestick hammer type of a candle pattern. So overall, the targets will be around 1300 and 1450 levels on the upside.
Got well. Thanks so much for that, Sachin. Back to you, Hiral.
Thank you so much for that. In fact, Sachin, let's also look at the stocks which are trending on Google currently. Last couple of trading sessions, it's always been power, and power, which makes it to Google trends list as well. Let's see what's there today. Sun Pharma, for obvious reasons. Paytm as well. But what's added to the list today is Infosys, DCM, Shriram and Adani Green. Anything that you like on the charts from the stocks which are trending, Sachin?
So Sun Pharma, it has actually given a good breakout levels today, and if it is maintaining these levels, and if we get a close above 1750 levels, then 1800 and 1900 levels on the upside we can see. Yesterday's low, if it is protected, basically that will be the stop loss 1600 levels, and we can see the above levels basically.
Sachin, for that, in fact, my colleague Varsha spoke to Dilip Sanghvi, chairman of Sun Pharma, on the strategic moat behind this deal. Let's listen in to a slice of that conversation.
You are acquiring an asset which has a high debt and has a slow growth. Why not invest in your own innovative portfolio versus buy this asset? I mean, what's that single biggest moat that you see in Organon due to which you are planning to acquire this? Thank you.
No, I think that was the part of the presentation, is that while we will continue to invest in R&D, we will require infrastructure globally and relationships in all these geographies, so that when we launch our product, we are able to get meaningful market share. Now, for Sun alone, on its own, would have taken a much longer time to reach where we can potentially reach post the Organon acquisition. This does not change our investment philosophy for investment in innovation. It also does not change our approach to finding a continuous way to grow the business. As Kirti says, it actually significantly enhances our ability to grow in our markets where we are already present, and gives us opportunity in new markets like where we are currently not present. So like we are not present in most of the countries in South America, Korea, Taiwan, China. We get a direct presence. Middle East, even Turkey, many countries that we have no presence. So it gives us an ability to launch whichever product we develop in a much bigger geography. I think Kirti says that we've launched Illumia only in 35 markets. In many markets we don't have either a licensing deal or a direct launch. So we can leverage this to sell many of our innovative products also in those geographies.
Well, that was, of course, Dilip Sanghvi, the key man at Sun Pharma. Big acquisition announced, that we said, and the stocks reacting also in that way. But also the other pharma name that's in focus is Cohance Life. Now, they've appointed Umang Vohra as the company's CEO. It is an important announcement that the company has made, and you're seeing a stock reaction also up 20%. Now, Mr. Umang Vohra was at 10 years at Cipla between 2016 and 2026. And here the focus continues to be on the fact that over volumes, there will be a focus on value at this point of time. He's also someone who's scaling with discipline as one of the key approaches that we've seen at Cipla as well. And the other aspect that for Cohance specifically, there has been a lot of focus on volume manufacturing at this point of time, and that hasn't yielded well for the company over the last 3 to 4 quarters. So reversal of that will be something to watch for this particular counter. There were also aspect that it's a strategic repositioning that the company could go through, and the market is penciling in those gains early on as we speak at this point of time. So Cohance definitely one of the key stocks in focus today. Of course, one of the key F&O names as well. So you have that upper circuit of 20% on this counter, but will be very interesting to track at this point of time as well. But Hero, what are some of the other aspects that you're looking at?
In fact, so Cohance and Sun Pharma are two stocks that we should be focusing on. We'll take a question quickly as well later on once we have a fundamental analyst joining in. But before that, Atul Auto, they have partnered with Exponent Energy to deploy 15,000 rapid charging electric three-wheelers. Now, to discuss in detail on this development, Jitendra Adhyay, President Finance, Atul Auto, joins in. The stock today is seeing some bit of profit booking. Mr. Adhyay, welcome to the show. Always a pleasure to speak to you. If you could help us understand in terms of the relevance and impact of this partnership on a company like yours.
Thank you so much for having me on this show, and it's always a pleasure to speak to you and the viewers of NDTV. And let us understand, Atul Auto has got that philosophy that we will be having, all solutions available with three wheels and with what we did with ICE. Now, obviously, it's going to be EV, wherein we already have a product with our own fixed battery. Then we got a swappable battery, and now with this rapid charging, this is definitely going to complete the entire product portfolio. And what we foresee is that we will be providing, all the solutions, whatever is available with three-wheelers in EV segment. So that's going to be the entire, mindset of the management and the organization.
So, Mr. Adhyay, then, what? Okay, so you're starting off with 15,000 vehicles. What would that mean in terms of revenue potential right now? What's the timeline? And two, how do you plan to extend this partnership going ahead?
See, initially, let us first have a launch, and obviously, this is for first 15,000 vehicle likely to be completed, though we are expecting it a bit early. But overall, it is going to be a 3 years MOU, but we expect that we will be able to do it very fast and well before the term expire. That is point one. Initially, this vehicle will be available in Bangalore and Delhi, and depending upon the success, we would be capturing few more centers or top 10 cities of India.
Mr. Adhyay, very good afternoon, sir. Thanks so much for joining in. It's Puneet this side. The other big update in the last month or so has been the Delhi EV policy. Now, there has been stringent measures that from 2027 only electric three-wheelers will be registered. It's something that you've spoken about to us in the past, but your focus has been on L5 vehicles versus L3. Does that change now? Are you looking to focus more on L3 because the adoption will be much quicker compared to L5? What is Atul Auto's strategy at this point of time?
Puneet bhai, very good afternoon. See, if we look at it, we have a product for both this category L3 as well as L5. L3 we are already present, and there is also a lot of other, development we did right from lead acid to now. This L3 category is available with lithium-ion battery as well. So obviously for Atul Auto, since we are pure three-wheeler player, it's not that we are we are focusing on one single segment or one single category. It would be definitely, welcome thing for us to have better volume from all the categories. In ICE, as I told you, we have a complete product portfolio: diesel, petrol, CNG, LPG. Likewise, in electric, we got L3, L5. In L3, L5, we have both the applications available, that is cargo and passenger. Along with that, in L5, we got a various solutions, this fixed battery, swappable battery, and now this rapid charging. So it's not that we are focusing on any single segment, but each category makes a lot of value proposition for us.
Adhyay, one key aspect has been on market share. Now, and we've been, flashing those names on your screen right now that, someone like Bajaj, Piaggio, M&M have been able to, corner that market, at least in the electric three-wheeler space. Your share is roughly between 2 to 3%, similar to FY25 levels. Is there a target that you have for maybe in the next 12 to 18 months in the medium term? If you can give us some perspective of doubling this current market share that you hold?
Puneet bhai, it would be little early. Let us first seed the numbers correctly. We will be definitely going forward in couple of quarters. We would be definitely talking about the markets. As of now, the entire focus is to see the product correctly.
Mr. Adya, Hiral here again. My question to you is, yes, market share does become important, but I know you answered Puneet's question on that front. Now, if you have to look at growth and market expansion from here on, I remember reading correctly, 50,000 units is what you were looking at in the next financial year. So which products, which regions will actually, drive this kind of growth to get to that 50,000 mark? And at levels of 50,000, what will that take your market share to?
I don't know who has given you 50,000, but yes, that would be the definitely our, inspiration to get that number first. So I would not comment on the exact numbers, but see, if you look at my growth in export last year, we really did well and we expected to do much better in this financial year. So if we just divide the entire volume, we expect that close to 15-20% revenue will come from export. That is point number one. Other thing from ICE and EV, yes, we are now started doing well in alternate fuel as well, apart from our better grip over diesel vehicle and in particular cargo. Coming to EV, yes, now with this complete product portfolio, we will be able to definitely get better revenue from EV segment as well. Broadly, if we categorize, the revenue from domestic market will be anywhere between 80-85%, from export 15-20%. In terms of fuel choice, we have diesel, petrol, CNG, LPG and electric, which may vary in this financial year. We'll have a better clarity going.
Okay, so these are interesting numbers, but it'll be interesting to talk to you post earnings to understand how this quarter has been and what's the outlook looking like going ahead as well, because lots of transitions happening and this is becoming a very interesting space to watch out for. But thank you so much for joining in. It's always a pleasure to speak to you. So that's the management of Atul Auto talking to us about their new partnership that they've done. 15,000 vehicles is what they're talking about so far. But let's quickly look at Paytm as well on the screens and see what that counter is doing in trade, because we know that the RBI has cancelled Paytm Bank's license, and there were issues related to KYC, banking guidelines, PAN card as well. That's what the RBI has indicated. Now, the question from here on is, what is that actual impact in terms of where Paytm goes? Because in terms of financials, there is no direct impact that does come in, but it clears a lot of regulatory ground. In spite of that the stock is trading under pressure. Let's get in Akhil Somani, Director at Eureka Stock and Share Broking, to join us and tell us more on his views. Akhil, welcome to the show. How are you looking at a Paytm? Because it's a double-edged sword right now. One side, you're talking about the negative where the payment bank license has been cancelled. There is no financial impact coming in. But in the other way, it does create, level out or, remove all the regulatory hurdles for other kinds of services as well. The stock is under pressure. What would you advise investors to do?
I think there's no revenue impact, and the exposure to the payments bank was already nil and fully written off. The core payments ecosystem remained unaffected. The payment bank operations were already inactive. All users and merchants had already been migrated. Wallet business may resume subject to fresh PPI license approval. So I think investors can look at buying and look at building the portfolios in the stock specifically.
Got that view, Akhil. But the other key aspect and one key counter that will be in focus today on the back of earnings will be Coal India reporting earnings today, and Parth is here with us to give us a perspective of what can we expect. Parth, what are some of the key expectations from the result?
So Coal India is expected to report a muted quarter, and that is going to be driven by the weak offtake that the company has seen during the previous quarter. but their profits are going to be slightly supported by the better margins that they got in their e-auction premium prices. But the FSA contracts, which are basically the long-term contracts in which the companies buy coal from Coal India, they have seen a decline. So that is going to affect the volumes even more than the company is going to gain from the e-auction premiums. So that is going to impact their profits. If we look at the expected numbers, and revenue is expected rise 1% to around 37,800 crores, while EBITDA is going to fall around 1% to 11,680 crores, with margins declining around 130 basis points. And because of the FSA contracts that we discussed, the net profit is also expected to fall around 12% to 8,470 crores. Now, the key thing to watch in this quarter will be the sustainability of those e-auction premiums that have actually sustained at a higher level, and also the management commentary on the impact of wage hikes on the company's profits and margins as well. Also, their commentary on the capex and dividend going forward will be something to monitor as well.
Well, thanks so much for that part. But Akhil, very quickly on Coal India, a good dividend play, but is that something that you are looking at right now?
So I think the power and energy sector has been in focus for quite some time in the markets right now, and Coal India is one of the leading players in that segment. I think the full year production tells the actual story, where FY26 production came in lower at by 1.7%, and the company missed its targets, but which were already conservative. So on the earnings front, I think the year-on-year EBITDA might fall to around 10,250 odd crores. But the stock is trading still at 10% below the 52-week high, but it's still up 15% over the last 6 months. So I think the management guidance would be the key catalyst to watch for in this stock.
Guidance the key. Moving on, Reliance Industries earnings have actually largely missed estimates owing to weak oil and gas performance, and that was something which was anticipated. But if you see the stock now at the day's highest levels with gains of 1.5% coming in there, the OTC EBITDA has witnessed its biggest sequential drop in the last 7 quarters. And the retail EBITDA growth has been muted, largely in line with what the street was estimating. The PAT drop, that's the profitability drop, has been higher as compared to the EBITDA drop, owing to lower other income as well. It's interesting to see the way the stock has been moving right now, because that is what is coming in as a support as well at the day's high. So at lower levels, you've seen buying that is coming in on a Reliance Industries. What is your view, if I have to take this question with you, in terms of, your view on Reliance Industries, Akhil?
So Reliance, I think, has delivered a classic 2-speed quarter. The annual picture is historic. The Q4 print is softer, but at a full year level, the FY26 revenue is at a record level of 11.76 odd crores. I think the consumer engines were strong. Jio revenue was up 11.2%. The forward triggers are significant. Mukesh Ambani confirmed the RIL is advancing steadily with the listing of Jio platforms. That IPO will be the key transformational value unlock event for this company.
That's Reliance Industries. But let's take a look at Shriram Finance. Let's pull up that counter on the screens and see what the stock is doing in trade, because it's interesting commentary that we're picking up from brokerages. The stock is nearly down 4% as we speak. My colleague Shivam joins in to tell us more in terms of what brokerages make out of the earnings and what the key takeaways are. Shivam, over to you.
Well, yes, Shriram Finance has reported a strong Q4 numbers, which were driven by the operating performance. The profitability has also remained strong with stable margins and lower operating expenses. Asset quality of the company has largely remained stable, and funding cost and the capital raised from the MUFG Bank are being seen as the tailwinds of the company. However, the growth remains a key concern, and the growth acceleration is the next key trigger which will drive the stock. So, looking at the brokerage stances, so Bank of America has maintained a buy rating with a target price of 1180 rupees and has stated that the earnings were beat on the lower operational expense, and the cost to income ratio has also improved sharply. But gross stage 2 and gross stage 3 assets remains the key monitorable. Morgan Stanley has also maintained an overweight rating with a target price of 1250 rupees. The asset quality has been seen a structural improvement, and the funding cost on the margin side has been remain a positive point. UBS has also given a buy rating with an increased target price of 1220, which was earlier 1200, and has mentioned that the company has witnessed a strong commercial vehicles momentum portfolio, and also has seen a recovery in the gold portfolio. Next is the JP Morgan, which has maintained an overweight rating with a target price of 1180 rupees. Core profitability of the company has remained robust, and re-rating depends on the growth acceleration going forward.
Interesting news coming in there on Shriram Finance as we speak, but completely out of time. Thank you, Akhil, so much for joining in. Always a pleasure to speak to you as well. Thank you from Puneet, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Benchmarks trade in the green, broad-based gains power Dalal Street with pharma, IT and realty leading the pack and metals shining. Financial services and Nifty Bank remain on the back foot. Paytm meanwhile is under pressure after the RBI cancels the banking license of its associate entity Paytm Payments Bank. Paytm issued a clarification stating that the regulatory action would not disrupt its operations or business. Reliance reports below than estimates. Fourth quarter with pressure clearly visible on margins and profitability. Axis Bank delivers in-line numbers while RBL Bank sees a strong quarter. IDFC First as well sees improvement in asset quality. Sun Pharma has signed a definitive all-cash deal to acquire Organon at a 24% premium with closure expected in early 2027. Company says its top priority post-deal will be a focused effort to reduce debt and strengthen balance sheet. Brutal heat wave across North India turns up the heat on air conditioner makers and power companies. Stocks edge higher as investors bet on stronger cooling demand and a spike in electricity consumption. Good afternoon. You're watching Lunchtime Trades with me, Shreyanti Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates, as well on the top buzzers at this hour, all while you grab lunch. But while we do that, let's quickly take a look at the markets. First things first, and it's looking like a decent day in trade, whether you talk about Nifty or Sensex. So you're looking at about a 180-odd point gain coming in for the Nifty. It's actually better in terms of the Sensex, but also the broader markets that are currently outperforming as well. So that's the kind of picture that you're seeing as far as the benchmarks are concerned. When you talk about the sectoral picture as well, that's also looking quite well and in favor of green as well. So when you talk about the top gainers within sectors, there's actually pharma that's holding up quite well. Leading gains with that 2.5% gain also coming in. Realty, IT, metal, auto, all of those sectors exactly in that order. Those are your top sectoral gainers. What's not doing so well right now is financial services, with that just a little bit of 0.1% downtick also coming in for the financial services sector. So that's a little bit on the back foot. But like I mentioned, it's actually broader markets that are outperforming just a tad bit when you compare it with the Nifty as well as Sensex. Let's also quickly talk about some of the gainers and losers as well from within the Nifty 50 pack. And from outside the Nifty 50 pack as well, something like an India Cement is standing out with that 10.9% gain. So Vain Pharma with that 20% uptick. But when you talk about just within the Nifty 50 pack as well, you do have something like a Sun Pharma that's standing out with that 7.1% gain as well. And you do have commentary from the management talking about how they're going to be focusing on sharpening the debt levels, which is quite the concern when it comes to the Organon deal. And Adani Ports, JSW Steel, Wipro, TCS, Tech Mahindra, M&M and SBI Life in great shape right now, up anywhere between 2 to almost 3% thereabout. When you talk about the list of top losers as well, something like a Shriram Finance is standing out with that 4% knock coming in on this particular counter. And the brokerage verdict largely is not quite positive when it comes to this particular counter. Axis Bank, BEL, Coal India, Tata Consumer as well as ICICI Bank also on the back foot. Just a tad bit, of course, nothing like that 4% knock coming in for Shriram Finance also, but that's largely the kind of picture that you're seeing for some of those stocks that are buzzing away and under pressure. But since we're talking about stocks that are buzzing away, let's also talk about something like a Sun Pharma that's in focus, like I mentioned. Now, they're in focus on the back of acquiring New York-listed women's healthcare company Organon in what is likely to be one of the biggest India outbound deals in years. The deal, in fact, gives Sun Pharma global reach in more than 150 countries, along with stronger cash flow. Now, talking about the con call highlights as well, let's put the focus on that as well. The company is largely saying that its deal marks a clear pivot to higher growth segments, with the management also really confident that the transaction is going to be accelerating long-term value creation. The company has also acknowledged that it's going to be taking on meaningful debt to close the deal, with leverage expected at about 2.3 times combined EBITDA, but stressed that a sharp focus on deleveraging at the earliest is something that they have in mind. The management is also expecting to rebuild value erosion linked to this particular deal, while also scaling its biosimilar portfolio further. And post the acquisition, you do have their innovative portfolio that is set to contribute roughly 27% of the revenues, strengthening its global growth profile. So that's largely the setup that you're looking at when it comes to the con call as well. But let's also quickly take a look at the highlights coming in from Dilip Shanghvi as well, and the word coming in from the management. In fact, Varsha spoke to the management, the chairman of the company, on the strategic moat behind the deal. Let's go across and listen in.
You are acquiring an asset which has a high debt and has a slow growth. Why not invest in your own innovative portfolio versus buy this asset? I mean, what's that single biggest moat that you see in Organon due to which you have, you are planning to acquire this? Thank you.
No, I think that was the part of the presentation, is that while we will continue to invest in R&D, we will require infrastructure globally and relationships in all these geographies so that when we launch our product, we are able to get meaningful market share. Now, for Sun alone, on its own, would have taken a much longer time to reach where we can potentially reach post the Organon acquisition. This does not change our investment philosophy for investment in innovation. It also does not change our approach to finding a continuous way to grow the business. As Kirti says, it actually significantly enhances our ability to grow in our markets where we are already present and gives us opportunity in new markets like where we are currently not present. So like we are not present in most of the countries in South America, Korea, Taiwan, China. We get a direct presence. Middle East, even Turkey, many countries there we have no presence. So it gives us an ability to launch whichever product we develop in a much bigger geography. I think Kirti says that we've launched Illumia only in 35 markets. In many markets we don't have either a licensing deal or a direct launch. So we can leverage this to sell many of our innovative products also in those geographies.
Alright, then there you go. So that's the word coming in from the management of Sun Pharma. They're going to be sharpening their focus when it comes to deleveraging, and that's something that makes it to the top of their priority list. But let's also talk about one priority for us on the show here. Let's also talk about commodities right now, because oil prices are soaring, and you do have the Hormuz blockade that is keeping supply risks elevated at this point in time. So Brent actually near $108 a barrel thereabout. As you can see, that 2.5% uptick really coming in for Brent. WTI also holding up with that 2% uptick, also close to those $96 a barrel levels. Now, in terms of what is happening here, you do have peace hopes that are fading, so the volatility here is really rising, and you do have energy markets that have been roiled by this particular conflict, the supply shock that is fueling inflation concerns. But aside from that, Strait of Hormuz is remaining a key risk at this point in time. Now, Middle East tensions, of course, keeping markets uneasy, and we'll get you an outlook in terms of what you should be expecting when it comes to oil prices in just a bit. But quickly, let's also take a look at gold prices as well that are declining, and you do have the Hormuz choke that is keeping safe haven demand a little bit mixed at this point in time. So bullion is stuck between geopolitics and rates, and you do have on one side Trump cancelling envoy visit to Pakistan. On the other side, you have that entire picture when it comes to higher interest rates as well, and that's something that we'll be talking about in terms of how to balance. But gold, just as a little bit of a headline, is down about 11% since the war. Let's also try and map that particular trajectory when it comes to bullion. In fact, Anuj Gupta, commodity expert, is joining us on the show. Mr. Gupta, good afternoon, and thank you so much for taking time out and joining us this afternoon. First things first, I wanted to get a check going for oil as well, because it's very close to just a stone's throw away really from $108 a barrel. And you've seen that strength really sustain given all of the volatility. Do you think that supply concerns are the number one thing moving oil prices right now? Or is there anything else that is making it to your list?
See, there is the only concern, the Strait of Hormuz, which is still resolved. And after that, we have seen crude prices jump in as compared to the last week. If this Strait of Hormuz not resolved, we are expecting that crude price may still on a bullish momentum, and we are expecting it may test $110 to $115 per barrel. If the talk between US and Iran will resolve and the Strait of Hormuz will open, then the price will fall only.
Absolutely, and that makes a lot of sense in terms of the way that we've been seeing the trajectory also really evolve when it comes to oil. But I also wanted to get a check going for oil prices in terms of how your assumption seems to have changed when it comes to oil prices, right? Because given that we've entered the 9th week for this particular conflict, you've seen that the lower limit for oil prices has actually been revised upwards. Is that something that you're looking at? Are you also penciling in higher for longer oil prices?
See, in last 2 weeks, when Trump announced the ceasefire, but Iran is not, able to accept this ceasefire because they are, still on their, the conditions, which is not, considered by the US. So that will, creating some disruption regarding the Strait of Hormuz. And still, as it will, not considered by the US and other nation, so that will again providing support to the crude prices. We are expecting for a very short term, crude may be higher and it may test $115 per barrel.
Absolutely. And if there's a de-escalation, quickly before we move on to gold as well, if there's a de-escalation, what are the price levels that you then have in mind? Where is the bottom for oil prices?
See, I think $90 is a bottom price for the crude because already we have seen crude price increase very, drastically in last few months. And also there is a lots of, refineries which has been stopped due to this war escalation. Probably if all the things, will be easy, then it will take time to restart the refineries, so that will also incur the costs. So we are not expecting that price may fall below $90 per barrel because there's a lots of concern between demand and supply. So I think between $90 to $110, this is a very short term range for the crude prices. But if the Strait of Hormuz concern remain, that price will increase up to $115.
No, absolutely, and that is a very interesting set of events that we could be seeing unfold on both sides, because you do have 107, they're about $108 a barrel that is currently being maintained for much of the day when you talk about oil as well. But quickly also wanted to get a word for gold prices. You're seeing a little bit of decline. There's a mixed safe haven demand. There's a couple of different triggers. So on one side, you do have the rate cut story. Other than that, you do have that mixed safe haven demand picture. How are you looking at everything that is currently in place for gold and balancing it really?
See, if you check gold prices as compare from the last month, prices are trading in a tight range in an international market. It has a strong support at $4,600 per ounce, and on higher side $4,800. And we have seen that gold prices trading between this range. We are not expecting so much rally or so much correction in the gold prices because geopolitical concern is there, and definitely it will provide support to the gold prices. And on another side, the monetary tightening may be there that will curb the gold prices. So we are expecting that gold price may be trade between support and resistance level, and it will may trade between a range in international terms also. So we are expecting a range bound momentum in the gold prices.
No, absolutely, and that makes sense in terms of the way that we've been seeing this entire story as well unfold. I just, before we move on, wanted to get a quick check for the safe haven demand picture. Now, you've touched upon it briefly, but we've seen gold that is currently down about 11% thereabouts since the war really began, about 9 weeks or so. And you've seen that safe haven demand picture really being unfolded in a very different manner than we've seen in the past, perhaps. How are you looking at that entire trigger for gold prices?
So definitely the physical demand is missing out because in last Akshay Tritiya we saw not so much buying in physical market, but yes, definitely we have seen lots of buying by the central banks, particular from the China, and also we have seen lots of inflow in the gold ETF as per the mutual fund the data. So people are buying gold in terms of ETF. It has been increased the phenomenal, but not expecting so much demand in the physical side because people are not like to buy aggressively the physical gold and silver for an investment side.
Absolutely. And in terms of silver as well, Mr. Gupta, I wanted to very quickly, in just a few words, just wanted to get a check for silver. Do you think that it's going to be moving in tandem with gold prices as well?
Yes, as it's a part of precious metal, so we are expecting that silver may be rise from here, and it is taking support. And on the other side, if you check, the industrial metals are going up, particular copper, aluminum, and zinc, as silver is the part of industrial metal. So we are expecting a positive trend may be seen in the silver pricing, and we are expecting silver may test $78 per ounce to $80 per ounce in a short term.
All right, then. So there you go. That's the check going in terms of the outlook for gold as well as silver. Thank you so much, Mr. Gupta, for taking time out and joining us this afternoon. Let's also talk about one other counter that's in the spotlight as well. Varun Beverages is in focus after the company announced its earnings. In fact, Mahima is joining in with the fine print when it comes to this one.
You rightly mentioned it's most certainly a beat versus what the analysts were expecting. In terms of the top line, the beat excluding the excise number is around 500 odd crores and including the excise is around 300 odd crores when it comes to the top line. In terms of the net profit number, also the expectations were that the net profit number will be flat at that 720 odd crores, but it's come in with a growth of 20 odd % with the number of 872 odd crores. Margins have also come in at 23.3% versus that of 22.7%, much better than what the street was expecting. And EBITDA has seen a growth of 21%, slightly higher than how the revenue has grown. In terms of the sales volume number, consolidated sales volume number has gone up by 16.3%. Overall volume was driven by 14% volume growth in India, and international business saw volume growth of 21.4%. I think the key developments in this quarter also include the 100% acquisition stake that they've completed in Twiza, which is a very important international acquisition for them. Even a 100% acquisition in Crickley Dairy Properties in South Africa was also one of the important developments that happened in mid-March, around 17th of March. And overall, company has also declared a dividend of around 0.5 per equity share. So this is the overall development coming in. Even in terms of the management commentary coming in, the management has said that overall in India, demand remained encouraging during the quarter, supported by wide distribution reach and strengthened execution and continued investment in terms of manufacturing capacity and chilling infrastructure. They said that they've undertaken targeted initiative to drive volume growth to strengthen the domestic portfolio, including pack pricing. Selective price point launches have been identified in these markets to onboard new customers. On international front also, they're saying that they've made steady progress during the quarter, and of course they talked about the two acquisitions, that is Twiza and the other one. Overall, in terms of looking ahead, they said that they remain confident in the long-term opportunity across the markets, supported by favorable demographics, rising income, as well as growing urban consumption. So this is the overall view as to how Q1 is fared for Varun Beverages. However, the stock probably is now taking a knock and seeing some profit booking coming in.
No, absolutely, and it seems to have reversed the course since then. Mahima, after the first cut, about 2.6% uptick thereabout is something that we're seeing coming as far as Varun Beverages is concerned. But let's also talk to you about the sectoral picture, because it's actually financial services that is back in the green right now at this point in time. And when we started the show, it was actually in the red, the only sector, the lone loser within the sectors as well. And Pharma, in fact, is leading gains, as you can see. So let's talk about some of the counters from within this pack. Cohance Life Sciences is in focus on the back of announcing appointment of Umang Vohra as chairman and as group CEO. Now, Vohra, the former CEO of Cipla, joins the organization to spearhead its next phase of transformation and growth. Varsha is standing by with more details. Varsha, it's coming in as a little bit of a surprise here.
Very positive and big news for Cohance Life Sciences, and this is a shocking news. I mean, Umang Vohra joining Cohance Life Sciences. Well, why this is an important one and why you're seeing such a huge surge in stock prices. One is why Umang Vohra is a strategic fit for Cohance. One is he has a proven ability, to grow globally while protecting margins, what he has done with Cipla. And also talking about the customer-centric CDMO segment, we've seen a clear shift from volume manufacturing to value partnerships in Cipla. And also this appointment supports Cohance transition to professional governance-led growth, which Cohance has been doing. And also the track record enhances investors' confidence and strategic clarity. Now, why I'm saying this, what Umang Vohra has done with Cipla, how he has transformed Cipla from 2016 to 26 is one is he has transformed this company from volume to value growth, pivoted away from commodity generics to complex and specialty products, built scale and leadership in respiratory and chronic therapies, and focused on high barrier differentiated products. And the key outcome of all these initiatives taken by Umang in Cipla was Cipla became the world's largest inhaler seller by volume, ranked among the top players in US inhalation generics, and established global leadership in respiratory care at industrial scale. So, a very big and positive news on Cohance Life Sciences, and I think this may be the start of the rally that we are seeing.
No, absolutely. It does look like the start of a rally for Cohance Life Sciences with that 20% upper circuit that it was locked in, and you've seen quite some gain coming in. For something like Cohance Life Sciences, let's also talk about something like the Shriram Finance on the flip side. About a 4% knock, one of the biggest losers from within the Nifty 50 right now. Let's also get you the brokerage verdict in terms of what you can be expecting for this particular counter. Shriram is joining in with that particular answer.
Well, yes, Shriram Finance reported a strong Q4 results, and that was driven by a operating performance. And the profitability of the company has also remained strong with stable margins and reduced operating expenses. The asset quality of the company has largely remained stable, and funding cost and the capital that was raised from the MUFG tie-up has been the tailwinds for the company. However, there remains a question on the growth, and going forward, the growth acceleration will be the key trigger. Now, with the brokerage stances, Bank of America has maintained a buy rating with a target price of 1180 rupees, and they have stated that the earnings was a beat as there was a reduction in the operational expenditures, and the cost to income ratio for the company has sharply improved. Also, the gross stage 2 and gross stage 3 remains a key monitorable, as there has been an uptick in those factors. Second was the Morgan Stanley, where they have maintained an overweight rating with a target price of 1250 rupees, and they have said that on the funding cost front and capital infusion, those metrics have been positive for the company. UBS has given a buy rating, and they have increased the target price to 1220 versus 1200 earlier, and they have said that the company has witnessed a strong momentum in the commercial vehicles portfolio, and recoveries in the gold loan portfolio has also been witnessed. JP Morgan has also maintained an overweight rating and has given a target price of 1180 rupees. The core profitability of the company has remained robust, and growth delivery remains a key monitorable, and the re-rating of the stock that depends on the growth acceleration and execution.
And that makes sense in terms of the brokerage verdict as well. Let's also talk about one counter that's actually buzzing away in trade. UltraTech is also all set to report its numbers. Puneet is standing by in terms of what the street is penciling in here. And Puneet, telling by the way that the stock is reacting, it looks like it's going to be a positive set.
Well, most certainly, and it's going to be a very interesting quarter as well, because we've seen geopolitical landscape impact petcoke prices, which is a key raw material for all cement makers. So you could see an impact on margins there, but a lot of the other key aspects to watch will be the growth in revenue. 12% is what Street is estimating at 25,900 odd crores. EBITDA as well as the profitability is expected to rise by 14% each, with the margins looking at 20.4% versus 20% in the same time last year. Now, all of this will be led by a volume growth in this particular quarter. Industry has grown by almost 8% according to most brokerage estimates. For UltraTech, that volume growth is expected to be 12% at 46 million tons for this particular quarter. The also blended realization per ton is expected to rise to 5,612 crores, and the EBITDA per ton might see a decrease of 2%, similar to what we've seen in the last couple of quarters at 1,099 rupees per ton, given that Kesoram and other assets are at lower EBITDA realization at this point of time. What I'll of course watch out for will be how the petcoke prices have impacted the margins, if any, and the pass-through as well, because we've seen a price hike happen in April. If that is sustainable, will be the key aspect to watch for UltraTech this quarter.
Absolutely, and thank you so much, Puneet, for joining us with that entire update in terms of what is being penciled in for something like UltraTech as well. And you do have something like a Coal India that's in focus. It's a muted set of numbers that you're largely penciling in, but Parth is standing by with that update.
Right, so Coal India is expected to report a muted quarter due to weak volumes, but slightly supported by better realizations. The e-auction premium improvement will support the overall blending realizations for the company. However, the volume decline will remain a key drag for the company in this quarter. The margins are expected to improve sequentially due to those realizations that we just saw, but the operating leverage and demand trend remains mixed for the company because of the weak offtake offtake that they saw in this quarter. If we have a look at the expected numbers in Q4, then the revenue is expected to rise around 1% to 37,800 crores, while the EBITDA is expected to fall 1% to 11,680 crores. The margins are also expected to decline 130 basis points to 29.8%, while net profit is expected to fall 12% to 8,470 crores. If we have a look at the factors which will be impacting earnings for the company, then the coal offtake has declined around 1 to 2% year on year, impacting the overall volumes for Coal India, and the production has also largely remained flat during the entire quarter. But e-auction premiums has improved, which will boost realizations, and the realizations are also expected to rise because of the improving product mix. So two things that are going well for the realizations in terms of realizations for the company. But FSA volumes, which are basically the longer term.
And it does look like, Parth, that the set of numbers that you're looking at seems to be a little bit of a muted quarter. And when you talk about the stock as well, you're seeing that muted reaction also come in. Thank you so much for joining us with that entire update. But tell you what, with that, we're completely out of time on this edition of Lunchtime Trades. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So first, let's see what's on the show today. Firstly, we'll be speaking with management, which will be coming out with its IPO soon. We'll get to that on a later stage, but the stock that we'll be discussing firstly on the listed side is Analyst Healthcare. Now, the stock is up nearly 33% in the month of April, and recently, the company has announced multiple acquisitions. One of them is acquiring 64% stake in a company name called Remember India Health Links. Apart from that, we'll be discussing a couple of counters. Firstly, Venus Pipe. That stock has managed to gain 13 out of the last 15 trading sessions. And in the last 15 trading session, the stock is up nearly 46%. And lastly, we'll be also speaking about automotive stampings. Now that counter had hit a 5-month intraday high on the back of strong volumes. The company reported its fourth quarter numbers, and if you look at the net profit, that is the highest that the company has reported in the last 3 years, and that is a major reason why the stock has been gaining in trade. Now if you look at the markets, the Nifty has managed to go above the 24,100 level, but for the better part of the day, we were quite range bound. From 24,000 to 24,100 was the tight range where Nifty was hovering around. And if you look at the sectoral indices, the gains were largely led by pharma and metals and real estate. On the pharma side, it's Sun Pharma. On the metal names, it's Hindustan Zinc, which has been leading gains, and real estate index has also perked up in trade today. On the losing side, only banking names are there, and this is largely because of few names like Axis Bank, RBL Bank, AU Small Finance Bank, which have been trading lower. But it's a good day for the small cap names as well. And on the small cap side, if you look at on the gainer side, it's IRM Energy, which is up around 18%, followed by ePact Durables, up around 17% in trade. One MobiKwik, Man Aluminium, Ratnavir Precision, up anywhere between 11 to 14% in trade. ePact Prefab is also up 11%. Ram Ratnawise is also up more than 10%. On the flip side, AB Cotspin India, that stock has hit a lower circuit of 20%. Anlon Dollar Industries, Shukra Pharmaceuticals, Vashu Bhagnani, all these counters are down between 5 to 6%. Apart from that is RDB Infra, Reliance Infra and Axis Solution, which are also down 5% in trade today. Now let's go across to the company which will be raising funds from the market soon. Parth is coming in to give us some more details on EMI Technologies, which will be launching its IPO very soon.
That's right, Somit. So another big IPO is going to hit the primary markets pretty soon. OnEMI is basically a technology-enabled lender operating in India. They offer digital loans through their mobile apps for the consumption and business needs for peoples. They operate under two platforms. The first platform is Kisht, which is basically a digital lending platform, and the second platform is Ring, which is a payments app that is offered by the company. They have around 6.37 crore registered users as of 31st December 2025, and their assets under management stand at around 5,955 crore as of the same 31st December 2025. Quickly, if we have a look at the IPO data, then the IPO is opening on 30th of April and will be closing on 5th of May. The price band has been set between 162 to 171 rupees per share with a lot size of 87 shares. The total issue size stands at 926 crores, which includes a fresh issue of 850 crores and an offer for sale component of 76 crores. Out of the fresh issue, 637 crores will be used to meet the capital requirements for their subsidiary, while the rest of the money will be used for general corporate purposes. If we have a look at the financials, then we can see a few key highlights. Their assets have grown from 1,275 crores in 31st March 2023 to 3,500 crores, over 3,500 crores in the 9 months FY26. Their total income has also grown from 1,001 crore in FY23 to 1,500 crores in 9 months FY26. But there's one key thing that their total income declined from 1,700 crores in FY24 to 1,352 crores in FY25. Also, their borrowings have increased significantly from just 380 crores in FY23 to over 2,000 crores in the first 9 months of FY26. So these will be the key things to monitor the commentary of the management for this company going forward. Coming back to you.
It will also joined by Ranveer Singh, the Chairman CEO of OnEMI Technology Solution. So firstly, to start off with, AUM growth has been quite strong. What is the sustainable growth range that investors can expect from the company, say, over the next 2 to 3 years without compromising on credit quality?
Absolutely. So, first of all, the growth in the past is coming on the back of the strong AI and ML model that we have built. We have been using this over a period of last 8 years. We have seen COVID wave 1, wave 2, many other cycles as well. So the confidence and conviction to deliver growth comes from, having a risk predictability that comes while using this model. and that is the biggest contributor to the growth. And from a future standpoint, we continue to use the same model. We continue to harness, sharpen it as we go along.
In terms of borrowing diversification, where do we currently stand and where do you see the borrowing cost trajectory going forward?
Absolutely. So I don't know whether you noticed this or not. CRISIL has rated us A minus around 1.5 months back. And as you know, once you move from BBB plus to A minus, you tend to see a good drop in the borrowing cost. And from a borrowing diversification standpoint, we not only rely on term loans from the banks and other financial institutions. We also have off-book arrangement, which is kind of a quasi borrowing. We also have other structures like NCDs and other things. So it is quite a diversified mix of things. We also do PTC transaction. But in terms of the borrowing cost, given we have been just rated, the incremental borrowing cost will see the benefit of that. And the other thing we see is as you grow big in the system, we are hoping that it will be recognized by many other lenders, and it should have a positive impact on the borrowing cost also.
Okay. Mr. Singh, the mix of secured and unsecured is shifting. Secured lending share is growing versus unsecured lending. Is this shift strategic?
You are absolutely right. We are seeing a shift. It is very, very strategic in nature. The strategy behind this is not only to diversify our book, which is not only keep it unsecured, but add secured also in a decent quantum. But more importantly, it also is catering to our customers. So large part of the secured also comes, a decent part of the secured comes from catering to our existing customer. So it's basically a combination of we want to serve our customers in a far more wholesome manner, plus the strategy around further diversify as you become big and then go along with it.
Sir, if you look at your OPEX as a percentage of revenue, that is much higher compared to what peers are reporting. How are you strategizing to reduce your operational cost?
Absolutely. So you are right. The OPEX are higher right now, but OPEX is also a function of the scale that you have. It is also indicative that there is a significant operating leverage which is there in the company, which one can avail in future as one builds the business further. And as you scale up, there is a part of the OPEX, which is the indirect cost, that doesn't scale up in the same proportion. So for example, if our AUM has grown almost at a rate of 60-70% over last many years, the indirect cost or the fixed cost hasn't increased. So one will only see the benefit of fixed cost as a proportion of revenue coming down because that will increase at an inflationary rate. But of course, the direct cost will continue to go. So it's a function of scale what I'm talking about.
Mr. Singh, there's a declining trend in provisions coverage ratio. Does the company have enough provisions buffer for contingencies going forward?
Oh, absolutely. The decline that you are seeing, I mean, if I talk about the 9-month December data which we have put in RHP, it is still at a rate of 86%. And if you compare 86% with some of the other players in the market, you will realize that it is still one of the highest. So this is the provision coverage is basically driven by our assessment on what the risk is going to be and then providing it for that. I think we have taken a very, very conservative stand on provision coverage, so that continues to remain there. Despite the number that we have, we are one of the largest, we are one of the people with the very high PCR if you compare with the cohort group of competition that we have compared with.
And so with India's credit penetration still being low compared to what we see in other markets, what is the market share that you're targeting now?
So first of all, you are absolutely right. The numbers in India are still very modest from a credit penetration standpoint. There's a huge latitude for the growth here. In terms of the specific number on market share, it would be unfair for me to put some numbers because that's a function of how the market would be in future and what are other players in the market do. But your observation that it is a very big opportunity, and not only that, what you will also find is not only the credit penetration has a scope to increase, but a large portion of the credit is also moving towards digital. And once you move toward digital, it always benefits for people like us. With every passing day, not only urban, but semi-urban, they are just becoming more digital savvy. Not only digital savvy, but people like us who do digital underwriting, they are able to collect enough and more information. They are able to assess the sustainability of income, which will pave the way for our future growth in a significant manner. But unfair for me to put any number on the market share as we go along.
All right, Mr. Singh, thank you so much for taking out the time and helping us answer all those questions. All the best for your IPO going forward. But viewers, time to slip into a very, very short break. We'll be right back on the other side discussing all the small cap buzzers, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner.
Welcome back. You're watching Small Cap Buzzers here at NDTV Profit. Now, the stock that we're going to put spotlight on is Analon Healthcare. Now, the company is on a spree of acquisitions, and to understand as to what these acquisitions are going to mean for the company and what synergies are they going to bring in, to discuss all of this, we're joined by Puneet Rasadia, who is the Managing Director of Analon Healthcare, joining us now. Puneet, thank you so much for taking on the time. Two recent acquisitions. The one is Biosimilar Life Sciences, and the other one is Remember India. Both of these playing important part, I believe. Just want to understand as to how will you benefit from these acquisitions and what synergies will they bring to your table? Okay, I think there is some technical... hi Puneet, can you hear me? Okay, I think there is some technical glitch there. So that's, of course, with regards to Analon Healthcare. So recently, in April, the stock has seen a growth of around 33%, and there's corporate action triggers that has also, triggered this stock move coming in. There is 1:1 bonus issue that happened in April. There was a share split also that happened from 10 rupees to 2 rupees per share. Authorized capital also they increased from 55 crore to 110 crore. And this, probably indicates that they might go ahead and do fundraising. We'll have to wait and watch out for that, and we'll also ask the management.
The corporate action, some profit booking coming in, because if you see in the month of April, the stock has run up massively. Good performance coming in, and some kind of profit booking after the corporate actions have actually taken place on record. Another acquisition that you were talking about, one of them is Remember India Health. Now they have acquired around 64% stake in this company for around 5.38 crore rupees, and this acquisition is expected to complete in the next 4 to 5 months. But let's get in Puneet Rasadia to give us more details on. Firstly, sir, the 64% acquisition, 64% stake acquisition that we were talking about, Remember India Health Link. How does this acquisition benefit the company, and what's the way forward for this?
Yeah. See, basically, before this acquisition, Analon had recently acquired 2 more entities for manufacturing intermediate and APIs, Organics and Biosimilar Life Science, just to secure our back-end supply chain for KSM and intermediates, which indirectly expands Analon's production capacity for API manufacturing. Regarding this proposed majority stake acquisition in Remember India Health Link, this transaction represents not only the acquisition but also strategic forward integration within the pharmaceutical value chain. Enlon, as a company acquiring controlling stake in a finished dosage formulation entity, is effectively moving closer to the end market, delivering multiple strategic advantages. By entering in this sector, Enlon stands capture additional value across the supply chain, extending from raw material through to finished product. This presence of an internal consumer for its API reduce dependency on third-party buyer, minimize volatility, and improves the capacity utilization. The combination of API expertise and formulation capabilities accelerate product development and facilitate faster commercialization of complex generic and specialty products. In nutshell, this initiative constitutes more than acquisition. It is a decisive value creation step and comprehensive upgrade of the business model. It transforms Enlon from a back-end manufacturer into the front-end pharmaceutical player with enhanced pricing power, improved margins, and strong growth potential. I think this move provides significant valuation upside and offers a re-rating opportunity for the stakeholder. And I think this acquisition we can complete within next 3 to 4 weeks.
Puneet, just want to understand, considering this acquisition plus the earlier acquisition of Biosimilar Life Science also, what is the overall top line contribution that you would be expecting in FY27 going forward from these acquisitions? And will you be putting any kind of money to grow this acquisition as well? How does that work out?
See, we are, I think, for this current FY27, the top line will be definitely almost 2 to 3 times and compared to what we have published this 3 quarters result. Regarding means that in terms of top line and other growth perspective, the capacity expansion, significant investment are being directed towards both API and finished dosage facility. And this initiative aims to support growing demand, improve operating leverage, and position the company to seize large global opportunity, increase capacity utilization, and expect to enhance revenue visibility. So I think we are expanding our presence in regulatory market while scaling the operation in emerging market across Asia, Africa, and LATAM. This diversification mitigates concentration risk and allows the company to leverage multiple growth engines. I think overall FY27 is anticipated to be the pivotal not only for the top line growth but also for margin improvement, strengthening the business model and positioning company as a fully integrated, globally competitive pharmaceutical player.
Sir, if you could also just give us some idea, is the company looking for further more acquisitions going forward? What are the key expansion plans here?
We are aggressively planning for organic expansion in our existing site, and maybe it will be 4 to 5 times capacity of our existing plant. And it is well timely moved, and global supply chains are shifting, and there is a strong opportunity for Indian manufacturer to capture additional market share. With this scale up, and Enlon is positioning itself to meet both domestic demand and large export opportunities. And same time, the entry into biological APIs, especially peptide and some of the bioproduct, that will be the game changer for the company. And I think this is a high growth and high margin segment, and significant entry barriers in terms of technology and regulatory requirements. And moving into peptides and bioproduct takes the company beyond the traditional generic into more specialized and future-oriented space. Additionally, this finished dosage capability adds strong front-end presence. This means Enlon is no longer just a supplier, but it becomes a market-facing player with better pricing power, strong customer relationship, and more stable revenues. So if you put all together, acquisition, aggressive capacity expansion, and entry into complex biological APIs, this is a multi-layered growth strategy. And over the next 2 to 3 years, Enlon is likely to see not just strong revenues, but also meaningful margin expansion and potential valuation re-rating, and it transforms into the scale integrated and future-ready pharma platform.
Right. Sir, if you could also just take us through what are the key timelines here for further drug approvals, and what is the kind of growth that you're looking at when it comes to the nutraceutical industry and your company as such?
See, when we talk about the drug master file approval, timelines are typically depend on the complexity of the molecule and regulatory market. But broadly, you are looking at to 18 to 24 month cycle from filing to final acceptance in most of the regulatory market, like in China, Brazil, Europe, and Japan, everywhere. But depends on the molecule and its documentation part. So normally China will take 12 to 18 months, and they've recently tightened their review process and quality and data integrity critical. Anvisa Brazil is relatively strengthened compared to other countries, and it takes at least 18 to 24 months. And Brazil is a high regulated market, and approvals often involves detailed inspection and documentation review, while in EDQM, the CEP route is most preferred when timelines are typically 12 to 18 months, depending on query cycle and dossier this completeness. So overall, regulatory approvals are time-bound, but high-value milestone once secured, and they open up large regulated market and creating long-term sustainable revenue streams.
Right. Well,
For
thank
the
you.
nutraceutical, I think your question on nutraceutical industries, I think this nutraceutical industry is experiencing significant transformation marked by strategic shift towards preventive healthcare opposed to reactive treatment. And three primary factors are pipeline for the sector after post-pandemic COVID. Consumer priorities are increasingly centered on immunity, wellness, and prevention of chronic disease.
Right, sir. Well, thank you, sir. Thank you for joining us and giving us the way forward for the company. Well, that was the management. Now let's go across to our fundamental guest, Kush Gupta, Director, SKG Assets and Holding. Kush, you heard the management. Post these acquisitions, do you see more upside from the current levels on this counter?
So first of all, hi, thank you for having me over. It's a good day to be on the screen. It's easy, it's nice, everything is up. So specifically talking about Analon Healthcare, I feel yes, the management is making some moves in order to do inorganic growth and acquisitions. But I do feel the pharma sector, especially that are dependent on exports, do tend to have a concentration risk. Export tariffs in South American countries and even in US are creating a lot of problems. So apart from that, pharma we are bullish on, and we can see a little bit more upside as long as they can avoid concentration risk to specific countries.
Okay, all right. Okay, so that's the view coming in on Analon Health. But, as always, it's time to take a look at the F&O space and as to how the setup is looking like right now. We have Puneet joining by to give us cues as to how, things are shaping up in trade right now. Puneet, over to you.
Well, thank you for that. Well, definitely the Sensex shows you the heat map as well as we go forward and look at some of the key stocks. Sun Pharma continues to be the one with the maximum gain, so is Adani Ports and M&M, while Axis Bank continues to bear the brunt today for the index and the market as well. But when you look at some of the key stocks, longs as well as shorts that we are covering both at this point in time, longs being built up definitely on Sun Pharma post their acquisition, streets taking it with both hands at this point of time. Oracle Financial also is one which is seeing a massive build-up of longs. Stocks up 4.7% as well. In terms of short covering, you're seeing Hindustan Zinc post-earnings, shorts being covered, so is for Torrent Pharma. But in terms of the other key aspects, which are longs being unwinded, you're seeing RBL Bank where results largely in line with estimates, but not in terms of convincing at this point of time for the street enough. So you're seeing longs being unwinded, and so is Jubilant Foodworks. And finally, shorts being built up, fresh ones are on Axis Bank as well as on Shriram Finance post earnings, as well as on commentary for growth for Shriram Finance that the street's not liking at this point of time.
Thank you, Puneet, for that F&O setup. Let's move across to Jasmeet to understand what's been buzzing when it comes to Venus Pipe. That stock has been on a tear, gaining nearly 13 out of the last 15 trading sessions.
Well, thank you for that. We look at the particular counter, Venus Pipes. What the company does is company operates into the stainless steel pipe manufacturer and exporter, though they have a very limited export share, but still exports to US and Europe. Now, in terms of the pipes they manufacture, they are into welding pipes, seamless pipes, and also heat exchange pipes. If you look at the stock performance, the stock is up nearly 8% in the last 5 days, but over a year, that way the magic comes in. The stock is up nearly 19%, but over last 1 month has rallied nearly 53%. Now, what is leading to the overall rally and why the company is on a verge of getting more and more order is because firstly the overall order inflow of the management remains healthy, stands at 470 odd crores as of Q3. Further, the company also noticed that a lot of clients are moving from unorganized player to organized player, which is benefiting someone like Venus Pipes given they're into organized space. While thirdly, if you look at the overall order inflow from Europe, it has stayed steady, though the company sees softness in the US sector altogether. Further, the company also notes that the domestic player, the seamless pipe, is gaining attraction for the management. That's the reason why the stock is buzzing into it. That's why the company has a healthy order book as well.
Well, thank you, Jasmeet, for that. Kush, any view on Venus Pipes at the current valuations attractive? Would you recommend this stock to your clients?
So Venus Pipe has shown considerable growth lately, and they're quite diversified in terms of their sectoral exposure. They're in chemical, pharma, power, defense, and aerospace. So I would definitely think that there is still more upside in the stock. While it has gone over 50% in 1 month, one can be cautious. But from a 18 months to 24 months point of view, I would say Venus Pipe could make a good addition. Specifically because it's linked to the structural shift that we are seeing in the country. There is a lot of infrastructural growth, a lot of housing growth. So stainless steel and pipes and specialty metals, we're very bullish on.
Okay, all right. Coach, thank you so much for giving us that perspective on all the small cap buzzers that we discussed. But with that, viewers, completely out of time on this edition of Small Cap Buzzers. But if you've got stock-related queries, then do stay tuned because Ask Profit is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open.
Welcome back. You're watching NDTV Profit. My name is Puneet Zaveri, and Sun Pharma continues to be a key stock in focus today. Arguably one of the stocks of the day post a big acquisition that the company has done of Organon. Now we've seen the street react positively. There have been commentary, a lot of it made on by the management as well in terms of the debt increase. But let's listen in from the management itself on what they have to say on this acquisition.
All right, a large acquisition that has been announced by Sun Pharma. We have the management here with us to take us through some of the details which have not yet been addressed, hopefully. So, Kirti, Jayashree, so good to have you on NDTV Profit. My first question to you, Kirti, it is a difficult time. when the Ranbaxy turnaround happened, things were very different. The world was very different. Right now, we are more than 2 months into a war situation, which is having an impact across the world. Cash is king. At this particular time, buying out such a large company with a huge amount of debt, and the turnaround is what you're pitching for. How difficult, or the confidence that you bring, that what is going to be the rationale for the turnaround of Organon after the acquisition?
Sure. I think what I strongly believe, times are always challenging. There are sometimes good times, there are challenging times. But my philosophy is what we can do during the challenging time is equally important.
Yes.
So when we are looking at Organon as an acquisition, it's a large asset. It's the same size asset like Sun Pharma. And by acquiring these assets, if I am able to grow the business, I am able to generate the synergies, then it's a good acquisition in my opinion. And time, there will not be a perfect time. Like you said, Ranbaxy, when we acquired, the time was good. But now the time is challenging. And we don't know how much this time will last, being challenging. But during this period, if we are able to bring back growth in the business, then I think I will be very happy that we have done the right acquisition for Sun.
So what is the timeline that you have set internally for the turnaround from 1 or 2% growth of Organon to higher single digit? In how much time and visibility, if you can give at least by internal matrices?
Sure. So what we said, I think you have to look this business in two lenses. Is we will generate certain cost synergies.
Yes.
And this cost synergies, close to about $350 million, will get generated over a period of 2 to 4 years. And in my opinion, there are good or large number of sales synergies, which right now we are evaluating, and it will help business to grow further.
Yes.
And it will help to grow all three business segments.
Yes.
As in, like Organon has an innovative business, then they have biosimilar, and they also have established product business. So in all three business areas, I am looking at how do we grow. I cannot give an exact time when we can bring this growth back to the track, but the effort is to do at the earliest possible date.
So like the cost synergies that have been mentioned, Jayashree, is $350 million in 2 to 4 years. There are revenue synergies that are estimated, and then the growth outlook, which you have not put a timeline on.
Right, yeah.
All right. So, Jayashree, when we talk about the cost synergies, you've given the timeline. You said the debt EBITDA levels, and that is 2.3x, which you are comfortable with. Dilip Sanghvi also stated that there is high debt and high risk, and I'm a risk taker. But I want to ask you one question. When it comes to corporate finance, debt equity is a very important factor in getting the required cash flows and generate the growth capital also by debt or equity. It is around 6 times back of the envelope calculation. How are you going to really, give a rationale to such a high level of debt of 6 times of your equity, and also deal with the finance charge at the moment with the huge amount of debt? Because even though EBITDA accretive, EPS accretive, you're saying, but from EBITDA to PAT, a lot will be eroded in terms of finance charges.
Okay, here's a good question. Let me answer it in 2 ways. One, both these companies, Sun and Organon, are cash generating entities. Together, at a pro forma level, they generate about $2.5 billion in terms of cash. And with the growth opportunities that we just spoke about and the cost synergies, the cash generation would only increase over a period in time. With all of this and a very disciplined approach, which Sun is used to, we believe it would be sufficient to look at debt repayment at a decent period in time. Sun has a strong balance sheet, and based on our discussions with the credit rating agencies, we would have a good credit rating. And
what is a decent timeline for debt reduction?
We are not coming up with a timeline at this point in time, but we think it would be lower than what currently Organon has been looking at in their financial projections.
All right, so $2.5 billion combined of free cash flow, but also growth capital is required. All of it cannot be going in for the debt, servicing as well, Jayashree. So looking at the cash component that you have ascertained to give $2.5 billion out of the total enterprise value that you have already stated. So in that, what is the last cash equivalent with Sun Pharma? In that also, do you require mezzanine or a financing, so to say? How much cash do you have, and $2.5 billion of full cash do you have?
Yeah, currently we have about $3.1 billion of cash, and 2 to 2.5 would be used out of our current cash surplus for financing the transaction. The balance of about 9.25 to 9.75 is what we are looking at as an external borrowing. Here too, our idea is to see if we can swap the existing debt, discussing with the bondholders of Organon, and if that is possible, only the incremental would be a additional financing that we have to pick it up. And we do believe our credit rating would be better than that of Organon today, and therefore the cost of financing should also be in comparable terms. The reason why I'm saying comparable is some of the debt that has been contracted by Organon was way back when the spin-off had happened from Merck, and those days the interest rates were lower. So we should be able to get a good interest rate, in our opinion. And with the cash surpluses that we have currently and the generation that will come in, that would be good for us to look at the debt repayment. You had a question in terms of would you need capital for further acquisition of assets? Obviously, it would be required. But for growth, as Kirti mentioned, there are two areas that we look into. Growth by investing in marketing. Growth by leveraging the platforms of Sun and Organon. Growth by in-licensing. So each of these would require some amount of capital, and it has always been factored in both the companies' long-term plan. So I don't think that should be a constraint as we go forward.
All right. So that bond, do you have visibility on when the bond maturity could really come in after your acquisition is complete? The first ones, are they maturing a little, in the recent times?
No, we do have visibility in terms of the bond maturity, but I think it will be too premature for me to discuss about the...
Sure. So Kirti, talking about what you have really gained over here, apart from the global diversification also, which is important right now, and two areas where you sell already existing products and you increase the platform and distribution network that you're selling in. And the second is the growth, also committing to the growth prospect of future, which is biosimilar. But biosimilar entry, while it is a very positive direction for Sun Pharma, but on the other hand, it's a very competitive space. Every pharma company is looking at it for a growth. With this, what will be your USP and moat in really being ahead of the competition with a leverage buyout?
No, I think what's important for you to understand is the biosimilar market dynamics. So today, Organon is the 7th largest player in biosimilars worldwide, and they have 6 to 7 products already on the market. So they have a commercial infrastructure, which is available through which we can sell the biosimilar products. Today, Sun do not have any biosimilar product except few products in India. And what is important for you to also understand is large number of biological products, they are going off patent. As an example, I can tell you is like product close to about $350 billion are going off patent by 2035. So that will also give us a lot of opportunities for you to develop new biosimilars and use this platform to launch them across the world.
Right. So that's 10 years away from now, Kirti. The initial stage of growth and deleveraging will have to be heavy lifted by the combination of the two companies in the existing portfolio that you have, right? So that will be the task ahead for you. But when we really look at, the in-licensing, out-licensing, the line extension you spoke about, biosimilar, and of course, women health, which is the primary thing. And with this acquisition, it puts you number 3 in the world. What are the growth opportunities over there? And out of the 3 segments of 51% with established brands and generics, as well as innovation, and third being the new products, biosimilars, in this, what will be the biggest growth driver in the foreseeable future?
No, I think you need to put this into three buckets. So one part is innovation. So innovation, our current portfolio is 20%, it is growing to 27%. So as I see, this is a part where we need to do in-licensing of the products in women's health area in terms of dermatology so that it can continue to grow.
Yes.
So that growth will be much higher. Today, all our innovative business is growing in double digit. Coming to established product business, which is close to 50-51%, is not growing. So there we have a lot of good ideas in terms of how do we extend the life of the current established brand and how do we launch new forms of those products, new formulations, new combinations, so that they also start growing. But they will not grow as fast as like an innovative product. And of course the biosimilar is already growing, like it's growing by 13%. And what I talk is by 2035 is the product patent expiries. But there are good number of product patent which will keep expiring every year. So I see the growth opportunity in all three buckets. The numbers will differ, but they will keep growing.
In your view, which is going to be the highest growth driver?
Now, of course, means in terms of revenues, the innovative business is always a higher growth driver.
All right. And Jayashree, when we really look at the overall numbers, and you said about the synergistic impact also of 2 to 4 years. In the first year, what part of that synergistic benefit can really be accounted for? Give us a little sense and the rationale behind it.
I think the synergies will start kicking in from year 2 to 4. It would be too ambitious to think that the synergies will come in year 1. In fact, year 1 we could see some amount of cost that could play in because of integration, because of transaction costs. But over a period in time, say about a couple of years, the margins would improve with the synergies kicking in and the growth opportunities also coming in our way.
So will it be also correct to say that for 2 years, there won't be synergistic benefits which will come in while the debt clock will already start? And yes, you are EPS accretive, but from EBITDA to profits, your financing cost will also weigh in.
Yes, the financing cost will weigh in all through the period until we repay the debt. Having said that, these synergies as they come in will help in improvement of the margins.
And sales synergies, will they start kicking in from the first year? Is that an estimate also?
At this point in time, we only have those ideas. We would be working over the next 6 to 9 months before the closing in terms of further solidifying these ideas in terms of actionables and also looking at the time frame and the values.
Sure. And Kirti, my final question, of course, global diversification is one master stroke with this acquisition. I must say that because our dependence on US has cost us a lot in terms of the tariff uncertainty, which we really looked at for a longest time. And of course, with the new tariff structure, which has been last announced by the US, in that, what is the impact on Sun Pharma at the moment, and how are you going to tackle it, and what is going to be the actual impact on the numbers?
So as I said, it's like tariff impact on Sun will not be very big. We are not quantified and told that the exact number. But we believe that we will be able to manage the business without having much impacts on our bottom line. Yeah.
So Illumia, that from your specialty product portfolio from Korea, so that's going to really be attracting the tariff that has been newly announced by the US. And that is a fairly large, sizable business for you from one product. So therefore, I wanted to understand the impact.
No, this is a very complex subject, and we are also working on this to see that it doesn't get much impacted into the business. I won't be able to disclose all the details, but at a certain point of time, we'll also talk about tariffs and tariffs' impact on Sun's business.
Well, that was the management of Sun Pharma speaking to NDTV Profit on the acquisition. But let's go across, start taking your stock-related queries right here on Ask Profit. If you haven't already, do start sending them. Let me welcome in our guest, Vishnukant Upadhyay. He's the AVP Research at Master Capital Services, as well as Lancelot Dicuna, CIO Value X Wealth Connect as well. Gentlemen, both of you, thanks so much for joining in and patiently waiting by. The first question now coming in on NBCC. Mohit is holding shares at 26.6, so he's sitting on considerable gains. Vishnu, his question largely being, should he continue to hold this counter for the next few months, years, in fact, if the chart trajectory shows momentum? What's your view?
Hi, Puneet. Good afternoon. Yes, definitely. We have seen a very good, strong breakout in today's trading session, and I'm expecting prices to extend the gain towards 100, 102 sort of levels. So, yes, he should continue with the position.
Okay, the next one is coming in on Patel Retail. Our viewer Ekambarai is holding 50 shares at the levels of 225. Wants to know if it's it's a good hold for the next 1.5 year, or should he book his losses? Lancelot, any view on this counter?
I think, if you look at the valuation, the stock is trading at an expensive multiple, considering that the margins are fairly low. So one should, probably look at booking loss and exiting from this at this point in time.
Lancelot, the next question coming in on Voltas, and our viewer has bought shares at 1431. This is Saurabh Goyal, and he's asking what he should do for the next 3 to 4 months. Vishnu, what's your view?
Well, so in short term, I'm expecting prices to, reach towards 1570, 1580. And if prices manage to, give a breakout above 1580, then definitely one should, he should further accumulate the position. But for that level, he should hold the position.
Now, in order to answer more queries, I think we've decided to start the rapid fire round and take as many questions as possible because we had a curtailed Ask Profit session. So, Lancelot as well as Vishnukant, you both know the drill. Try to keep your answers as short as possible. The first one is on CESC. After today's breakout, is it a good hold from here on? Is the question. Vishnukant, your view?
Yes, definitely. One can hold the position for the target of 195.
Our viewer Satyan has bought Schaeffler at 4,000 rupees per share. Lancelot, should he continue to hold that by the end of the year?
Yes, hold for the long term.
TVS Motors bought at the levels of 3705. From a short-term perspective, good hold, Vishnukant?
Yes, definitely.
Jaiswal Neko bought by Manthan from Ahmedabad. He's holding shares at almost 40 rupees per share. I know Vishnu, a very limited time frame, but any view on the stock now? Should he book his profits?
1 second.
Sorry, Vishnu, I didn't get the view.
In fact, the stock is trading. You talking about Jaiswal Neko Industries, right?
Yes.
Yeah, one can hold. The stock is on currently breakout, so one can hold the position.
Okay, HFCL is the other one. 5,000 shares bought at the levels of 70. Can I continue to hold or book profits on this one? Lancelot, any view?
But I think you should book profits.
CG Power, Lancelot, our viewer wants to buy it for the next 2 years. Is this a good entry point?
If your time horizon is a little longer, then yes, it is a good entry.
Okay, PFC bought at the levels of 415. Soumya from Bangalore is holding 60 shares. Wants to know if she can book profits right now or continue to hold from a short-term perspective. Vishnukant, your view?
Prices are likely to extend the gain towards 490. So for that level, one can hold the position.
Force Motors bought at 21,902, Vishnu. Our viewer V Murli is holding 20 shares at that price. Should he continue to hold for an 8 to 15% move?
See, prices has given a breakdown from the rising trend line support. So he should maintain his stop loss below 19,200.
BEL, can I enter from a current levels perspective from a long-term view? Lancelot, your view?
Yes, if your horizon is long, you can enter.
Sai Kumar is holding on to Shriram Finance at 958. Now, Lancelot's reacting to probably some growth concerns in commentary while the result was still good. What's your view on the stock now?
I think it's better to look for stronger companies one can exit.
Okay, Kajaria Ceramics, 100 shares bought at the levels of 1198. Is it a good hold from a 3 to 6 months perspective, Vishnukant?
Yes, definitely. Hold the position.
Coforge bought at 1,493. 10 shares is what MM Kapoor holds. Vishnu, stocks are 4.5% today, but what's your view on the stock?
In fact, the prices are trading below the key moving averages, so I would, recommend to stay with the counter.
IEX 272 shares bought at the levels of 165. What should be the next course of action, Lancelot?
I think one should exit.
Colgate Palmolive bought at 2180, Vishnu. Ramesh wants to know what he should do with this counter. Should he still wait for some more time?
Yes, definitely. One can wait because the stock is currently trading in the proximity of 200-day key exponential moving average.
Shakti Pump bought at the levels of 1,200 rupees. What should be the future outlook for this one, Lancelot?
hold or you can even buy it as well.
Sunny Sharma has bought into BEL at 197. So he was one of the early investors in this rally. Asking what he should do with his 800 shares, Lancelot.
He should continue to hold.
EID Parry 50 shares bought at the levels of 850. Can I add more? Want to hold from a long-term perspective? Dilip is asking this question. Lancelot?
No, don't add more at this levels.
Narasimha Reddy is unfortunately holding Infosys, Coforge and Persistent all in losses right now. Lancelot, would you be selective or exit all three right now?
So I would be a little selective and hold Infosys and which is the other one you said?
Coforge and Persistent.
Hold Infosys and Persistent. Maybe look at exiting Coforge.
Okay, Clean Science from a long-term perspective, is this a good entry point? A lot of brokerages have gone ahead and initiated coverage on this one. Lancelot, your view?
Yes, one can look to add.
Transformers and Rectifiers holding at 300 rupees per share by Sunita. Any view here, Lancelot? Should she continue to hold?
It's expensive, so book profits.
Okay, the next one is on Cantabil. 2,500 shares bought at levels of 254. Technical views on this one?
Which is stock? Cantabil.
Cantabil, yes.
Cantabil.
It's a small counter.
Yeah. So the stock is just drifting in a very thin horizontal band. So there is no clarity on the stock currently. So one can maintain the position with a stop loss below 237.
Okay, all right. So that's the technical view coming in on Cantabil Retail. But with that, Lancelot as well as Vishnukant, thank you so much for taking out the time and helping us answer all those queries that we were able to take. But viewers, completely out of time on this edition of Ask Profit. But do stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. on Editor's Cut. Our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Very good afternoon. You're watching India Market Close, and it's turning out to be a good afternoon indeed on this marvelous Monday. 200 points up on the Nifty. Stayed steady through most of the day. This despite heavyweights not quite participating. So the breadth is good. Even the advanced decline is very, very robust and healthy for a time when Brent is at $107 a barrel.
You know, to add to this, what I would want to say is if you look at the contributors, you will see the kind of shift that's happened from a Reliance Industries, which has become the top contributor, Sun Pharma, and a HDFC. So you have the top three names which are giving you that run. However, it's the banks which are still, except a HDFC, if you have to look at Axis and ICICI, they are actually forfeiting the kind of gains that's coming in here. But clearly that run-up that has come in on a Reliance Industries, which is at the day's highest levels today. So there is buying that has come in at lower levels on a Reliance Industries, as Parag Bhai was mentioning. And a lot of stock-specific action in the broader markets is what you're seeing.
Absolutely. So on a day when banks are largely sitting it out, IT is largely sitting it out, you're still seeing strength. Look at the broader markets as well, and we'll pull up the intraday of the advanced decline too to give you a sense. The Nifty mid-cap 150, about 1.5% up, showing even more strength, about 2% up on the Nifty small cap 250. The advanced decline through the day, the line graph will show you how the strength is there with the buyers. The bulls are in charge and firmly in charge. The sectoral heat map very quickly will give you a picture of what's working in. It's pharma that has been dominating through the day. There you have 3% up on the Nifty pharma and a full green screen.
And you know, in spite of the negatives in terms of bank Nifty as well, you're seeing there's nothing which is actually drooling under pressure. And this is coming in after 3 consecutive sessions of losses. So I think there is momentum. The question, Tamanna, from here on is going to be, it is a truncated week. For how many days do we see this, and what do volumes tell you? Because by the end of, say, Wednesday or Thursday, you will see volumes that might just come off.
Okay. All right. Even as we're speaking, UltraTech numbers are out, and we'll get you that first cut very quickly. There's a dividend of 240 rupees per share on UltraTech Cement. Better than estimates on the net profit figure, 2,983 versus an estimate of 2,818. Revenues have come in tad lower than estimates as well. So we'll just give you the intraday also, but there you have it, net profit at 2,983 versus estimates of 2,818. This is the other big one that the street was watching out for, isn't it?
Yeah, another big one. So I think the top line is still okay because this will be basis what the pricing is. Because after the numbers is now when they've started taking price hikes as well that we've been talking about. So the commentary from here on for cement companies is going to be important. But categorically, when you're seeing the profit number, which is a tad above estimates, that is one of the positives that you should be watching out for. Apart from that, you're talking of a dividend of almost 240 rupees per share. Let's just look at what the EBITDA and the EBITDA margins are looking at, because a 20% growth in terms of profitability sets the stage as well with regards to how the sector as a whole has performed. If you pull up even a 1-month chart of UltraTech Cement, that will kind of tell you what's the story here. If you could just have an intraday 1-month chart, because a lot has been spoken about cement companies. There you go. Already an up move of 10 to 11% that has come in the last 1 month. So I think the kind of numbers that we were expecting is slightly priced in, and that's what is evident in terms of your today's chart as well, because you're not seeing a major spike that's coming in. There's no major move that's coming in because of that 10% run up. And I think commentary with regards to the first quarter of FY27 will be important now, because monsoon will be taken into consideration. Quantum of price hike and the absorption of price hike is the key.
Okay, so UltraTech Cement there. Let's just recap for you what's happening in markets if we can, and how they fared in trade today. And you know, that's really where the story is, right? About 1% up on the Nifty 50, even as strength continues. Let me go across to Nagaraj Shetty first and get his technical view. He is joining us on the show this afternoon. Nagaraj, how are you looking at the Nifty?
Hi, good afternoon, Tamanna. Yes, Nifty has bounced back very well from the lower levels. That looks like the market remains strong. There was some jitteriness from the higher levels. There was some correction, and market seems to have formed a higher bottom somewhere around 23,800 levels. I think I'm expecting market is gaining strength, and more upside is likely from here onwards. And 24,600, what I'm looking for the Nifty in the next short term.
And what about picks this afternoon, Nagraj?
Yeah, I have two picks from the mid-cap segment. First is one from a railway side. RVNL has been in a moving consolidation phase after a sharp up move. The overall chart pattern is looking bullish flat pattern and likely to break above the 310 levels in the very soon. The overall chart pattern is positive. One can look to buy at this point of time 308.18. Immediate target would be around 325. One can place a stop loss at 300. Second one is Unominda. The stock price has witnessed a gradual bounce back from the lower level after the downward correction moved up again, currently placed at the edge of moving above 200 EMA. On the weekly chart, upside breakout of the downsloping trend line is intact. With overall bullish chart pattern, I'm expecting this to move up. One can buy Unominda currently around 1132 levels. Immediate target would be around 1180. One can place a stop loss at 1105.
Okay. Very quickly, Nagraj, how are you looking at UltraTech Cement? The numbers have just come in.
Yeah, looking very positive after a decline of last session, bounced back very well of post result. I think the cement sector is looking positive. I think this UltraTech Cement to move forwards from here onwards. 12,400 is going to be the next hurdle to be watched in the short term.
Nagraj, stay with us. We have Puneet who tracks the space closely to give us the first cut. Puneet, in terms of the numbers, if you have to look at the top 4 numbers along with the EBITDA per ton, what does that actually tell you?
Well, thank you for that. It's definitely a number that's coming in line with estimate on most parameters. Revenue, EBITDA margins, as well as profit. All 4 numbers in line with estimates. We are working with a number of 25,800 crores in terms of revenue, bang in line with that number as well. The margins have actually done better in this quarter at 21.1 versus estimates of 20.4. It's a 70 basis point increase basically compared to the estimates as well, and almost 110 basis points on a YY basis. So despite what we've spoken about, petcoke pricing being high, packaging costs being high, the company has been able to manage at least all of those key factors in quarter 4. Now, some commentary will be needed in quarter 1 as to what happens with those key aspects, but the profit number as well, bang in line with the estimates that we are working with. Even also in the operating profit per ton, essentially it's coming at 1,253 rupees per ton. That's 11% ahead of the same time last year number. And this also, in terms of first cut, it's a big number beat that they've done in this particular quarter as well. They've also announced a big dividend of 240 rupees per share for this year, for FY26 specifically. So that's another key aspect. Final thing, what will be something to watch out for has been the fact that on a consolidated profit basis, they've crossed 8,000 crores for the first time in FY26. So all those factors are pointing to a strong results, but commentary will be crucial for the company at this point of time in terms of quarter 1 impact because of raw materials.
Okay, thank you for that, Puneet. So, in some senses, the fact that a good set of numbers was expected is making sure that the response is a little muted to UltraTech because it's in line, neither here nor there. Nagraj, I'm going to do a quick rapid fire with you because there's so many stocks that we need to cover this afternoon, right? It's been a newsy day. Let's start with Cohance Life Sciences, Paytm, Sun Pharma, RIL. And I will repeat it for you if you lose track of all 4, but Cohance is the first one.
Cohance is moved up very well. Chart pattern is looking very positive. I think more upside is likely towards 475, 480, which is the next hurdle in the next 1 month.
And what about Sun Pharma?
In pharma phase, Sun Pharma is looking very strong today. Bounced back very well from the lower levels. More upside is likely towards 1825, which is the next resistance at least in the next couple of weeks.
Are you liking RIL and Paytm?
Reliance is the one which is statically looking positive, bottomed out somewhere around 1260, 1270, bounce back. Overall chart pattern is looking positive. More upside is likely in the near term. 1400 is going to be the next hurdle to be watched at least in the next couple of weeks.
Okay, and Paytm was the fourth one, Nagraj.
Paytm is looking weak on the charts. I'm not expecting that to bounce back very well at this point of time.
Okay, all right, stay on with us. We're tracking all the news here this afternoon on NDTV Profit and India Market Close. Varun Beverages has a management call after their Q4 earnings. Let's listen in.
And other approvals. Across Africa, we continue to build scale in snacks and deepen our presence in high potential markets. In line with our strategy of broadening the portfolio and strengthening consumer relevance. In accordance with our dividend policy, the Board of Directors has approved an interim dividend of 25% of face value, rupees 0.50 per share, resulting in a total cash outflow of approximately 1,691 million. Looking ahead, we remain confident in the long-term opportunity across our markets, supported by favorable demographics, rising income, growing urbanization, and increasing beverage consumption. With adequate capacities, a diversified portfolio, and a strong distribution network, we are all well positioned to deliver sustained growth and create long-term value for all our stakeholders. I would like to invite Mr. Gandhi to share the key highlights of our operational and financial performances. Thank you very much.
Thank you, Mr. Chairman. Good afternoon and a warm welcome to everyone joining us today. Let me provide an overview of the financial performance for the first quarter ended 31st March 2026. Revenue from operations net of excise and GST increased by 18.1% year-on-year to the level of 65,741 million in CY 2026. Consolidated sales volume grew by 16.3% year-on-year to the level of 363.4 million cases as compared to 312.4 million cases in Q1 CY 2025. This growth was supported by strong volume growth of 14.4% in India and 21.4% in international territory. At the consolidated level, net realization per case improved by 1.6% year-on-year, supported by improved realizations in international territories primarily due to favorable currency movement. In India, realization per case declined by marginal 1.5%, primarily due to volume growth initiatives such as upsizing of packs and selected price point launches in targeting markets to onboard new consumers. CSD constituted 73.6% of total volumes, while non-carbonated beverages and packaged drinking water contributed 7.5% and 18.9% respectively. In line with our focus on healthier offerings, the mix of low sugar and no sugar products increased to the level of 63% approximately of consolidated sales volume during the quarter. Gross margins improved by 62 basis points to 55.2%, supported by early stocking of key raw materials despite an inflationary input environment. EBITDA increased by 21% year-on-year to the level of 15,289.3 million, with EBITDA margins improving by 55 basis points to 23.3%. In India, EBITDA margins improved by 112 basis points, supported by operational efficiencies from strong volume growth and improved gross margins. PAT increased by 20.1% year-on-year to the level of 8,787 million, driven by strong volume growth across both India and international markets. Depreciation increased by 30.9% on account of commissioning of 4 new plants last year in Buxar, Prayagraj, Damtal and Meghalaya. Finance cost increased by 18% primarily on account of the acquisition of Twiza in South Africa, while income on surplus cash in India has been accounted for under other income. During the quarter, we completed the acquisition of Twiza in South Africa, Bevco, at an enterprise value of ZAR 2,053 million. In addition, Bevco entered into a share purchase agreement for the acquisition of Crickley Dairy Proprietary Limited at an enterprise value of approximately ZAR 238 million, including net working capital subject to regulatory approvals. These transactions further strengthen our presence in the region and support our portfolio expansion in adjacent categories. Overall, we continue to maintain a strong financial position supported by disciplined capital allocation, efficient working capital management and a robust balance sheet. With the capacities commissioned over the past year, backward integration initiatives and a strengthened distribution infrastructure, we are well positioned to support growth and drive profitability through improved operating leverage across markets. Despite the inflationary environment arising from the prevailing geopolitical situation, we remain confident in our ability to mitigate near-term challenges through focused execution and supply.
Good set of numbers from Varun Beverages. That was the management speaking. We thought we'll get you a sneak peek of what they're saying. It's an analyst con call that's on right now, about 4% up on the stock. Anyway, with summer factors, you expect demand to go up as well. Nagraj Shetty of HDFC Securities with us, giving us his perspective on the charts. Are you liking Varun Beverages right now, Nagraj?
Yes, certainly looking good. What we have seen on the last 1 month is continuous moving up from 380 to almost 510 levels. The phenomenal move without showing any reasonable downward correction currently places at the edge of moving above the previous swing highs, important hurdle somewhere around 510 to 515. Once it breaks above that level, and I'm expecting this to reach towards 560, 565, which is going to be the next set of hurdle in the near term.
Okay, so that's with regards to Varun Beverages, but let's shift focus to Cohance Life Science. That's the stock of the day as well, and I'm sure everyone knows for obvious reasons with the way the stock has been moving, locked in upper circuit. But let's quickly understand what has actually happened. The company has gone ahead and appointed Umang Vohra as the chairman and group CEO. Now, Vohra will actually take charge. There you go. That's Umang Vohra, who's been appointed as chairman and group CEO. He will actually go ahead and take charge from the 1st of May 2026 as executive chairman. That's the first one. And secondly, if you talk about he being the group CEO, that will be effective the 20th of May 2026. Now, the question is, why have the markets actually reacted positively to this? First up, Umang Vohra has been regarded as one of the most experienced leaders in Indian pharmaceutical industry. And if you talk about his experience, that spans over 3 decades in pharmaceutical as a sector. In addition to that, he served as the CEO and MD of Cipla and actually led Cipla's change over the past decade. The 10 years that he spent at Cipla, you know, he's actually made sure that the EBITDA has also doubled. So you know the kind of operational efficiency he got to the table. He's actually made Cipla a diversified global pharma enterprise, and this is from being a Indian-based company, and he strategically repositioned the company from a volume to a value-driven company in 10 years. So that's the transformation that he's brought to the table. Before that, in fact, he also worked with Dr. Reddy's for a span of nearly 14 years. So that's the experience that he gets to the table. Now, why is he a strategic fit for Cohance? First up, he will be able to scale with discipline because he has the proven ability to grow globally amid protecting the margins as well. And that's what we've seen what he's done with Cipla. Secondly, the CDMO mindset is very clear because this will be a shift from volume manufacturing to value partnerships from here on. So it is going to be a customer-centric approach that he could bring to the table. And there is institution building that he will bring, where he supports transition to professional, governance-led growth for a Cohance Life Science as well. Very lastly, if you have to see in terms of other factors, the capital market credibility that he gets, because the record, he has enhanced investor confidence and got strategic clarity, and we've seen the way the Cipla stock price has also moved in the past 10 years. Very lastly, if you see in terms of where capital market credibility goes, is the key focus area over here. Stock locked in upper circuit of 20%. So from here on, the impact it could have for the industry as a whole is also very interesting, because Tamanna, if you see a Blue Jet, which also operates in the same field as Cohance, is seeing some bit of a impact there, because that stock is also seeing some smart moves.
Yeah, I mean, Blue Jet really, I don't know why Blue Jet is participating in this rally. Just maybe from the point of view that the whole space will get a lift going forward. But our focus on Dynamatic at this point, one of its subsidiaries, Dyna Systems, has signed an MOU with Aerodata AG. That's a German aviation player. We're speaking with Dynamatic Tech in just a minute. That stock is up 7% today. But I'm going across to Parth first to set up that conversation. Tell us about this deal, Parth.
Sure. So Dynaton Systems, which is a deep tech subsidiary of Dynamatic Technologies, they have signed an MOU with Aerodata AG, which is a German aviation player. Now, as per this MOU, both companies will collaborate to develop airborne surveillance systems for India. Aerodata already has a platform called Aeroforce X, which combines high payload capacity with the maximum endurance, that is up to 40 hours. So this Aeroforce X is actually the heart of this MOU, which has been signed between the two companies. Now both the companies will collaborate to design and develop this Aeroforce X for specifically for the Indian market, and this will suit the long duration and the demanding ISR missions that happen in India over both land and sea. So it will be interesting to watch how this MOU pans out for Dynamatic Technologies going forward, how much revenues it brings to the table, and how much it impacts their margins and profitability going forward. Back to you.
Okay. Udayant Malhotra, CEO and MD at Dynamatic Technologies, joining us on the show. Ms. Malhotra, thank you so much for your time to us. Tell us first about this collaboration, this MOU you have with aerospace. What does it add to you strategically?
Okay, so firstly, Dynamatic Technologies, as you are aware, has been a pioneer in India's aviation aerospace manufacturing. I'm actually sitting at our UK facility, which co-produces some of the products that we produce in Bangalore. Now, what we've done is in Bangalore, we have a deep tech startup called Dynaton. Over the last 36 months, we've developed not just UAVs, but all the technologies required in terms of the aircraft design, the composite manufacturing, the day cameras, the night cameras, the computer systems, the software. We have over 5 million lines of code. We have all the image processing, including a small supercomputer that sits on top of the cameras that are our design. The optronics is all internal. And then that adds up to a series of birds, of UAVs. At the center of it is the Cheel, which is a 100-kilogram class surveillance platform that flies for 8 hours. We have the Katils that are weaponized loitering munitions, jet-powered, which are controlled and with targeting data from the Cheel. And then we have smaller oversight drones like the Patang and Kawa. Now, with that very detailed end-to-end knowledge, including ground satellite data terminals, we looked at the larger configuration. Our design is parametric, so we can take the Cheel and develop a super Cheel, but that would give us an envelope of a 2-ton class bird, which would fly for about 24 hours at 30,000 feet. We've been talking to one of the world's best mission software companies, which is Aerodata. It's a spin-off from Braunschweig University 40 years ago, set up by 2 professors. And they've actually got something very interesting. They have a twin-engine aircraft which is designed for testing a new generation of aero engines for some of the very large aircraft engine manufacturers using hydrogen. So that's what we are now going to be. We are bringing that and our capability, their capabilities, and we are co-developing. So it's an R&D program which will rapidly have a 4.85 ton class bird.
Okay. Okay, so first of all, very interesting to hear the names of all of these products, Kawwa, Cheel, all of these
registered trademarks.
Registered trademarks that you've given. Just want to understand a few details about the MOU. When is this turning into actual orders? What is the potential revenue opportunity? What is the financial conversation between the two sides when you're saying that they're providing R&D?
Right. So it's a collaborative effort. It's not like a typical, most organizations in India tend to bring in a product or products from the ground up. So if you look at this plant where I'm sitting in, it's a UK plant of dynamic rigging and stuff. So we have that footprint of ours. We also work with our global rigging and stuff. So we have that footprint of ours. We also work with our global. So we are a single source supplier to Airbus, Boeing, Bell Helicopter, Dassault. So what we are doing here is instead of being a tier one, you've gone up to become a pro. So what we are doing here is instead of being a tier one, you've gone up to become a platform manufacturer and OEM. As I mentioned, we've developed a whole system of autonomous systems for our global market with India as our home market. Now, with this new arrangement, this new partnership with Aerodata, we're looking at a 5-ton bird that can fly at 30,000 feet.
You mentioned the 5-ton bird. I just want to understand, are you paying them? Are they paying you? What is the revenue potential of this?
We are both going to pool in our resources, which is already, both of us have already invested in the core technologies that are required for this.
What is the size? What is the size of that investment? I'm sorry, we're speaking to a cohort right now, who are your investors, so they need the numbers, sir, as exciting as the idea is.
Our investors are fully aware of what we've invested because that investment is in our.
Your retail investors are watching us, sir, who are buying your stock. We're speaking for them. So if you can just give us an idea of the revenue opportunity you see.
Okay, let me give you a straight, simple. There's a global requirement for very large persistent drones. In India, we have a requirement for 87 male class birds. That 87 male class birds will have a buy value of about 25,000 crores. That's the Indian requirement. There are 2 or 3 players in the world that can offer that product. We will be the third player. And ours will be a product where we own the source code, where we own all the data files. We have the design. We have absolute sovereignty over the knowledge. So this system can be weaponized in future with boundary conditions.
So in the next 3 years, what's the revenue that you're targeting out of this partnership, number one? And number two, if you're going to be the third wheel, what's the market share that you will get?
There are 2, 3 big players in the world. Some of them won't be, there's 2 players in the United States. There's 1 player in Israel. There's 1 player in China. So the Chinese player probably won't be available to India. If you look at General Atomics, they're already offering their aircraft in India. You have Herons from Israel, which are sub this class, already flying in India. And so there's a requirement for a large persistent bird. We will be offering, and that, as I said, the opportunity is a 25,000 crore business opportunity. But here there's a big difference. The source code, the knowledge, the data, and the design will be Indian owned. That's the big difference.
Fantastic. Just one more aspect. The products that you will develop with this technology partner in this MOU are focused for the Indian defense ecosystem, one assumes. Is there any visibility of demand for that product or for that set of products from the Indian defense ecosystem and from the Indian government?
So the RFI was already out. We're part of the limited RFI that's there. That's RFQ is expected very soon. It'll be for 87 such platforms, 87 birds, UAVs, and the value. These are very valuable, expensive aircraft. The government budget is 25,000 crores.
That's the potential that we see. Thank you. This is exciting. This is exciting, Dr. Malhotra. Thank you for taking.
This opens up a global market. Yeah.
Okay, a global market. One sec. But then, can you, if this is sensitive data that is available and technology that is available, can you actually service a global market with this?
All the products that I named earlier, the Cheel, the Katil, the Patang, and the Kawa, and this new bird, we have ownership of IP. Okay. So there is no limitation on markets so we can go beyond the Indian market.
Okay, that's exciting to know. Thank you so much, Mr.
Thank you very much
for speaking with us today. For more, Sumit, what's on your platter?
Be quiet. Multiple stocks that dealers have highlighted. Firstly, it's Kotak. Multiple stocks that dealers have highlighted. Firstly, it's Kotak Mahindra Bank. Now, what dealers are indicating is that there are buy flows on the large HNI desk on this counter. Or for Kotak Mahindra Bank specifically. For NTPC and Walters, there are buy flows on institutional desk. Both foreign and domestic institutions have been accumulating both these counters in trade, and delivery volumes are expected to be on the higher side. A small cash stock that dealers have highlighted in trade from long-term perspective, so keep an eye out for FX Industries. And lastly, when it comes to Laurus Labs and Britannia, there are sell flows on the PMS desk. Dealers expect Q4 numbers could be on the weaker side. Laurus is trading higher in trade, but there are sell flows that are coming in on the PMS desk at higher levels.
Segment you should not miss, but we're talking about India's peak power demand, which has surged to an all-time high of 256 gigawatts on Saturday as intense heat waves were felt across the northwest. 56 gigawatts on Saturday as intense heat waves were felt across the northwest. Is the power sector ready to meet the surging demand? Rupesh Sankhe, Senior Vice President Research at Elara Capital. Is the power sector ready to meet the surging demand? Rupesh Sankhe, Senior Vice President Research at Elara Capital, joins us now. Rupesh, very good afternoon to you. Where is the opportunity with the kind of heat waves we're seeing? Because this will likely continue. I don't think power demand is going to crash anytime soon. Can only stay steady here or maybe even go higher.
No, definitely, I think FY27 we are expecting strong power demand led by industrial, residential, agri demand will be significantly higher in this year. So definitely we'll hit all-time peak high in FY27. In 24 May, we saw close to 250 gigawatt of peak demand, but in the last 2 years, we have seen close to 90 gigawatt of capacity addition has happened. So we have close to 20 gigawatt of incremental supply to cater this kind of a demand. So I guess is that my understanding is that 275, 280 gigawatt kind of a peak demand we can easily manage. We have surplus capacity available. Coal situation is better. So, but definitely the trend is very positive because in the last 2 years we have seen few companies which are 8 to 10% of their capacities are dependent on the merchant market. The regulated players got impacted because of ancillary incentive income was down. Then volumes was slightly lower on the exchange. So, and the coal also e-auction got impacted price. So definitely the key players like Adani Power, who has a 10% of their market in the short term, JSW Energy, NTPC, Tata Power, all stands to get benefit out of this. At the same time, we can see better volumes for PTC India, IX, because a lot of exchange volume will be there. At the same time, Coal India might get benefit of a better e-auction realization. So definitely, next 3-4 years, we can expect this kind of momentum to continue because of the demand drivers which are there in place. And most of these conventional players are adding capacities. Better capital allocation is there because they are generating strong operating cash flows. And in the last 2 years, we have seen their valuation have come down. But in the last 3-4 months, there is a 15-20% gain that we have seen. But valuations are reasonable, and we can expect a better re-rating and again some upside still there on the card.
So Rupesh, are you saying good afternoon, Hirale? Are you saying one, valuations are in the favor of investors? Two, in spite of the stocks that have run up in the past couple of trading sessions, there is still value that could emerge if they are buying at current levels. If yes, which would your top 3 picks be?
Yeah, definitely. Say, if you look at the NTPC valuation is now close to 2 times price to book value. But historically, in 2005, 2010, we have seen 3x kind of a price to book value multiple. And the next 10-15 years is a strong high capex, multi-years capex story for power sector. And these companies are greater capital allocation is there toward the green transition phase on the energy, renewable energy side and nuclear side. So we will bet on NTPC in the large cap space. We are also positive on Tata Power because they have got very good presence in entire renewable energy value chain, and multiple is reasonable. They have a debt equity ratio of close to 1.1, so they have a scope to leverage their balance sheet for higher growth. And in the mid cap space, we'll prefer NLC India and CAC. At the same time, we'll have some positive, marginally positive on the Coal India. As well as companies like NHPC and NHJVN is likely to better. At the same time, PFC REC will continue to get the funding opportunities which are there for next 10 to 15 years. And NPA issues are going down. Discom financials are improving, and those companies are trading at a very, very reasonable valuation.
Okay. Thank you so much, Rupesh, for speaking with us. And definitely that's one space to watch. Siddharth Khemka joining us this afternoon. He's Head of Research Wealth Management at Motilal Oswal Financial Services. Siddharth, very good afternoon to you. And the summers are scorching. The markets are not quite scorching, but I would say definitely better than expected. And
Good afternoon, so Tamanna. I think yes, in this global turmoil, a lot of focus is there in the quarterly result season, and we have seen that numbers are driving stock-specific action. And more importantly, if you look at the commentaries, wherever there has been a positive or supportive commentary, stocks have seen kind of the follow-up buying that we are seeing in some of these stocks. So I think clearly, if you look at the market in the last couple of days, clearly the broader market is participating much sharply compared to the benchmark indices, and that is largely to do with what the broader market results are doing compared to the larger ones, which are more globally tuned and more sentiment driven, given the higher stakes of FIs, which have been on the negative side for last couple of months.
You know, I'm wondering how you're looking at the bounce that we've seen in IT, Siddharth. Is there any reason, apart from, I would say, sectoral allocation or the fact that it's been beaten down so much, for the Nifty IT to show a 2.5% uptick today?
I think, Tamanna, it's purely, I think, some sharp, we can say a bounce after the sharp fall we had seen last week, post the disappointment that came in from HCL Tech and Infosys. Tech Mahindra was largely in line, but that did not stop the IT companies falling sharply, and especially the IT index that had witnessed a significant sell-off. I think it's a marginal pause, but clearly the view, at least in the near term, that remains a bit negative given that there is still a lot of macro-related headwinds for the entire sector. The AI-led disruption that is definitely impacting the sector, as well as the margins that are not witnessing any improvement. The only, I would say, the saving grace is your valuations have become comfortable, and the order book that is the order book pipeline as that is pretty strong. The only thing that now this order needs to convert into revenues, which I think is taking some time, especially in some of these sectors which are the US Europe focus. For example, telecom as a space is witnessing a significant drag, and that is impacting a lot of these companies. BFSI is also not recovering to the extent that would have helped the Indian IT services.
Okay, so that stay with us. We're taking a very short break, but we're adding to the conversation Gurmeet Chadda of Complete Circle on the other side with us. So will we be speaking to Rudramurthy BV of Vachna Investment. So you're going to get a lot of views on the other side of the break in what is turning out to be quite an interesting closing session. Don't go away.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
All right, welcome back. It's a marvelous Monday, I would say, because look at the kind of boost that you're seeing in markets right now. The Nifty comfortably above the 24,000 mark, not yet staying at 24,100. But Rudramurthy BV joining us in this leg of the conversation. Siddharth Khemka with us, as is Gurmeet Chadda. Rudra, I'm going to get a quick technical view from you first on the Nifty and the Bank Nifty.
See, good afternoon, Tamanna. For me, market is trading in an inside day. If you see the range what we had on Friday for Nifty, today both the high and low are within the Friday